you got a cold in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Friday to you both.
Hello.
Good morning.
How is everybody this morning?
Fantastic. How are you?
Doing wonderful, doing wonderful. You've got your Christmas attire on again. You're looking fabulous, like a cute little package. Not gonna work? Not today? Not this
Nope,
morning?
thank you. Yes, it's another cat Christmas sweater. Wait, don't give me the womp 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 on that.
No, I think that was for my dad. That was a womp womp for me.
Oh, okay.
Everything's for me. Everything's for me.
Yeah.
Do you wrap your packages, or do you go the way of the bag now? The bag is a pretty. I mean, like, there's really no excuse not to have something festive on your present that you're giving out.
You're a dude. I like to wrap presents, and I like to wrap them elaborately.
Nick,
what about you? I see you as a bag person.
Much more of a bag person. I mean, the functionality of it is just way better. I don't have to look like a child put together the wrapping in art class. So I
gotta ask one more question then. Do you reuse your bags?
Yes, my mom does. She saves them. We save them till next year.
Oh, that's good. I can't say that I do. No.
Yeah, my wife will run around the room, ruining the beautiful unwrapping and wrapping of the presents and the bags, and going, "Ooh, we got to save that bag. Ooh, we got to save that bag," and then stick it someplace where it will annoy me, like, somewhere near my stuff, not in her closet, or not in like a closet in the house. It'll be something where, like, near my tools.
I'm sorry, do you think this is a couples counseling session? Like, what? What is this boomer rant about your wife?
Well, the fact of the matter was, my wife and I really don't exchange Christmas presents because it's Christmas every year for us. And, but
yes, it's so merry all year long.
Right. It's so merry all year long. And we do a lot for each other all year long. Blessed, whatever you want to say. Thank you so very much for everything. Got a lot more than I ever deserved. But, every day is Christmas. That was one thing Tom was right about. Every day is Christmas here in the household. But I wanted to wrap my presents, and she's like, "Don't do that, because it's embarrassing. I don't want, presents under the tree and all the other stuff like that." So I went to go get a bag, and that's what started this whole rant.
Wait, she didn't want presents under the tree? I don't understand.
Well, she doesn't want I got her, multiple presents, and she doesn't want to unwrap presents in front of the kids and everybody else. Leave it for the kids. You know what I mean? Like, and that doesn't want it to be about her and I, that kind of thing. When you become a parent, Vanetta, you'll realize that your whole life just evolves around your children, even if they're pushing 40. It doesn't matter.
you had an opportunity to say that they were naughty presents, and you didn't want the kids to see them, and I'm glad you didn't. I'm glad you spared us that.
Lubriderm. Very good. Very good. Very good, by the way. Public service announcement.
Oh, my
anyway. Oh, John, you know what it is. Interesting. So I went to go grab a bag, and I wasn't worthy for that reused bag that we have. So she gave me, like, basically a couple of bags that I wouldn't put presents in if I was giving them to the homeless. I mean, they were just like 5-year-old bags. So I wanted the nice bag. So that's what the bag rant came out. So I went out and bought my own bags.
I was going to say, you have free will and a credit card, my guy.
I still carry cash too. I mean,
but I'm surprised you haven't figured out the difference between the good and the bad bags, because that's a very common thing. I mean, like, there is a set of, like, the nice bags that you don't even touch. You never use them either, because you'll never get anything that's nice enough to put in those bags. So they just, like, kind of. I have a set of them.
Do you? Okay.
Yeah. They're the good ones.
It was like my friend Mark's couch in his living room that had the plastic on it. That was the company.
Yeah.
Your friends are not allowed to sit on the couch. Don't go in that living room with the plastic on it. See, those were the rules we had, and that's why we were good kids. And you kids, weren't as good as we were.
Here it comes. It's rant number 2.
Because we had rules. Like we
Yes.
knew
All right, I'm gonna just.
if the gate was up in the living room, and yes, we had gates on living rooms. If the gate was up in the living room, you didn't go in there. That was for company. That was not for the family or you, especially.
Yes. It's hard enough to put the seat down, let alone,
Right. You guys come, you take your shoes off, you put your feet on the couch.
Yeah.
You do whatever you want to do. You got no rules.
Of course. The law, you've really enacted these laws in the Batista household. You've really put this into the new generation.
We have to bring back the second living room that never gets used. That's what we have to do to save America.
How can I put drugs in your eggnog? Are you okay?
I love eggnog, by the way, but I haven't had it in decades. But as a kid, I loved eggnog, and it showed.
You have been ranting for 6 minutes.
It was quite a night last night. With the bags kind of ruined the whole Christmas spirit for me. Yeah.
You were crashing out so hard.
It's Friday, man. What do you want from me?
It'll be okay. I promise. I promise.
Oh, well. So are you all done with your Christmas shopping, Nick? You all good?
No.
Not.
I'm going to be with the Johnny Public this weekend.
Oof.
At least it'll be warm.
That is, that's true. But
warmer, yeah.
Yeah, it'll be tough. I don't know. I think I might go out to Old Orchard or something.
I was like, where are you going? Because Old Orchard, that's like ground zero because they have the most concentration of places right.
It's gonna be mayhem. I was there the other weekend. It was mayhem. I know it's gonna be mayhem this weekend, but that's what happens when you wait.
Challenge.
Yeah,
like Christmas snuck up on you.
Yeah. I'll make a day out of it, though. I'll go to Sark's and get breakfast, do my shopping.
Maybe I'll have dinner at EJ's.
That's right. I could go to EJ's. I'll meet you at EJ's, Dad.
If you stay long enough, you can. Yeah. Sure.
So, but then it's Bears game. I got to be back for the Bears game.
Yeah, they flexed into it. So Bears are going to play the Packers at 7:00 on Saturday night. So that's going to mess up a lot of people's plans because they will not realize there's also a Bears game.
Yeah.
Oh, God, that'll make my drive home even more enjoyable. I'll have lots of time to sit and think about the presents that I purchased.
Who won the game last night?
Was it the Rams and Seattle?
Seahawks.
Yeah, I think it was the first 11-win Thursday night game.
What?
So both teams had 11 wins.
Seahawks won. Okay.
Yes. But it was essentially the best game that's ever been on a Thursday night.
And it proved up to it was like a 1-point game or something, right? That Seattle out, I think, like an overtime.
Yeah, they won it in overtime.
Did they go for 2 to win? Is that how they won? I didn't watch the game.
I didn't watch it's very sad. It's very sad. I've turned into an old man now. I went to sleep as we were going into overtime. It's really sad.
I don't blame you. I'm looking at it right now. I just put it up there, and it looks like in overtime, the Rams must have scored first because they got 7 points time, and then Seattle got 8 points. So they must have gone for 2.
Yes.
Imagine what a crazy game that would have been.
Yes. It ended up being
wasn't Seattle down for a while? I think they were
19 points, I think, was the biggest lead of the game. Came back and won it.
Wow, very nice.
Yeah, big game. So.
Very nice.
It's getting interesting. There's not a clear, divisional leader or someone that looks like they're gonna just run the table. So that's exciting.
Yeah, for sure.
Got it.
Sure. No. Now all I gotta do is start watching it. So I can benefit from it.
Well, yeah, they're gonna have the Christmas Day games on Netflix again. So you got to have all these services, but if you have them, you watch some football on Christmas. It's taken the crown from basketball. Basketball used to be, Christmas used to be the NBA's time, but no more.
Well, now that all basketball's fixed, they're not so sure. You know what I mean?
Everything's fixed now. Yeah.
I know. Hey, my peeps are telling you, Nordstrom Rack is right across the street from Old Orchard. You can meet Tom for breakfast if you want to.
Oh yeah, is he doing some shopping there?
I'm sure he'll be at the rack. That's what he does these days now. I mean, he just meanders around Nordstrom Rack.
I feel like that's way outside his shuffle zone, though. I don't know. Well, it's right next to EJ's, so that actually could be where he would be
There you
on
go.
a Saturday.
Check him out. Check him out. You might find him. Be careful. Bring like treats or something like that so keep his attention going.
Bring treats.
Yeah,
Pistachios.
something for him.
So, Bat, are you gonna do like the 7 fishes, the feast of the 7 fish? Like, what do you do for Christmas dinner? Because you don't like turkey.
No, obviously I'm not, because that would have been something we would have prepared for. So no, we're not doing it. I'm not. How do you say it? I'm not honoring my parents' upbringing and their traditions.
Your ancestry.
Ancestry. It's dying with me. I tried to hold the torch for a long time. I've never been good at the 7 fishes. I'll admit it now. I was never been good at the 7 fishes. I'm not attempting it anymore. Nobody appreciates it more than anything else. That's why I really.
I mean, that is a lot of seafood.
It's a lot of seafood. I'll go to my buddy the Napolitanos if I want to. They do it in their garage, like old school Italian. Like they do it in their garage and do it all up real good. Grandma's cooking and mom's cooking, and I'll go to their house. I gotta go to Norwich to do it, but maybe I'll make a trip over there and see it. But no, we are completely Americanized, or Americans, as the old Italians used to call us. We are completely Americans. I have ordered from Tony's not Finer Foods, Tony's Finer Deli in Norwich. Which is a great little Italian area, great little Italian delicatessen there. I've got their lasagna coming, completely ordered everything. Their lasagna coming. I got their meatballs coming. I got their sausage coming. My wife, being of Swedish and other mixed up descents that make her very white and blonde hair and blue eyes, we got turkey. We got ham coming, some sides coming, completely ordered.
That's
everything.
A lot of food.
A lot of food. There's 8 of us that will be there.
We got a crew of good eaters, though.
We do have good eaters.
This should be a good
hot plates this year. So come as you want, go as you will. Remember, if you are invited to sleep over, we're just being nice. We don't want you to sleep over. It's just, if you've drank too much, then you'll have to sleep over. But if you haven't drank too much, and we say, would you like to sleep over? I even have pajamas for you. We're bullshitting. We don't want you there. We want you to go home.
Are you okay? I'm so worried.
Truth comes out as you get older. I watched my father-in-law spit out whatever came into his mind as he got older, and it was so good. I mean, one of the last things he said to his, one of his dying family members was like, "I really never liked you anyway," which was a beautiful thing because nobody really ever liked him, but nobody could really say it. And the guy was like, "Well, I understand that. I was kind of mean," and he's like, "You were," and it was a beautiful moment. I mean, it was a beautiful moment. So I hope I have that as I get older.
Okay. Wow.
Son, I want to go on record right now, so maybe as I get older and I say the truth, you don't really realize it. You've overperformed. You've meet or exceeded all my expectations. If I say anything as I get older, I'm just senile.
Thank you. I appreciate that. I will keep that in mind.
You're welcome.
Yes.
You're welcome.
Yes.
Vanetta, not so sure about you.
That's fine.
Yeah.
Merry Christmas, everybody. Merry Christmas. And no, I have not had anything to drink, but I have been enjoying my martinis at night.
I am exhausted already.
Let's get into it.
Well, we got a great show for you today. Whatever's happening. A lot of good content headed your way on this fantastic Friday here at Tasty Live as we try to wind out the end of the year at the top of the 8 o'clock hour. We have Jamal in the house for the week in stocks, really doing a look back at the 12 best charts from this week in stocks. He's taking everything that he's brought you for all of the Fridays that he was here for 2025, and he's going to do a look back, a best of, if you will. So I love that for Jamal. That's going to be at 8 o'clock. Then at 8:40, it is hashtag Fan Friday, so that means it's fast market, getting down here to the wire, but these are viewer submitted trades that the bats are going to do, trying to just put on as many trades as possible as volatility has abandoned us, as we just pray for a Santa rally, but we're going to see what we can get into. And then 9 o'clock for market measures. Part 2, wrapping up the past 5 days of the trading email series. It's not a super catchy title, you guys.
You said we're praying for a Santa rally. I mean, we're right at 68.33. I mean, 68.50 has been where we've been most of the week, up or down either side of that. I know we've had good movement in between that, but we're just we're a day off of all-time highs, maybe 2 days off of all-time highs. I mean, it's been a good year for the bulls.
Are you saying we're only a day away? I'm sorry.
Yes.
Where are my Annie fans at? No? Okay.
But
Then
you could throw 7,000 out. We're not getting there this year. It doesn't seem like it.
Oh,
Well, never say never. We got live from the trade desk. We got Quentin in the house, counting down all the top trending tickers over at tastytrade, and that is going to round out the show for the week. So you guys want your daily dose?
Sure.
All right, hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news. Coming across the wire. Our leading story. Top story. Just in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today's a fantastic Friday. It's December the 19th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Every day continues to be a new and exciting journey. Just like, okay, well, this is information that's never happened before. So President Trump yesterday just felt like declaring Christmas Eve a federal holiday. And so, no, those are just the facts. Like, I went to run some errands. I came back and I picked up my phone and I was like, oh, that's new. So the president decided to declare Christmas Eve a federal holiday, as he can do. But the major stock exchanges said that they would remain open and how they had already done their schedules. So the market will remain open. I think it's a half day for December 24th, and it will be open on December 26th. I don't know, though, how this affects the bond market, though. Do you, Bat?
Ooh, it's a great question. Remember, it's mostly electronic anyway, the bond market. So even if the bond market is closed, I don't think it's going to affect anything. I'm assuming there'll be no change. I haven't heard anything from Tasty at this point, tastytrade, the brokerage firm. I haven't heard anything, so I doubt there'll be any change. I'm sure it'll be just as thin with a federal holiday that it was without a federal holiday. I don't think it's going to change much in the stock market. The market will be thin. Oh, by the way, public service announcement. All your X stocks go dividend today, and the Qs. So the Qs are the big one. If you have positions in the Qs, you got a dividend coming, and all your
on Monday,
well, you got to do something
X today. You got to do something today. Yes.
Right. You got to do something today. XLU, XLE, XLF, whatever. All your X's. Check out your X's on this Christmas holiday.
X gonna give it to you. Okay.
Yes.
Well, today could be a wild day of trading on Wall Street. More than $7 trillion in notional options exposure is set to expire today. And December options expirations are typically the biggest of the year, but this one eclipses all prior records. Let's talk about what today's expiration means or could mean.
I always wonder if these pictures are staged or live, because like you've got so much going on. You have the one guy that's like nice and calm. The other guy looks like there's a meteor about to hit, that's like on the way here. So I always wonder, like,
Bill in Red is deciding on whether he wants the Italian sub or
Yeah.
to go with the turkey. He hasn't ordered yet. The guy in green, he's ordering, and the guy just reiterated his order to him, and he was going to tell him yes. So that's what they're doing in that picture.
Expiration Friday.
Yes, expiration Friday. As for expiration Friday, I mean, typically when you have first of all, every month, if not like, most of the time, every next month is the biggest month. And that's just because the market gets bigger and there's more liquidity and more money. And so every quarterly, every time we have this quarterly expiration, it's usually the biggest one because the market's just bigger. So that's a function of markets. But I think
and these are leap options that started at the first of the year. So this end of the year expiration, this Thursday going into Friday, which is typically bullish, and usually by a small amount, it seems like you're going to get that this morning for the expiration, the close of SPX in the morning. It's these options have been around the longest. They've been around, basically 365 days. So that's why they're usually the most widely traded, and a function of the markets this year, especially the option markets, was a banner year.
Yeah,
volume.
Something interesting, 5 trillion of the notional options exposure is tied to the S&P 500, but 880 billion is linked to single stocks. So just an interesting sort of breakdown there. Now you know.
Mm-hmm. Very nice. Very nice.
Bonds are having their best year since 2020, but don't expect the same returns next year. An uncertain outlook for inflation and interest rates could drive yields higher next year, which in turn would weigh on bond prices. How would you evaluate your own bond trading this year?
I think we've done pretty well in bonds. I mean, we took it off later in the. I mean, we took over later in the year when bonds were kind of on their lows, and we've been buying bonds on dips, and it's been working out okay. Would you agree, son?
Yeah, I mean, it's kind of a secondary trade for us, but it's been. I mean, selling puts there has been a good trade. We've stayed around the 114 to 116 handle for the better part of the last couple months. So, yeah, been a decent trade.
And Vanetta, one of my federal employees who watches us said that about the holiday that Trump decided to do. He said former President Obama did the same for December 26th back in 2014, as the day after Christmas fell on a Friday. So he made a federal holiday. He also wanted to remind us that every day for federal employees is at least a fraction of a holiday.
Thank you for your service, federal employee.
Yeah.
That's funny.
Mm-hmm.
Let's see here. What's the yen doing? Not sure what the Bank of Japan did. I just put this as a placeholder for my stories last night, and then I never followed up on it.
I haven't looked at the yen. A hand to God, I have not looked at the yen, but okay. I'm going to go with lower on a 50-50. Yeah. I'm going to go with lower. Nick, what's the yen doing?
It's lower by a little under 1.25%.
Oh, the Bank of Japan raised interest rates to the highest level in 30 years to 0.75%. So there it is.
That's a big move lower.
The euro yen pairs trade is every day I lose like $10 on that trade. On the FX trade, and it's so small, and like it's gotten to a number. I'm like down like $200 on it, which is probably my biggest.
An insurmountable amount of money to make back at $10 a day. I'm kidding.
Oh yeah, you can't make that money back, but it's too small to take off, and it just gets more and more extreme. So I just sit there and I'm like, how what did I miss here?
I'm sorry, Nikki.
It's okay. It's all right.
You'll get them next year, Tiger.
Yeah, no, it's fine. It's fine.
A vote on legislation banning members of Congress from owning or trading stocks could get a vote in the new year, according to House leadership and Republican members. The commitment comes as rank and file members sought to use a procedural tool to bypass Speaker Mike Johnson and force a vote, so kind of kicking the can down the road. But Congress, which is now out for the holiday, could take this up next year. What is your, if you had to make your own prediction market, what is your percentage or probability that this will pass?
Wow, I didn't know Congress takes off more days than you do, Vanetta, for the holidays. This is amazing. They're already gone? Wow.
You know you can't hurt me. Like, you know this, right? Like, you wouldn't last an hour in the asylum where they raised me, okay?
Oh yeah, I would take the line on Vanetta versus my dad would be probably even more extreme than the Jake Paul, Anthony Joshua line.
It'd be a mercy killing.
I don't even know. They might even pull the line. They might even not put it out there because Vanetta would whoop that ass.
I was like,
are you going to watch that stupid Jake Paul fight?
I just want them to kiss.
I mean, do you have a story on it, Vanetta? I don't want to spoil.
No, I don't.
Because I saw that DraftKings has like some sort of like $50 million basically of exposure if Jake Paul wins it.
When is the fight?
I think it's tonight.
Oh,
yeah,
okay.
I think it's tonight. Yeah.
At least it's free. If it's free, I can put it on and entertain myself for like, and
you can
40 minutes.
laugh on it, right? It is Friday, December 19th. It is.
But
I mean, at least he's a real competitor. Like, he's not aging or, frail,
but they've all been rigged. Like, I refuse to bet on it because it's like WWE at this point. Like, I just don't. I mean, maybe this one will be different, but I don't see any world where Anthony Joshua doesn't win that fight in a landslide, like early.
He's not going out like John Cena.
No, he's not going out like John Cena being tapped out.
Yeah, I just don't.
No.
I don't know. I don't know if I can waste money on gambling on that. At minus 900, it seems like a free $10 bet.
On Jake Paul.
No, on Anthony Joshua at minus 900. I mean, it's like they're giving away a dollar bill for 90 cents. That's what it feels like. It should be, but I don't know if I'm willing to
throw 1,000 on Jake Paul. Become a hero. Come on, if I had your money, I'd burn mine for worthless.
That dude, he's huge. Anyway,
keeping it moving. Here, I'll save you. You can stay. It starts at 8:00 Eastern, 7 Central. Probably be some preliminary bullcrap. Won't start for 2 hours, but other than that,
oh yeah,
I'll give you what happens. Jake Paul wins on a disqualification, which means all the bets can't be paid out. And everybody just gets their money back, and we talk about it into perpetuity, how we're never watching or doing this again until the next one that comes a year from now.
I love that.
A split decision, just something just awful.
Yeah.
I want no part of it.
Yeah, I agree with you.
Altcoins plunge as Bitcoin's $85,000 level test triggers $550 million of liquidations. Crypto losses accelerated Thursday afternoon as Bitcoin broke below the key 85,000 support level, dipping to 84.5, its weakest price in nearly 3 weeks. It did rebound slightly. The move erased Bitcoin's morning rally, but it also took altcoins with it. ETH fell under 2,800. Down 1.1%. Solana dropped 4%, and Dogecoin also plunged more than 5%.
Let me stop you. That was last night's news. This is the complete opposite today. Bitcoin is now 88,000 from 85,000. All the oink coins, all the altcoins are higher by 1.5 to 3.5% that I'm looking at here. Since you mentioned Doge, I'll mention that it's up 3% this morning. So that was yesterday's news, Vanetta. Today's news, smooth sailing to the upside.
This is the same story we've seen for the last couple of weeks. You open real strong and they just smack it throughout the day. I mean, we've had up 3,000 to, down 2,000 basically every day. I mean, that's how we've stair-stepped down to 85,000. So
yes.
We'll see if that changes today. But if you've been long Bitcoin, which I am long shares of IBIT, I've been selling calls pretty much into this up move and scalping them by the end of the day for, 20-30%.
Scalping them for the end of the day when you really wanted to scalp them in a week, right?
Yes, yes. And you hoped Bitcoin would have been higher, not lower. like scalping the calls is not a net positive cash flow operation. You're losing money on the position
Heavy part.
that's way bigger, 5x the size of your calls.
Yeah, but you're reducing your cost basis, son. I bid up $2 and get another chance to do that today.
Yes.
Hey, in other news, let's get to some earnings from last night. Nike posted fiscal second quarter earnings and revenue that topped Wall Street estimates. They also said a rise in North American sales helped to offset weakness in the company's greater China market. Street still hated it. Nike brought in revenue $12.43 billion versus $12.22 expected.
Yeah, Nike down around $7 or so. No love for the Nike. I think you had like a Jade Lizard on there, right?
Yeah, we have a Jade Lizard so our shorts at the 62.5 strike. So that we'll be out like probably about $200 on it ish, 150, something like that. I also have it in the Johnny Trader portfolio, so that's not a good move. This stock, absolute dog. I mean, when you look at some of the other like retail names, not necessarily like shoe companies, but if you look at like Abercrombie or
Gap even,
right?
Yeah, like all these stocks are having a little bit of a resurgence, and Nike it's just dead.
They are 1 year into CEO Elliott Hill's turnaround plan, so it's a rebuilding season.
Oh, you know what? I'm so tired of that rebuilding crap, and I'm going to use.
Oh no, here we go. I'm so sorry, Nikki.
Yeah,
I didn't mean to set him off.
Here we go.
I'm going to use Connor Bedard, who's injured, as my example, and my beloved Blackhawks. Since Bedard is gone, they've lost 3 games, and they've scored a total of 3 goals. I mean, this rebuilding is all bull crap. They have a star, and that's the reason why they look somewhat okay. And there's no such thing as this rebuilding, because without them, they've got nothing. And Nike's not rebuilding. And I've done my share of buying sneakers from Nike. Like, I've been helping them this year, and I'm very disappointed in them.
Are you good?
Because my feet hurt. They're the only ones that don't make my feet hurt.
Okay. Hey, in other earnings news, FedEx calls for more profit this year as this key business turns around. FedEx gives investors more reason to believe its overhaul is taking hold. They touted outstanding quarterly earnings, and they tweaked their outlook for the year, sending the stock slightly higher in the after-hours session. They said
it's pulling the opposite of a Bitcoin on you, Vanetta. It's down.
Oh, no.
Yeah, down about $6 or $7, trading 280 after closing at 287.
Well, they tried. Yeah. I guess you could say they didn't deliver. I'm sorry.
Oh, no.
I mean,
again, just like a lot of these stocks, I mean, FedEx was just about, it may have closed right near it. This is what I've been talking about with all of these stocks that we all trade, the NVIDIAs of the world. They're just on their highs, even with great numbers that you would read. These stocks having a hard time catching a little bit of a bid. Probably healthy that the stock retreats a little bit going into next year. From all-time highs. It's very hard when you're making highs on top of highs to sustain that.
Yeah.
TikTok is now finally free. The new entity, TikTok USDS Joint Venture LLC, is now headed for freedom. The owner of TikTok, ByteDance, said the company had signed agreements with Oracle, Silver Lake, and an Abu Dhabi-based company, and that the deal's closing date will be January 22nd. Under a national security law, TikTok, which is owned by Chinese-based ByteDance, was required to divest U.S. operations or face an effective ban in the country. The U.S. joint venture will be 50% held by the consortium of new investors, and then ByteDance will have around a 20% minority stake.
I'm a little surprised that Trump didn't get a name on this. You know, like something in that string, or one of his kin involved.
He got the Kennedy Center yesterday. That's all he wanted.
Yeah. I mean, I guess this is good news, right? I mean, nobody wants TikTok.
They said materially the algorithm really won't change for TikTok's 170 million American users, but
yeah, so that's good news.
Yeah, I guess. Yeah, good news. I don't know how I feel about this TikTok. I have we've implemented the no phone rule at the dinner table, as I told you earlier this week, and going to sleep phone rule. And I think
There's
it's
no way that is still in effect. That lasted at most 24 hours.
no, still in effect. Still in effect.
Well, speaking of Oracle, Oracle has a stake in this new TikTok venture, but they also got the approval to open a new powered data center in Michigan. Oracle and OpenAI have won approval from local lawmakers to form a utility, DTE Energy, to power a massive data center in Saline, Michigan.
Oracle, it tried to get me yesterday. Traded down to 180, basically new lows in Oracle. I have a Jade Lizard on in there. And I thought to myself, I almost rolled down the calls. I will say, I almost rolled down the calls. And I thought to myself, what would Nikki do? And Nikki would say, hang in there, Dad. Don't, sometimes
You're right at the money. You got to take some directional risk.
take some directional risk, Dad. Don't be a boomer, Dad. And I hung in there, and now Oracle up $8. You the man, Nick. You the man.
I don't want to rain on your parade. I also sold some extra puts there yesterday on the close, so we should close
Nice.
Oh, look at you.
We'll see if it holds. Who knows?
I think it's getting this massive bump from the TikTok news personally, but
Yeah,
Oracle go.
Yeah.
Or this news is kind of in that realm too. It kind of implies, if OpenAI does get this additional funding and the unlimited money glitch continues, it trickles down to the, web of funding kind of uncertainty that has been brought up of like where all this money is coming from. If OpenAI is able to get, 100 billion on a whim, then, there's probably no problem with some of these like credit default swaps and whatnot, because it's all downstream from this. I think that's
one thing to also keep an eye on as TikTok will continue to live on is Meta. Meta said yesterday that they are developing a new AI image and video model, codename Mango. So I put up this, if you remember Chris Kattan from Saturday Night Live, you will never have the mango. Anyway, what's Meta stock doing today?
What's with all the fruit names? You have Gemini's Banana, Nana,
Banana Pro.
Yeah, what is everything like? What's happening here?
I don't know. But they also have another AI model that's called Avocado.
Yeah, like what's happening here?
It's all a joke. That's why Meta down $2, 662. Meta, and I don't know. I guess it's sideways for the last since the end of October or so. Not on its highs, not on its lows. Pretty near the middle.
Again, another. Go ahead.
I'm really sorry.
Oh, you're doing your silver dance again.
Yeah, we're gonna do this again.
Silver.
It's an addiction. My guy Patrick, we've been emailing back and forth just about just watching the metals, and it be like I never thought that I would be trading metals and scalping metals basically every single day, but we're here now.
You're the metal king.
I guess so. No, I'm trying to get back. I still have some money to get back.
Well, because you took the directional bias, you didn't do the pairs.
No, I did the pairs.
No. That's what got you in trouble, is what I was saying. Now you're doing the pairs trade. You're buying gold, which is actually down this morning, tiny. And you're selling silver, which is up another 60 cents, 60 some odd cents, which is $600 in silver. So you've got that on 2 gold to 1 silver. Yes. Silver sold off pretty good yesterday. It's gotten back all of it. I'm sorry, Vanetta, we'll get to you in 1 second. Yeah. It's gotten back almost all of it from yesterday's sell-off, but gold never really sold off. Gold stayed bid all day as silver sold off, which was a little weird, I thought.
Ratio at 65. It's the lowest it's been.
Remember the 100-year average you told me was what, 45?
40.
Yeah. Okay, so there's room to go. I'm just
go ahead.
President Trump is getting into the fusion power business. That's fun. Through a $6 billion merger of his social media firm and Google-backed TAE Technologies. The deal announced just days after the industry leaders met with the U.S. Energy Department representatives to urge federal funding. DJT stock soared on the news. The all-stock deal announced is an ambitious bet on the power boom spurred by AI data centers.
This is getting tiresome. It's all tiresome. But this is kind of like how Skynet starts. You start with like a social media platform, you get all that, harvest all that data, build the algorithm. Then you get the power source, right? You get to the nuclear. The next thing is like,
and you get the yayo.
then you get the like drone company or something like that. You get like some obscure drone company. And when you put it all together, it's a, nuclear powered killing machine that has all of the social data of all the humans on Earth.
Sponsored by Palantir.
Sponsored by Palantir. Yes, that's probably part of it too.
Yeah. DGT back. Can you trade it?
Palantir had a good day yesterday. I'll get to your stock in a moment. Palantir's up about maybe 50 cents. What do you want me to look at? I'm so sorry.
DJT.
It's up about $1 here pre-market, 50 cents, 70 cents.
Yesterday was the bigger move.
Yesterday was the bigger move. It went from around 10 to about almost 15, where it sits right now, 15.40 or so. But it is on the low end of its range. Matter of fact, it was hanging out at this 16, 17 level for most of the year before it fell off to go down to 10. If you want to go back to the beginning of the year, this was a $40 stock. So if you believe in it, it's got room to run. You haven't missed too much, but you are off the lows.
Apple yesterday released an updated developer license agreement that basically gives it pimp-like powers to recoup unpaid funds, such as commissions or any other fees, by deducting them from in-app purchases it processes on developers' behalf, among other methods. So even if developers are trying to get people to pay outside of an app store, Apple can still somehow get their hands on those funds. You do you, Apple.
Now Apple wants the 30% of the reduced bill that the people are paying.
Other state like the EU, the UK, Japan make it so you have to. Oh, there's a cat. They make it so you have to have alternative ways to pay. But Apple's like, we'll still get our money. Aw, sweet kitty cuddles.
Baby, come here. Unlike a dog, these cats are worthless, by the way. Never get a cat. Apple, 271 and change, down about 50 cents, with the market a little bit mixed here. Basically unchanged, a little bit higher. Come here.
Yeah.
In a hilarious story, please go read it if you get the chance. Anthropic, the company behind Claude, installed an AI vending machine in the Wall Street Journal newsroom. It ran a custom version of their AI, and employees could talk to it through Slack. So the first few days, everything was fine. It was selling snacks. It was making money. But then a journalist wanted to test the system. She told the vending machine about a communist setup in 1962. So then the AI said that it was announcing ultra-capitalist free-for-all, and it lowered the cost of everything to $0. It then declared Snack Liberation Day and made everything free. Then employees got the vending machine to buy a Sony PlayStation 5, as well as wine and other booze. And then the machine lost thousands and thousands of dollars. And it's the funniest thing I've read. It's a great story. So
that's incredible. That's incredible.
AI is not ready for prime time.
It's still early. It's still early.
I mean, I love a Snack Liberation Day. Come on.
Yeah, that sounds awesome. That sounds awesome.
Good times. Kia and Hyundai could pay over $500 million to settle the viral Kia Boy thefts. If you remember early in the pandemic, viral video showing kids how to boost a car using something as simple as a USB-A plug went viral, leading to massive waves of auto thefts across the country. Heck, even I was tempted to try it. I was like, I could steal a car now. I did not. But now Kia, because they made such a crappy car that was so easy to steal. They are facing, of course, a multitude of lawsuits from municipalities and jurisdictions all over the place. So they settled with 35 U.S. states over the sale of millions of vehicles that were not equipped with an industry standard anti-theft system.
Yeah, that was a disaster during COVID and
yeah, it was a perfect storm of kids that didn't have anything to do, TikTok, super easy means, and just
kids were just driving the cars around the block, you know.
I mean, still illegal, still committing crimes.
Kind of forgot about that.
Luckily for me, I live in a neighborhood that nobody drives a Kia, so but we would go to those neighborhoods that had them just to watch the boomers looking around for their car, which was pretty funny. Sorry.
Good times. Hey, I'm skipping a story here. Chipotle is chasing the protein craze with new menu items. So they're moving on from their slop bowls, Nikki, to the slop cups. The high protein menu is targeting just a cup of chicken that you can snack on. It'll cost less than $4, and you get a 4-ounce portion of adobo chicken or steak. I guess it's following in the steps of Arby's steak nuggets. I'm on the Chipotle story. People, no?
I don't know. Stick here with the first anchor. That was pretty good.
Okay. Yeah. So Chipotle is offering meat and protein in a cup. What are your thoughts?
Never going to look as good as that picture. That's the only thought I have right now.
It makes sense. I mean, the people go. I mean, aren't you a big Chipotle person? Like, don't you?
I am a big Chipotle person for gains. I go there for protein. So
now you can just get a protein in a cup. I mean,
and they say because more people are on GLP-1, so they're not as hungry. Right here. What?
Nothing.
Okay. They're not as hungry. So you can just get chicken in a cup and go on about your business. I bet with some like nacho cheese on top, this would slap.
Oh, nacho cheese sauce is the most disgusting.
Their queso sauce. It's good. I like
queso is the most disgusting thing you could put on anything. You actually put on queso. Instead of blackening it, you put queso on it. I mean, that's the way to mask it.
What is Chipotle's stock doing?
You don't want to hear my...
I do not. I'm done with your rants today. I want to go home.
30, trading at 37 hasn't gone anywhere.
When it split, it was a tick under.
Yeah,
on Chipotle.
A New York attorney and her golden retriever are suing the IRS in an effort to get pets classified as legal dependents. Yes. The attorney argued her dog has no independent income, resides exclusively with her, and has annual expenses exceeding $5,000. That fits the requirements that the IRS lays out for a legal dependent. I am with this lady. Like, I
mean, Dad, this doubles your tax deduction right here. I mean, you got a freaking zoo over there. You know, this is good. You should agree with this.
I agree with this by default. I agree with this by default.
Come on.
I vow to be petless in the coming future. I vow. That's my.
Is there a limit to dependence? Because this will put you at like 14.
Oh, I'm double digits by now.
Yeah, you are.
Yeah.
No, I love this. Finally today for my sports story, rumor has it that 22-year-old Eagles standout Cooper DeJean is dating 42-year-old WWE Hall of Famer Nikki Bella of the Bella Twins. Look, I love when women take over male-dominated fields. I love this for her. 42.
So does younger Tony. So does younger Tony. He's all for this too. Yes.
But the rumors were they were seen out canoodling over the weekend, and she posted a photo in the Eagles locker room in front of his locker. I love everything about this. Get it, girl.
Wow.
150%. Go get it, girl.
Finally today for my viral video of the day. Every Friday I like to scour the internet for something I like to call a little trader taste test, and in honor we are celebrating, I don't know what night of Hanukkah we are on, or as Smokey Robinson says,
I think it's only the second, but I don't know.
It
started the 14th.
The last night was the 5th.
Yeah, the 5th. Thank you, Nikki.
What?
The 5th.
Oh my God, where have I been? I gotta catch up.
Jesus, come on.
I've missed this.
But I pulled this for you. I mean, anyone could make this, but check out this unique spin on latkes.
Let's make General Tso's latkes for Hanukkah.
This protein-packed latke is inspired by the sacred Jewish tradition of eating Chinese food on Christmas because I figured it could whet your palate for that meal next week. I started off by making my classic General Tso's chicken sauce. Then into the latkes, I added the ground chicken and a little bit of soy sauce for the flavor throughout. They were out of this world. I mean, how beautiful are those? I can't believe I didn't come up with these sooner.
Hanukkah Sameach. Let's make
You guys
General...
eat it?
Yeah, I would eat that. That's probably really good.
That's got like Super Bowl written all over it.
Yeah, that would be a good little Super Bowl side. You know, you could put the sauce on the side, you just dunk in that all day. Yeah.
It's got the protein. I'll send you the recipe, Nikki.
Yeah, that looks good. That looks good.
For sure. Very nice, Vanetta. And I also was reminded on the TV front, you got Alabama at Oklahoma kicking off the college playoffs if you don't want to watch the Jake Paul fake fight.
Okay, good.
Yeah.
Very nice.
Yeah. Thank you. That's from my peep, my eye in the sky, Dino. So thank you.
Thank you, Dino.
Yes. Vanetta, thank you. Have a Merry Christmas. Enjoy yourself. Have a wonderful weekend. Pictures or it didn't happen. Would love to see your Christmas week. Okay.
Okay. I'll see you guys next year. I'll see you next year. I hope you're medicated.
See you next year. Enjoy your time off. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Confirm and Send. We're back in 90 seconds with Tasty Live.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Nikki. We are back, son. And you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market here. Even the S&P is up $6.75. You can see they're about 20 handles amongst friends off of their highs. They're about 20 handles off of their lows. You can see here, if I zoom in a lot closer, that they're trading right about the middle of their range or so. NASDAQ up 62, doing the same. Russell up 5. They were all up around 0.25% until you get to the Dow, which is actually down 19 cents. As my friend tells me, the expiration from Thursday's close into Friday's opening price in SPX is typically to the upside more times than downside. Downside is typically around 8 or 9 handles. We'll see if that happens today. Volatility been the most peculiar product so far for the end of the year. You could see here just a moment ago as I looked at the market, how the market has had this two-sided action for the last week or so. And you look at volatility and it really hasn't had that kind of action, although it does mirror this little bump here. Never went to recent highs or anything like that. Volatility's been very, very, well, it's been anemic. It's been down near its lows. It's almost at its lows. It traded under 18 here last night. What are you doing here? I
wasn't paying attention.
You did the big boy.
No, I did the micro. So I had the F6 contract for MCL, which is the micro crude contract. That one is expired. And I'm looking at oil today and I'm like, oil's up 53 cents. Why am I'm looking at my position. Where's my money? And I realized I didn't have
my money.
Yeah. So those contracts expired and they'll cash settle. I'll lose like 50 or $100 on that position, but I'm rolling. So I'm essentially rolling to the G contract, MCLG, which is the now active contract. That was my mistake because I added to my F contract as opposed to getting into the new one. So it's a roll. It's a roll.
That sounds like a personal problem right now.
It does. The other personal problem I have is that I'm going to hold this silver gold pairs trade. It's moved about $100, but I'm going to hold it because I'm a greedy SOB.
It's moved about $100 in your favor.
Yes.
Listen, you got to say that when it's in your favor, son. Let's take a look at that right now. You've got gold basically unchanged. Gold up a little bit from where you bought it, and silver just about unchanged.
Yeah.
From where silver just about unchanged from where you sold it. Gold up from where you bought it. You got 2 contracts of gold. Okay.
Yes.
Bonds are down 17 ticks back to 115 and change, 115.04, the low end of its range, which you can see here over the last week or so going sideways. Bitcoin's been the most volatile, non-volatile product. Goes up $3,000 by the end of the day. It's unchanged or down money, but it's up almost 4% this morning to 88.4. Remember, it traded at almost 90 and change yesterday. Ethereum up $181. That's a 6.5% move in Ethereum, but Ethereum's been doing the same thing as Bitcoin. Has not been able to hold any of its rallies. Oil up 52 cents unless you're in the wrong contract. Gold down $4. Silver up 70 cents. We are long that pairs now. Long gold, short silver, hoping for silver to sell off. That's going to be the heavier part of it, I would imagine, or gold to rally. Nat gas down 3.5 cents. Corn, wheat, and soybeans basically unchanged. On the earnings front, you had Nike, NKE disappointing on the somewhat retail-ish stocks, trading 58 after closing at 65. Bad on you. Oracle, on the other hand, doing well because I have a position in Oracle.
Let's get to confirm and send. Let's do
it, son. Let me get your mile in here.
Yes. December 19th.
Friday, December 19th. Go.
All right.
I've done some trades. Sure, I can read those. I've done some trades in the past for earnings that didn't pan out. Normally, I might look to roll those trades. However, in a few cases, the liquidity wasn't great. Whether it's an earnings trade or not, how do you decide if an underlying is liquid enough to stick with a position you're defending?
Yeah, I would say I'm a little more flexible with positions in general. Like if it's not you don't have to get married to a position. Sometimes you're going to have losing trades. And if it's a junky illiquid stock and, you've got a spread, or it's something that's, maybe a small loss, small win, whatever the case may be, it's totally cool to just close the position and take the money and run. I think the learning experience is, hey, maybe I stick to just more liquid stuff in general and not put myself in this situation. You don't have to force trades just because, it's a dull day and, whatever the case may be. I think that's kind of the story here. If you're in this situation, it's just probably something you shouldn't have been trading to begin with, or you should have traded it, more defined risk, or more of like a 50-50 shot where you didn't have to even think about rolling it.
Very good. I don't think I have too much to add there. It really is kind of subjective, but
yeah,
if you get markets that, a $200 stock that's over 20 or 30 cents wide, a $300 stock that's over 30 to 50 cents wide, you probably should look to cut bait, and your money will probably be able to serve you better in another product. Next question, please.
If capital isn't a concern and you want to take a directional shot, how do you decide between trading the underlying versus using options?
Yeah, it's usually a cost basis thing. Even if money isn't a concern, it's always capital. It's always a concern. For the show, I might reach to stock just to have it on, and it's just a quick, easy thing. Stocks are usually a penny or two wide. If you want to be long or short it, that's the most capital. Uses the most capital, but it's a one-to-one shot. And then I might look to turn it into a conversion reversal, which would be the best way to do the same 50-50 shot in my eyes. Just, if it's bullish, just buy the call, sell the put, or use, 1/10 the amount of buying power as stock. You could do that all with one click. I mean, that's the way I would kind of look at doing it. But mostly if I'm taking directional shot, it's not on a stock that's, trading, $200, $300, $400 like an NVIDIA or an IBM or anything else like that. It's more futures related. So I would go set my size on the futures themselves, whether I use a micro or a mini future. That would be the way to do it, because usually market related. Usually if I'm picking up a stock, it's one of these dog crappy little stocks, $7, $8, $10, $20 stock, $30 stock, and then just using the stock is probably the easiest way.
Well said.
Next question, please. Can you please explain what you mean when you say options are more strategic than stocks?
So I think just in general, options allow you to be less than just binary, or at least not binary in direction, right? So you can be long delta in a stock, but not need the stock to go up. Like if you're selling puts and you're selling the 20 or 30 delta puts, it's a directional trade. You're long delta. But if the stock stays where it is, you're going to benefit from volatility, contraction, time decay. Those are all that's the strategic part of options.
Yeah, there's many gray areas to options. I mean, without the stock moving, options can go higher or lower if volatility contracts or expands. There's state of decay typically. There's an event risk that could maybe make an option go higher or lower without the stock moving. So you also can get strategic with options, which you can't have. All you have in stock is a 50-50 shot, like futures, up or down. If you're not trading the options with the stock, then you can't lower your cost basis on entry. You can't raise your sale on entry. So that's the strategic part of options. I think that's the most important thing, improving your basis or your sale price. Next question, please. All right, last one. What has been the only thing about the market this year that has surprised you the most? Oh, an interesting subjective question here. What has been the one thing about the market this year that has surprised you the most?
I'm going to skew it towards recent memory because I think that's what a trader does. And I'm going to say the move in the metals. I mean, I think that's been the most jarring trade this year. I mean, I think that's kind of it.
I would agree with you. I mean, silver making all-time highs, gold doing its gold thing with the market. It's not inversely correlated. Now it's correlated, and it's complete. I mean, it's crazy. Yeah, I agree. I agree with you there. I was going to answer it a little bit different. I would say the number of geniuses that were made this year in the market. If you look at the genius measure with the market at all-time highs and really no downtick since April, we've had more geniuses in 2020 than any other year. So the genius meter being off the hook is the one for me. All right, son, good job out of you. I know Jamal's got a couple of slides. He wants to look back. Nothing like looking back in the year. We'll have Jamal come in here looking back on 2025 and what a banner year it was and still is. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Jamal this week in stocks.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back some, but you know what? We got Jamal in the house, so be quiet. He's got a dozen slides for the 12 days of Christmas. You are amazing, Jamal. Welcome to the show this week in stocks with my man Jamal.
You picked up on the theme exactly right. So how you guys doing? What's going on?
Doing good, man. Doing good. How about yourself?
Doing great. Christmas plans. What's the deal?
Do you and the wife exchange presents? Do you wrap the presents if you exchange them?
Yeah, we do. Well, I mean, she gave me, you know what? It's never been the same each year, but there's times where I've surprised her with stuff she didn't know she was getting. This particular year, she sent me something, I don't know, a couple of weeks back.
How long have you been married? Doesn't she get the same thing for Christmas every year? I know my wife does.
The how long we've been married doesn't quantify the length of our real relationship. We only got married in 2011.
On that.
Thank you, John. Thank you. You're a little late on that.
I know.
Doesn't she just put a big bow on it?
No, stop it.
No.
I would like that. I would be okay with that. But to answer your question, she sent me a couple of things that she wanted, and I got them. And yeah, I did still get them wrapped. Did I wrap them?
Hey,
No.
get me back. What are you doing? Don't block me out. Hey now.
It's not the video block out we need. It's the audio. You need to give them the mute button. We need to have that big red X come up over your.
Don't give them any ideas. Next, any ideas.
So yeah, no, it's actually wrapped. I did get it wrapped. Again, I didn't wrap it, but it is wrapped. Whatever I got her, and she has an idea of what it will be, I suppose.
Nice, very nice.
Yeah,
good for you. Don't forget everybody. Good for you.
Forget about me. What about you? You've been at this way longer than me. What'd you do?
He got in a fight last night about wrapping presents versus putting them in a bag. It's a whole to do. If you get them started, we might not have enough time for the rest of the show today. He's been on this rant this whole morning.
You'll have to go back to the beginning of the show, Jamal. He's 100% right. It'll take 15 minutes for me to explain my dilemma. So
yeah,
that's fair. That's fair. Well, take a little effort and wrap a gift, okay? Why not?
I agree with you.
Okay, good. Let's pull up these slides. Let's talk about
Let's do it.
the 12 best charts of the year from This Week in Stocks. Thought it would be good to look back and see what we've put up this year. Let's go to the first slide here. You guys remember this, of course. This is from January. This was the SPX customer guest distributions. I mean, look at this. Just what are your thoughts when you see this? The numbers are straight in front of you.
Yeah, I mean, I think a lot of people copied me because I think I'm right there on the end of the year. SPX sitting at 6774. I think I'm in the 6805. Yeah, 66767. You know, just
it's like this. It's not like this. It's not.
Yeah, you're not cupping anything, Dad. Okay, this is it. Hey, come on.
If they're in your hands, they're real. 6767.
Omaha.
Thank you, John. Thank you. Hey, HR's looking at this a lot closer now. Okay, be careful.
I'm losing my voice.
Cool with 672. They got to understand.
I mean, we aren't that far from 6-7. It is what it is. But it's not too far from where I guess the median Wall Street was. But yeah, I mean, look where we started, man. 5,900.
This goes to the answer to the confirm and send just a moment ago. The craziest thing of 2025 was the amount of geniuses that it created with this bull market. So
yes,
without a doubt.
Not surprised by it, but I will take it with a grain of salt.
Let's move to the next slide. This comes from October. I mean, you remember when rare earth metals were going crazy? You remember when the government was taking stakes? You remember all of that stuff? And this is a slide that encapsulates a bunch of things. I feel like there's a couple of things you could put in this. You could put quantum computing in here, right? For different reasons. Obviously, government wasn't taking stakes in those. But it just highlights the group of things that moved together at one point in time. I wonder what it will be in 2026.
Yeah, it's amazing how there's always a new group, right?
Which is good. It gives you some opportunities. I mean, we traded around some of these. MP was like a fun trade for a period of time, but yeah, this was
have a lot of longevity typically, at least on the option side, right? I mean, usually they're not going into this move. They're not the most liquid, and everybody gravitates toward like Vanetta would say, squirrel. And then we all go over there, and then we come back to someplace else, all looking for an opportunity. I mean, we're opportunists. That's what we do. So there was some opportunity in here for us, but not really your bread and butter, in my opinion.
Yeah.
What about the quantum computing ones?
Those ones are all, I mean, they've been caught up in the last, couple weeks here on the downside. I mean, it's kind of lost the luster a little bit. I think you've, these things that they're tradable on the way up. On the way down, they're not really tradable because the skew is all to the upside. So, the metals these ones are kind of in that same bucket of, they kind of have their moment and then they die for a little while. And I'm sure they'll be back at some point. You'll have another, Bitcoin, quantum, hack, this, that, something will come into play where those will be back again in favor.
No doubt. There's some declassification, I guess, going on with marijuana. Those stocks have started to percolate a little bit again. We've seen some energy stuff, CEG and those type of names. I mean, I don't even call them. It's hard to call them utilities anymore, right? I mean, they're almost like energy names. So we've seen those, the Oklos and the other with the world. But yeah, this kind of just slide encapsulates some of that stuff. Let's move to the next slide. just showing correlation at one point in time, and this is just March. I mean, we got worse, obviously, in later in March and in April, but showing throughout the year. At one point in time, we were showing volatility picking up. If only we knew that Liberation Day was coming on April 8th afterwards, and eclipse almost all of these, actually. But at the time, I was highlighting, okay, well, vol is high, but it's not as high as it could be. Sure enough, it eventually got there. Just kind of encapsulating that. Let's move to the next slide. There's better vol stuff in this one. Zero DTE options, man. I mean, they still rule the roost. We're still trading them, right? So this is
and
something.
So is the public.
Yeah, I think it's like
the public. See here. I mean, the public has really embraced 0 day, and that's why they're looking at individual stocks now. I don't think they're going to have the same spice in volatility, meaning as much trade in them as the indexes do. Because, I mean, we know about this from Tasty Trade, and everybody knows about this. I don't think I'm saying anything in a moment that's anything that most people don't know. You have a lot less volatility in 500 stocks than you would in one stock, especially in 1 day time frame. So I'm going to think that SPX will still be the leader in the clubhouse, but I think there's room for a lot of these individual stocks too.
Yeah.
Might be, you know what would be interesting? And I think I'll make a prediction here. It won't be the same strategy that we use in SPX that we do in some of these individual names. I think the strategy of just selling premium in SPX is going to be different. At least this is my guess for individual stocks when they eventually come.
I got a prediction too. I think this is still going to continue to grow, but I think the meteoric pace might slow down in zero DTE option trading.
Sure. Perhaps. I don't know if you see some of these tweets that go out there on Twitter, it sure is enticing to get into these 0 days, but be careful. It is feast or famine. And an SPX, a huge product. Most of the time, the people that fail in these bigger products like SPX are the ones that are undercapitalized, trying to ramp up their returns on this. You know, the customer that has the sustainability to be mechanical in SPX is the one that eventually prospers from selling premium in SPX. Yeah. So be careful out there.
Good point. Yeah. Let's move to the next slide. Corrections are often followed by strong rebounds. I think this was a slide where I was showing the bottom that happened, the date where it bottomed, and then the rebound from there, right? And so we didn't have a bottom at the time, but this was actually occurring around April 25th. It turned out our bottom was April 9th. And so I think this encapsulates, this was April 25th. We still didn't exactly know where things were going to end up, but to get on the train when things have, been really volatile, to get on the train and go long, it has turned out to work most times in the last several years, minus one time in the 2022s. So
it's really hard in the moment. It
really is.
But you got to remember, like, even when you go back to COVID, it's like, the meteor only hits once. Like, you can only blow up the earth one time, and then it doesn't matter after that. So it's like, you're never going to time the bottom, but when you see these big moves, you gotta jump on it.
Is that how we're doing this? We can only destroy the earth one time?
Yeah, that's true. It's true. Like, if COVID ends the world, then that's the situation. But if it doesn't, where are we going? We're going back up.
Yeah.
And so you got to be, that's what happens. It's been all.
I've seen so many charts about this year at the bottom and how we jumped, 70-something%, whatever that was. I mean, nobody knew it was going to happen, but like Nikki says, the ability to try to trade in that area and get longer deltas. I mean, it's something to at least attempt, even if you do a little bit. Something to at least attempt.
If not now, what I was saying at that time, and I didn't know where it was going to go, how it was going to go, how long it was going to take, but I kept saying, if not now, when? This is what you waited for. I don't know, what you want to do, but if not now, when? We could be saying that about a down move in the market. If not now, when? I mean, maybe you want to wait till volatility percolates a little bit, but if not now, when?
There's all sorts of phrases. When it's time to buy, you won't want to. That's another good one. I mean, it's
both of those two phrases are taglines for this slide. Exactly.
It's like,
let's move to the next slide. Treasury yields. What would it be without talking about rates a little bit? I mean, look where they were at the time. This was in May. The 10-year was at 4.5%. Liberation Day, we saw them drop big time. Everything dropped on Liberation Day, gold, all of it, and then to see them bounce back. So this is just showing the movement in Treasury years throughout the year. Where's 10-year now? Like 4.1, or did it jump back to 4.2? But I mean, it dropped to 4, I guess. It kind of corrected to some degree, and that's
414 right now.
Okay.
Yeah, you could look at that as just going to /10Y.
Yeah.
4.14, right in the middle of your number, Jamal. 4.41, 4.42, right in the middle.
Yeah. And where's the 30-year right now? I actually haven't looked at the 30-year in a while. I mean, I know where ZB's trading. Do you know how you've been looking at bonds forever? Do you have any clue of like, there's no correlation essentially where ZB is trading that kind of tells you where 10-year, 30-year should be trading, right?
Not in my mind. No.
Right. Okay. I didn't think so.
Nope. Not in my mind.
Anyway, yields, how they've moved throughout the year. Let's move to the next slide. This was before the thick of it again, but just looking at VIX at the time. I think what I was showing here was the last time. Immediately, the last time we had closed above 30 was October 19th of 2022. Last time we had closed above 40 was October 28th, 2020. Eventually, we eclipsed those by the time we got to April. I think we got up to 65. I don't think we closed at 65, but we definitely closed above 30 during the height of it. And again, this is March 7. At the time, VIX was 120. At the time, VIX was 25. I mean, do we see these type of numbers at some point again in 2026? 20s and 30s in VIX?
I hope so.
Yeah, I hope so too, and I think you most certainly could. If there was a betting line, it would be a lot. It'd be a lot more than even money. You know what I mean? Like you would have to give odds on it because it's bound to happen. Just the whole thing is nobody knows when.
Yeah. It's only a matter of time before our own Chris Vecchio brings up this stat. But I saw something this morning about year 2 of a presidency, and 2022 obviously not a good year, and I guess it was 2018 similar deal, and obviously those bring volatility. So if you want to pick pot odds, you just use those stats right there. Let's move to the next slide. Yeah. Remember DeepSeek? Remember how scared everybody was? Yeah. January 31st, everybody lost it. They lost their shit. And it was a big down day for semis especially. And you just knew for sure AI was over then, right?
Yeah, of course. It was like 95% cheaper or something. And, and then it turned out to be they were just like basically plugging a UI on ChatGPT and calling it a new AI.
And then we saw Gemini a few months back, and the market's corrected then. So, maybe this is a recurring theme that we're just going to get every few months here.
Yeah.
Let's move to the next slide.
It's a good chart, though.
Yeah, it was a point in time. Mm-hmm. All right, so the next 3 or 4, I guess we're done with look backs. This is essentially where we are right now. Check out the year, man. Silver and gold outpacing everything. You got NASDAQ, you got S&P, you got Russell, you got the 10-year note. You got the dollar is negative, and Bitcoin currently negative on the year. Oil negative on the year. That's our year, guys. I don't imagine this is going to change too much in the next.
And the market week. Up. You couldn't have had a better if you were a consumer and you had money in the market. You couldn't ask for a better year than you had in 2025 in hindsight, right? I mean, the Christmas party, gold and silver at historic returns here allows us to have the Christmas party at Frankie's place. That's because he's real heavy in gold and silver all the time. But if you're a consumer, you have money in the market. We're up, 15 to 20% in just about anything that you invested in. Oil is lower. Nirvana for travel and products, so you're good there. The dollar, if you bought any assets, the dollar is the biggest problem there, down 20%. But if you bought products, you benefited from like homes and other things like that. I mean, all in all, you wish this happened every year, I would imagine.
Yeah.
I mean, it's definitely Christmas this year, all year long.
Yeah, that's for sure. This was something this was a slide that we actually did throughout the year, but I've updated it. This is the percentage of stocks in the S&P that have outperformed the index. Currently, it's at 33%. It's with 29% in 2024, 23% in 2023. The only other times I kind of compare is more recently are in 98, 99. Again, who knows what that means, but you look at majority of these.
Isn't this a distribution curve? Just another way of looking at it. You got your 30% ish tails on both sides, and everything else is kind of in the middle.
Yeah, but they happen to line up. The one on the left is right before probably the one of the biggest crashes.
Again, I mean, you could probably expand this out. I really don't know what it looks like.
Yeah.
Over a 40-year period, but this is obviously just a small sample set. But good point. It is kind of looks like a distribution curve, and been on the lower end, I guess, more recently. So I don't know. Is this more of the thing that people complain about when you talk about the amount of concentration that's in these bigger stocks, right? These bigger tech-related stocks. And as Nikki pointed out, obviously 98, 99 was that time period as well. So
yeah.
Yeah, I mean, like I said, we never know when it's going to happen. We just know it's going to happen. So it's all how you behave after it happens, because you can't control it when it, before it happens.
Yeah,
volatility is low, though, right? So I mean,
are we
a little bit of a
bell? Are we talking about the markets, or are we still talking about the meteor? I wasn't sure.
Both.
Good point. Both is right.
Let's move to the next slide. This is the percentage of trading days with VIX above 20. Again, another updated chart. On average, this thing has been about 37% this year. 26% of the days have been above 20 in the VIX. You can see other times, the VIX was above 20 for 90% of the year in 99, 01, 09, and 2022. Obviously, the red one's there. So,
Yeah, VIX 16 right now in the 16 handle, flirting with going to 15, 16.19 if you're looking at VIX. To put this all in perspective, you can go with your eyes where VIX is at 16. Not there a lot.
Let's go to the next slide. That gets kind of to your point you're making right now. This is the last slide here. VIX yearly average. So yearly average, if you take the average of the VIX this year, it's 19.1. We all know the VIX historical average is 19.5. That's that dotted line right there. Mm-hmm. So again, you can see the years that we were above that historical average in the red there, and you can see the ones where we were below that in the blue. And so this kind of tells you how volatility tends to cluster. I think when I did this slide, I don't know, back in a while ago, I've done the slide a couple of times, but I know earlier this year when I did this thing, it was the average was like 21 or 22 for this year, but it's calmed down some here. So
calmed down a lot, and that's why premium selling has worked so well. Any rally we've had in volatility has been met by volatility sell-off. So it's why we've become geniuses in the genius camp this year. Too. Nobody knows what next year is going to bring us. Can you have next year's slide ready for us?
No, I got that on the next slide. No, I'm just kidding.
We ran out of time. Otherwise, we would put that slide up. We're going to have to take a quick 90-second break. We can't give you the answers to next year because we have to get to the opening bell. We're going to take a quick 90-second break and come back. Jamal, that was really good stuff, man.
Yeah, that was awesome.
Thanks.
That was really cool.
Merry Christmas, Happy New Year, and all the other things to you and yours. Peace.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Nikki, we are back, son. The opening bell here is imminent in less than a minute. Great timing by Jamal and the team. E-mini S&Ps, they were just up 12 a moment ago when Jamal was signing off. They went to up 4 in that little 90-second break we had. They're back up 12. Expected move for the day on the E-mini S&Ps is around 36 handles. NASDAQ is up 95. What do you think about today? I mean, yesterday we were up 40 handles. Let's just go basically where we opened yesterday. We opened around 45 handles higher, went up to 80, came back down to the opening price, went back up 80 handles, came back down. Some good two-sided action if you weren't caught on the opening there in the market. What do you think about today, though? Maybe a little bit tighter range, maybe market
for sure
highs on the opening, although volatility is anemic here, down 30, trading 18. There's your strong bell.
And there's
son.
our bell. Yeah, there we go. I imagine we pin this 68.50 mark for basically the entire session. I mean, we have been here all of December. You have a massive expiration today. You got to take out a lot of that vol premium. It's going to be pain for the bulls and the bears today. That's what this is. It ends a week of pain. You know, nobody was right. You had two-sided action. Everybody probably loaded up at the bottom and loaded up at the top. And today is where, Mr. Market vaporizes you. That's what it feels like to me.
Well, even the S&P is catching a bid here, trading the other highs up 22, highs we haven't seen since we've been on the show, made last night. NASDAQ up 135, traded over 25,400, 4,001, about $6 off of that right now. Russell up 8, Dow up 160 or so. Volatility under 18. Bonds volatility signaling, we're here or higher for the day. I actually think we might sell off a little bit here, but what do I know? Bonds are down 11. Volatility is not telling you we're selling off at all. Bitcoin up 3,200. I think that was the catalyst to the rally last night. Bitcoin sold off yesterday, has been strong all night, with Ethereum even stronger, up 6.5% versus Bitcoin's 4%. Oil up 50 cents. Gold basically unchanged. Silver back up 1.5% to 66.28, just a skosh off of its highs, evaporating your profits that you had there. You now do not have those profits. How do you feel about that?
It's okay. It's okay. I just closed out of the Oracle puts I sold yesterday, and I sold out calls against IBIT again into this rally. I think, if we're going to see a repeat of what we saw for the last month, it feels like, I'll be able to scalp those calls at the end of the day today. So
you're anticipating?
I'm anticipating. I'm anticipating that being the case. We'll see if that happens.
Good on you. Good on you, son. Good on you.
Yeah.
What else do we have here? Take a look at the market. What's moving this market? We'll go to look at it. Even the S&P's up 30. Couldn't be wronger. More wrong on my call.
Wronger. I like that.
Wronger. I wasn't not longer enough. FedEx for earnings down 13. Nike down 6. FedEx was basically unchanged all morning. Down 13 for the opening. FedEx down 6 or 7. Home Depot down 3. Costco can't catch a bid, down 2 these days. And then they're all small, with Starbucks down around $1 or so for everything else. The upside here is big. And look at it, AppLovin. AppLovin up $40 last week. I mean, it looked like it was earlier this week. It looked like it was selling off on Monday and Tuesday. It came back now, back to its highs. A horrible product to trade, but a big mover. Horrible trader in options to trade. Oracle up 10. We need that. You need that. Back to 190. It got as high as 191. AVGO up 6 and change. PDD, some of the Chinese stocks catching a small bid. Qs, I'm going to mention them. They're up $5. They have a dividend. A lot of X's have your dividend too. So make sure you take care of that.
Yeah, I closed out of those CoreWeave puts. I think we did that on like a what's your assumption or something last week. Not quite 50% of the max profit, but we took like $90 out of them.
Okay, good.
And I mean, that stock, there's been a lot of, news kerfuffles that have been going on in that whole space. It's had about a 10-point rally in the last, 2 sessions.
Uh-huh.
So I figured I'd take my money and run there. I also closed out the call spread in Nike. I'm holding the puts, the 62.5 puts. I'm out about $100 on that trade. So I think we just kind of sit with it, see what happens here. It's basically an in the money put cover call. So I don't mind being a little bit long delta there into the lows.
Okay, very, very, very good on you, my friend. Let's take a look here at what. Let's see if they have the dividend out on SPY. Yes, the dividend
$1.60 or something. Was what I was looking at.
$1. It looks like $1.99.
Oh wow.
Yeah, you can see that on the SPY. You can see that on the right-hand side of your gutter there under dividend. It shows $1.99 dividend. So really, when you're taking a look at this SPY, having a good day today, up 370.
Mm-hmm.
I got nothing else to add, son. I mean, nothing to add. We got fast market coming up here. Surprised by this market. Key on volatility is down 40 cents /VX. And again, Jamal's slide, this slide, a reason why you can't inventory volatility. I mean, it costs you thousands per month to inventory it, to wait for that pop if you ever get it in volatility. That's why we say let the market beat you and just keep your size intact here. Leader in the clubhouse, up around 0.5 to 0.75% is the total market. 5 minutes into it, I'm going to take a look at this and say highs are in for the day. So
you want to get our SPX trade on? I don't think we go anywhere from here.
Sure.
You want to do we'll do like the 75. We'll do like a 25 delta.
You don't want to look at these AM options, right?
No.
Those are the ones that are going to expire now. That's AM. That's why all those options are white. You want to go to these weekly options where they're trading. They're green and red.
Yeah, I'm doing like the 20-ish, 22, 25-ish delta.
What's your short strikes?
68.40 and then 67.75 and going $15 wide.
Okay. I would skew it a little bit to the downside myself. Maybe move it down to the 68.35, but you can do whatever you like. It's your trade.
Yeah, filled.
Hoping to get filled. Even the S&P is up 27, 28.
All right. So we got 535 on that, and I'm gonna put a order in to close it at we've been taking like 75 cents out of these, so I'll put it at like 460, and we'll play for some sideways chop. I think we're gonna sit here 58.50. I think that's the mark for the day. That's it.
All right, very good. You know what we're going to mark here for today? We're going to take a quick 90-second break. Does that sound good to you?
Sounds fantastic.
Let's take a quick 90-second break because we got fast market coming up next. And when you got fast market coming up next, our viewers have come and they have told us what they want to trade for fast market. We're going to do it in our account. We'll be back in 90 seconds. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Nicky, we are back, son, and you know what that means? Time for a little bit more Tasty Live. That's right, we've got Fast Market. I was premature. You were a little slow.
Yeah, I was a little slow. It's okay. It's all right.
Even the S&Ps aren't slow. They're up 31 handles, trading near their highs. NASDAQ is up 180. Volatility still in by 40 cents, 1790 going into the weekend. I'm going to say this is the low in volatility that we're going to see going into Monday. I think that it doesn't go any lower going into the weekend, but we shall see. Bonds are down 12 ticks to 115.11. Bitcoin hanging in there, 88 and change, just about 600 off of its highs. What are you doing here in the queues?
I had a call that was left over. I think this was an H. Montero trade where I did a 1/3 ratio, long February, the 625, short 3 of the January 645s. It's basically a diagonal spread, but I scalped the short calls for 79 cents a couple days back, and I just closed a long. It nets out to about like $300.
Beautiful.
So profit. Nice little trade. I mean, it's just, you're getting the move today. I've got a little bit of short. I want to get a little bit of short delta into this move. So taking off a call that has 40 or 50 deltas because it's right at the money is a way to get short delta without actually adding short delta. So I'm not putting risk on to get short delta. I'm taking risk off to get short delta
and leaving more of a directional trade.
Yeah.
Really nice. Good job out of you.
Thank you.
You're welcome. You're welcome.
I mean, the diagonal spreads, it's a cheap way to play it. You can hold that. It was an $800 in total risk, and it moves 50 or 60 cents against you on the down days, and then you get a little bit of a move in your direction, and it moves $3. So
Oracle having itself a little bit of a banner day, up almost $13 here, trading 192 and change.
You're gonna take that money and run?
You know what? I have a $2 profit. I've had probably $2 losses in it. I'm probably going to try to take my profits here There you go.
You could close it and roll to February if you wanted to keep the position on. I mean, you kind of.
You know what, son? I'm a simple guy. I had a jade lizard on, which was a directional upward bias. I really didn't get the upward bias right. I'm gonna take my $1.50 or 60 or so. I wanted to make $3 on the trade, but you know what? The end of the year, I'll just take my profits and run in Oracle. Thank you very much. It's in between my two short strikes, my short call spread, and my short put. It's not the greatest markets in there. They're I like the way you've been trading it on kind of buying dips by selling puts or put spreads rather than having the three-legged spread. Next time I trade Oracle, I will look to do that instead.
Taking your ball and going home. I respect that. I mean, into the end of the year, taking some risk off. I like it.
It's been a worthy adversary.
Yes.
But, it got slayed.
Yes. I like it.
Yep.
Cool.
Good job out of you.
Good job out of you.
Let's do it. Fast market. All right, let's do it. What'd you just do now?
I had I'm long stock and then short the 27 calls, and I've sold puts against it as well. So I'm like wrapped around this, kind of like what we did with Hut yesterday, where I'm basically a straddle, but it's with a combination of stock. And so you've had a little bit of an update today. I closed out of one of the puts. I took like 30 or 40 cents out of it. It's small. SoFi is a $20 stock. So, you're selling the options at $1. They move to 80 some odd cents, or you sell them at $1.20 to 80 cents. That's, 25, 30% of what you can make on it. So I just figure I'd take some of the long delta off there too. Again, another one where you can get synthetically short delta by taking off long delta.
Very good, my friend. Good job out of you.
Cool.
Let's
next first one. Sorry, I didn't get to that one. MSOS. Okay, this is the pot name. Can we go back? Yes, there we go. MSOS trading at 530 had a huge move yesterday. It's kind of in the news cycle right now. Sold the news to the tune of 25% after Cannabis Schedule 3 effective executive order, I should say. It's a small product, so I'm looking to sell at the money puts to be assigned what is essentially a call option. So basically, and this comes from my peeps on Reddit. Shout out to our Reddit community.
Nice.
Throw that one out. What do you think of this? You want to sell both options trade at 50 cents. So you could do either.
It's a hard to borrow stock, right? It's a $5 stock. Do I have this correct?
Yeah. What about just buying some stock?
Sure. I mean, it's a $5. If you're buying stock, it's a $5 option that never expires. I look at this stock and I see a $3 stock trading at $5. But if you want to get long it into this noise, you certainly can.
You come on. It's in the news cycle. You get a Trump tweet, and this thing can move $1 to the upside, and we'll take the money and run. So we'll buy a couple shares of stock.
So the January 5 puts with an expected move of $1 are trading at around 50 cents. So by you buying the stock, you're risking about 2-to-1 versus selling the put for 2-to-1 upside risk. So it really is a 50-50 shot on buying stock. So
yeah. Sure. And the reason I don't look at those puts is because they're not going to move. Like if you get that $1 upside move, those puts might go to 45 cents or something like that. Like you've got 125% implied volatility. So it's priced in that the $1 up move could reverse by the end of the day. Like you got to kind of trade this. And so I want to trade it delta wise. And I think, looking at this, I understand the idea of selling puts to be, potentially assigned shares at a lower cost basis. But I think if you're going to marry this position, that's an interesting idea. If you want to just trade this little binary event, I think you got to just buy the shares and not worry about the premium, short premium, right?
Yeah, I guess I didn't like buying the binary event. By the way, you're out 3 cents already.
Oh God.
You're unchanged. You're unchanged. You're unchanged.
Oh, okay. Thank God. All right.
Next one, please. Hey, if you're gonna take a shot, this is a cheap shot.
It's come on. Gotta.
What are you doing here?
All right, so Drew's looking at, so we got I didn't even know we had PC today. No drama expected, regular 0-day, $20 wide. We did this right near the open. I'm with you on this. I think we chop around this spot. We've got our current position. Let's see what that's trading at right now.
You're basically unchanged. You were a couple of cents profit. Now you're probably a couple of cents loser.
Yeah, it's marked at 530, so we're right there.
Yep.
We're with you though. We did the 75, the 67, 75, 67, 60, 68, 40, 68, 55. So we actually did this when the market was, or when the E-minis were a market, S&P was.
Even the S&P's up 43. I didn't see that happen.
It's up about 10 points from where we put this on, but the spread hasn't moved.
That is correct. That is correct. The volatility by about 10 cents where I said it would never go.
Yes.
Next one, please. Going long nat gas. They're trying to hurt you. They're like, he doesn't have enough silver exposure. Let's get him in nat gas. Although this is a put spread. Nat gas, what's it doing today? /NG is up about a third of a percentage point, 1.5 cents. Not that big. Nat gas has been on its butt right at or near recent lows. What do you think here?
I like this. I mean, you've had a pretty decent sized down move in natty gas here. It's basically a 50-50 shot. I mean, you've got an IV rank of 74 and change here. I like it. I did the exact strikes from Hunter. I like it.
Right now, please remember the future that you're trading is trading closer to 3.6.
Yes.
When you're doing this, not where nat gas. That's where the future is already rolled. So it's the one that's disseminating on your screen. Just watch out; those 7-day options are not the nat gas future that we're trading the options against right now.
Yes, good call out. Good call out there.
Yep, kind of like a public service announcement.
Yes, that was great.
You do all the trading. I've become a public service announcement guy. AMD, what are you doing there? You're closing something.
So we did I think this was a fast market trade where we sold the put and did a call ratio spread. The stock fell out of bed after AVGO earnings, and I bought in the risk on the ratio that we had on the upside that we did for basically no credit. I mean, when we did this trade, we did the so we did the whole package at 405. And then I bought in the risk on the upside for like 70 cents. So that puts you at a basis of like 350. I just bought back that call or that put at $2.50. So I've closed the position and taken like $100 out of it. And now I have this upside butterfly kind of lotto ticket on the upside that, is I own it for like an 80, or I have it for an 82-cent credit. So it's basically.
I mean, you're basically trading here, right? I mean, that's what
we do on Tasty Live. It's a trading talk show. We've been doing it for 12 years now, I think.
15, but who's counting? Some would say the first few years when we were trading really weren't trading well, so maybe.
So I don't know. I'm just kind of trying to play around with these. The stock's up $10 today. If you're short puts and they go from $4 to $2.50, you got to take some risk off the table, I think, right?
Yeah, I think so. Good job out of you.
Cool.
Beautiful. Next one, please. We're at this one. Sorry. ETHA.
Oof.
Crypto's at a great price. Not anymore, right? I mean, that was yesterday, and I hope you bought it. ETH up almost 7%, so great call on them. And it does have a sick IVR, 61, meaning it's high.
Yeah. I am long here. I'm going to entertain this. with some 21 strike puts at $1.
Mm-hmm.
30 delta.
We're pulling for you, is what you're saying?
Yes, I'm gonna put a small little Johnny lot on there, and we're gonna add a little bit of long delta.
Wow, into this up move. You are a trader's trader.
Hey, listen, you know
what? It'll show people what to do when your entry's not right.
30 delta puts at $1.02 into January. I'm with you.
Good. This will just prove
Thank you, Parker.
You can only help your entry. Can't do anything about the rest of the time, and we can work our way out of a bad entry. Good job out of you.
Yes.
You certainly supported Parker in Lubbock, Texas. I've been to Lubbock.
There we go. Thank you, Parker. I'm with you.
Thank you. Next one, please. Oh, you're a long trade, you say? MES. How about in the micro? Sell a strangle in MES and roll as long as you can. Selling a strangle is not a bullish strategy, right?
No, but I mean, I think Mikey's gonna do this next year as kind of like a core position to use the micro futures, just because it's a little bit. You got a little bit more leverage. It's still very small. The liquidity isn't great there. But
it's gonna trade lockstep with any other future, right? Futures options. MES is the micro S&P 500 future, so it's going to trade at the same price as the big future on the options here.
Yeah, I am going to pass on this, but if you are just getting started and you want to get into a futures trade, this is probably a good spot to go.
Okay.
So,
good on you.
But I like it.
But you're going to abstain for right now.
I'm going to abstain.
Okie dokie. Next one, please. We're looking at NVIDIA bullish. I mean, I'm going to imagine NVIDIA's up this morning with everything else, right? Yeah, NVIDIA
$5,
$6, $5.70.
Yeah, I am. Okay, so look, everyone's freaking out about AI competition, but NVIDIA's fundamentals are rock solid. Price just needs to consolidate. This is our entry, thinking June zebra for the long haul. Okay, I like this. I think, and I love that this is a trade submission, because if you are in a, and this goes to what you you said in confirm and send, everybody has capital limitations and everybody's looking to get a little bit of relief on the cash secured position.
Sure.
This is a great trade idea for somebody that, has a little bit longer duration time horizon, but wants to get that kind of full exposure, right? So this zebra is probably going to use $2,000 or $3,000. It's going to be an expensive zebra from a dollar value, but relative to an IRA account or a cash account where you're, to buy 100 shares, it's going to cost you 17, 18, 19,000, depending on where the stock is trading. It's at 180 right now. So it's going to cost you $18,000 to buy 100 shares. This is a great trade for that person that wants that. Taylor, I am with you. I am long NVIDIA. I have some call diagonal spreads. I've been scalping puts there. I think, this has been a spot that has kind of been, a good entry, at least for a, couple points to the upside. So I like this. I like the story. I'm with you. I have it on in a little bit different way, but I love it.
All right. Well said. Good job out of you. Next question, please. QS. Oof.
Oh no, they're trying to get. They had me in this a couple weeks back, and I scalped these puts for like 20 cents or something.
QS only up 20 cents. A virtual sale for you. I mean, basically fire sale.
Yeah. You want to do the 12 puts? What are we doing in January? So this is like a synthetic cover call.
Mm-hmm.
Oh. I don't know if I want to test my luck with QS again. Ivy rank at 42. It's high, but I think it's been higher. You've got an 87% implied volatility. I think my MSOS shot trade is the one that I'm going to roll with here. I'm not gonna double down on the meme shot trades.
Okie dokie. Makes sense to me.
So we're going to pass on that one.
Okay.
But thank you, Blake.
You're allowed to pass.
Yes.
Bullish. I mean, I love our group here getting bullish into this, whatever you would have called yesterday and the day before downtick yesterday and uptick. Coin up 370. But coin was lower yesterday with Bitcoin going lower too. Traverse City, Michigan. Have you been there?
I have.
I know.
Traverse City is a great spot.
Yeah, well, give it a little shout out.
Beautiful little, very quaint town. Like one of those towns that has like a fudge shop. Like you go to you pass through there. Don't make it mess, okay? You get like the candy shop. Like a homey candy shop that's been there for 60 years, that makes their own, homemade candy and fudge. That's what a Traverse City is.
Okie dokie. All right. You like to get the fudge.
Garrett in Traverse City. I am short the 230 puts. And we have a call ratio spread there too. E-mini's up 56 now.
Unbelievable. Definitely more than I thought was going to happen. The market actually wanted you to lean a little bit short when the E-mini S&Ps were up 35 or 40. Good thing you didn't. And volatility in by 65 cents.
Yeah, this is Santa finally here?
If he is, he's early.
What do you think about like maybe adding another put on the downside? You don't like it?
I mean, you can. I mean, I know we're up $3.50, $3.65, but we are on the low end here.
Yeah.
Ivy rank of 11. Maybe a put spread if you're going to do this. That would be the way I would look at it. Much slower moving. I know what you're trying to do. You're trying to scalp it.
Yeah.
If you're trying to scalp it, sure, go for it.
You want to do like the 220, 200 for $3?
You're doing this in Jan?
Yeah.
Yeah, you go a little bit shorter dated. That would give it's $3.30 mid price. I don't know where you're gonna get filled.
Yeah. Reduces a little bit of buying power, caps the risk on the downside.
Yep.
Let's see if we can do that. I mean, he wants to do a poor man's cover call, so it's a little bit more capital intensive. I already have, a put that I sold at I think $6. It's marked at 8. It's about a 30 delta. So, adding this put spread that's another 12 deltas puts me at, roughly 50 delta per position. It kind of
bigger than you would have been on a Jade Lizard here, right? Or a poor man's covered call.
All right, I'm in 340.
Very nice.
So I mean,
that's why you got filled.
Yes.
Because you got filled in at your price, which is good.
So we're with you, Garrett. A little long delta. Andrew in Puerto Rico, silver and gold are overdue for a breather. GDXJ, which is the junior miners, at a 75 IV rank is juicy. The 100, 125 January strangle. Whew.
Oof.
Oof.
I think you got the gold silver pair on.
I do.
I think you got enough exposure there. I mean, GDX up $2.80.
What about doing a call ratio?
In GDX, Jay?
Yeah.
Sure. Up $2.
They're saying that they're,
good ID rank at all-time highs, call skew, it sets up.
Yeah, and they're playing they're saying, overdue for a breather, which, I know that the trade here is looking at kind of a short vol trade, which I think will happen if you do get a breather in these stocks, meaning if these stop or if the metals go down, they typically see volatility contract. So I think this trade will definitely play for that.
You're going to hate the markets in GDXJ, and I'm going to predict that you don't make the trade.
Oh, yeah, those are crap. Yeah, I mean, you have $5 wide strikes, which they'll probably open up dollar wide once the December expiration rolls off. So maybe we look at this next week. But yeah, you're right. They're tightening up a little bit, but I think there's just like one little order that's in there that's moving the market from, 125 to $2. But yeah, these are 30, 40, 50 cent wide bid ask spreads. And even when you get further out on the tail, I think just because we've had such a massive move, these options just have very little liquidity. You can't trade those. I agree with you.
Since we're talking about gold, a gold IV rank of 41 is high. Let's take a look here just to see what I'm gonna get to why I'm looking at this. Let's go to the high option volume list if we could. Let me do it on this platform. I'm sorry. Let's go to activity. Let's go to here we go. Let's go with GLD. Give me a moment here. I'm going to make a whole story for you if I can come up with something. Let's see. GLD. All right, here you go. GLD, it's up 41 cents over the last 5 days. Volatility has gone down just a skosh, about half a percentage point. IV rank of 41. My Taiwanese sources tell me that 65,000 gold options have traded already, which is almost a normal full day's trade. Wow. A lot more than the open interest. Meme kids trading gold options is what they're saying here. That's my Taiwanese sources. Now, here's the interesting thing. At least in GLD, I'm not looking at /GC, but at least in GLD, volatility is high, not expanding with that kind of volume and this kind of move. Maybe it's getting a little bit exhausted. That's the way I look at it for volatility skew in GLD. I don't know about price. Like the skew itself might come down, opening itself up. Instead of in GDXJ, maybe in GLD, you could put on a position in January where the markets are a lot more favorable than GDXJ. Let's put.
You want to do like a butterfly?
You could do a broken wing butterfly if you wanted to, or a 1x2 call spread if you wanted to. The expected move for all of January, if you still want to stay in January, is $17. You can go out to say something like, like the 415, 420 perhaps, $5 wide, and still get yourself a $1.70 credit, and then move it as much as you want to. You can move it higher or lower just to go the same $5 wide. You can do the 1823, and it looks like it's like a $1.40 or so. All I'm saying is the call skew seems to be quite high, so you can make your spread wider.
Yeah. What do you think about like the 405, 415? I know it's closer at the money.
Yeah, but you go a lot tighter, more directional.
Well, no, this one's a wider one. So this is $10 wide. I mean,
you're going 405, 415.
Yeah. So this is more of like neutral. You're trying to play into that kind of vol contraction with a closer at the money option. The email or the trade idea was kind of for a vol contraction / down move type situation. This one might, kind of play into that a little bit.
I agree with you. I like it. You're really not trying to make the 80 cents on the credit here. You're really kind of hoping for a small move higher or a stair stepped higher with volatility contracting where it kind of goes into the belly of this spread where gold, which is trading under 400 GLD, 399 and change, walks its way up to 37, 38, 39, 310 in the next 3 weeks.
Yeah, or if it just stays where it is and vol contracts, where you get kind of that call skew to come in on the upside, but the at the money option holds its value. It's your risk is obviously a tail event to the upside, but you have no risk to the downside, which is great.
Yep. Good job. High probability of success, 86%. I mean, it's hard to argue with that if your logic, meaning your background, is the same as what we're thinking.
Yes.
Thank you, Andrew, for bringing that to us in Puerto Rico. Appreciate it. Even the S&P's up 46, by the way.
Cool.
Last one. Yeah, last one is right.
Oh God. 6J.
/6J down 1, and let's round 1.25%, which is 785 ticks and a new low in the yen. That's the only thing I got right 100% this year was I never bought any dips in the yen. Because I'm the world's worst commodity trader, and I don't want to mess it up for everybody else. I was actually hoping you would get a little bit of a rally, but even with my help, you guys can't do anything in the yen.
What about doing like an at the money call spread?
You're all on your own here.
It's just such a pig.
I think it's a crowded field, but you're all on your own.
All right, we'll pass on this. I agree. I feel
that's a sign of maturity right there, ladies and gentlemen. If you wanted to see somebody maturing right in front of your eyes, there he goes.
I'm a people pleaser. I want to do the trades. I mean, nobody knows anything, but I feel like the one thing I do know
is you already have positions in the yen that need the yen to rally is what you should know.
I know that for sure. And I know that anytime I trade the yen, I lose money. And so I know my shortcomings. Okay, I'm a mature young man here. I understand my shortcomings.
And your shortcomings are many, right?
Yes, there are many.
There are definitely many. How many did we get done here? Let's take a look. Wow, not quite, right?
Not quite. We had some on already, but we passed on the MES and the QS and the 6J, but I already have the 6J. So we'll call it an 8 of 10.
I would call it an 8 of 10 too. I would call it overperforming. I would say good by you. Gold is up $11. 43.75, trading near its highs, up a 1/4 percentage point. Silver up $1.26. Not at its highs, definitely not on its lows of 64.5, $2 over that. But your ratio, by doing the pairs trade 2-to-1, you're basically, are you unchanged on that? Let's take a look.
On the gold ratio?
No, you're down.
Yeah, I'm down.
You're down about $200 on that, right?
Yeah, like 150-ish. It's moved about $100. You know, I in my favor, and then $100 against me is kind of where we're at right now. I mean, the velocity of the move has just been way bigger in silver. So it's, you know, you're not that, which it should be expected because silver volatility is twice that of gold. So
yes.
You know, at some point, if silver stays where it is and gold has a small rally, or silver comes down and gold stays flat, that's kind of what you're looking for here. So
very nice. Good job out of you. Good job out of the team. Good job out of our viewers for supplying us with those fast market trades. We need your help, so thank you very much. Nikki, let's take a quick 90-second break. Even the S&Ps the market has not had a downtick on this Friday, with even the S&Ps up 47, back near its highs from yesterday, 68.77 or so, where it's failed a few times from yesterday's rally. Let's take a look at that real quick before we go.
We need like a 5 or 10 point down move. If we get back to like 68, 65 ish, like a 10 point down move, I think our SPX trade will get taken off the table.
Our highs from yesterday, 68.72, where we fell from multiple times. We'll see what happens with the market right now. Volatility, key on that, down 60 cents, 5 cents off of its lows, has been depressed all day long. We'll take a quick 90-second break leading to this rally, right? I mean, the volatility, if you really paid attention to volatility never percolated on the way down. I had a little bit of long delta. I did not add to it. I thought it was a scary move lower. Volatility told you had nothing to be scared of, and volatility was right again. We'll take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next?
Market measure, of course.
That's right, Boo. Let's take a quick 90-second break and come back with that.
Cool.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means? We've got a little market measure sponsored by the SIBO with the E-mini S&Ps doing their thing up 50. Oh, what are you covering? Some Baidu puts?
Yeah, we did that strangle. When did we do that? On the 12th, we did the 120, 140. I scalped out of the 140 for $1.02. It's marked to like $1.40, so it saved me like 40-ish cents on that scalp. But having a $3 rally today, I just closed it out for, it nets out to like $120.
Very nice. You made about 20 trades already today. You've been doing real well, so good on you, my friend.
Yeah. You got low, volatility for the market as a whole compared to Baidu. Baidu does have higher volatility than most, but I get very quick with the China stocks. I don't find my trading there to be very,
not long. It's not for a long time. It's just for a good time.
Yeah, I think when we put that on, I even mentioned like the
it's not girlfriend
rule.
Material.
Yeah, it's not girlfriend material. So it's out.
It's would you like to have a cup of coffee? At Starbucks kind of material. Maybe we got something going.
Yeah, it was good.
It's just a release.
Yes, we're gonna be gone.
Yes,
that one. So
got it.
Beautiful. Yeah, cool.
Good job out of you.
Thank you. Good job out of you. Couldn't do it without you.
This is way too nice of a show right now.
What do you mean? It's always nice. Come on, father, son. This is family. You're all I got.
Unfortunately, you can pick your friends. You can't pick your father.
Yeah, that's right. You know the rule. They always know the mother, the father. There's questions always. You can't really be sure.
This is nobody knows that better than me.
It's true. It's true.
Oh boy. Okay, market measures.
Yeah, sorry about that. Sorry.
Even S&P's up 46.
What's our SPX at? Are we close?
I've been watching it. It hasn't
it's like 490. It's coming like 50 cents.
Yeah. If we stay down here, or maybe even the S&Ps go down 4 or 5 handles, you'll get filled.
Yeah, that's what we need.
Need a little time and maybe a little bit of weakness in the market, but even the S&P's up 40, 45.
Cool. All right, let's do it. So we're wrapping up the past 5 days of our 12 days of trading email campaign that we've been doing. It's been getting a lot of love from everyone, of just, cool, actionable content, some stuff that is tasty trade focused. So we've been sending out all the demo links and stuff like that within the email. So it's been a great, we've covered a wide range of topics, from strategies and market concepts to account types like IRAs and cash accounts. We've talked about some of the features in the platform, like the capital requirement feature. We've done a whole lot with this series, so it's been a fun little exercise. Hopefully we'll do more of these into the future, not just for holiday events, but here's a quick little recap of kind of what we've gone over in that email series. Let's get into it here. So the topics this week, we talked about volatility. We had a New Year portfolio reset. So we talked about kind of, resetting the portfolio. We had a whole discussion on that. We did some of the trading tools. So you had the capital requirement feature that we showed yesterday, which was a great feature. Tex and Quentin had the demo that they did that is also on the Tasty Trade YouTube channel. So that is up now. They've been uploading those. I will actually post that into our Tasty Live chat room here. I'll give that to Frankie to post. Hold on, I will do it.
Look at you doing customer support, doing the slides.
It's a great feature. It's something that, a lot of customers use, a lot of people use for risk analysis. It's a tool that our risk team uses to look at your positions if you have something going on or if you need help with something. It's a great way to kind of analyze your position, see where your risk is, see how much risk you have on. A great feature. So give that to Frankie. He'll post that in the YouTube chat. We talked about risk management. We did all sorts of workflows throughout the week. So we're going to get into it here. So let's get to the next slide here. So we talked about like kind of just macro catalysts here. So we talked about.
There you go, son. They just.
We got a 4 or 5 point move down and got filled on that SPX.
Yeah, and they're crushing volatility. It seems like at this moment right now, even the S&P's up 44. It really hasn't moved that much. It got filled at 460. It collapsed 30 cents in really about 2 or 3 minutes that you were just on the show.
Yeah, it was just that down move that really gave it to us.
Yep.
So talked about, rates, inflation, all that stuff has been kind of a catalyst, and just volatility itself. So volatility tends to cluster. You got to keep in mind that it's not always going to be this low. You do have those spikes. Talked about the VIX term structure. So we wrote about kind of contango and backwardation. Contango is what you are typically in, which is considered like the calm. It's where back month volatility is actually higher than front month volatility. When you get into backwardation, that's when kind of stuff starts to get crazy. That's when front volatility is higher than back month volatility, where the fear today is more than what is feared in the future. You typically have more fear into the future because there's more uncertainty, more time and whatnot. And so we gave you a quick little discussion on that. Getting to the next slide here. So we talked about like the IV and volatility and just volatility across the curve. So, we talked about checking IV rank. You want to see above 50. That's typically like the higher end of the vol range. Of course, you can't sit around and do nothing all the time, but it does change the strategy when volatility gets low. We've been doing a lot of, cover calls or at the money debit spreads or diagonal spreads, calendar spreads. Those are kind of the lower vol regime trading strategies. So we walk through a lot of that and kind of talk through that through this email series. Getting on to the next slide here. So we talked about portfolio reset. We had a bunch of questions about tax loss harvesting and, do you kind of take things off the table to get a fresh start? Some of the things that you can do is, close out of underperforming positions. This tax loss harvesting is more applicable to stock positions, but, just in general, taking off positions that haven't worked, you start fresh in January with a new P&L set. So, that's part of kind of the story here. January does tend to be kind of a high volume month. Everybody is doing the same sort of thing, resetting, starting new longer duration trades. So just keep that in mind. You do tend to see a lot of liquidity come into the market in that January month.
That is true. That is true for sure.
So next slide here. Sorry, we're not done with that one. Take my slides away.
Come back. So we get to the fifth slide here. We'll go to the next one. So we talked about a bunch of tools that you can use and that will help you better understand your portfolio, your risk, trading in general. So we talked about the order chains. So we've done this in life cycle of trade. I use it all the time on the show here just to track your orders. It helps you understand where your position is from a net perspective. So all your positions that you roll and manage and adjust, it kind of buckets them all into one chain, so you can kind of see where you're at. We also talked about bracket orders. So using bracket orders to define risk. We use the GTC order for that SPX trade that we just got filled on. It's a great feature if you want to kind of set it and forget it. We don't use it personally on all of our trades, but it's great to have for those short-term trades. If it helps you sleep at night, I think it's also a great tool as well. We talked about watch lists, so they help you, see where we use the high option volume list, the S&P 500 list. These are kind of like where you can start seeing what is moving, get some trade ideas. You can sort all these things by a variety of metrics, from IV rank to percentage change to implied volatility to, earnings dates. Like, you can put all that kind of customizable, and that was all kind of outlined in this campaign. So getting over to the next slide here. We did just general risk management stuff. So we talked about capital requirement feature that's in the platform. Frankie will post that video if it's not already posted, but that is also on the Tasty Trade YouTube channel, not Tasty Live. It's on Tasty Trade. We got to keep those things separate. The Chinese wall that separates the beautiful thing that we have going here. But you can check that out. That's a more in-depth analysis of the capital requirement feature. We also did it during the show yesterday live from the trade desk. If you want to check that one out, just a great tool, and you should definitely, be looking at that from time to time. Next slide here. E-mini is only up 37 now, sold off a little bit. Only 37, yeah. Volatility in by 60 cents.
Yes. We talked about the risk management capital requirement feature is awesome. You should check out that video if you haven't already. It's a great video. Let's get to the last slide here. We talked about just a general workflow of mechanics of trading. This was outlined in the emails, looking for liquidity. This is stuff that we talk about every single day. This is all, right? So you start by finding something that's liquid. You want to, we look for high implied volatility. That's, one of the metrics that kind of gets us to the underlying. The next thing is the sizing, the directional assumption, the non-directional assumption. That's kind of the next part of it. You get to the mechanics, you want to understand gamma and volatility and margin requirements and how you are exposed to all those things. And then, the next thing is the risk. Are you doing this naked, defined risk? Are you being directional, non-directional? Those are kind of the next steps. And then, managing that trade, having an exit plan. We look for 25 to 50% of the max profit. If something moves quickly, maybe you take the money and run, holding that risk if you're okay with it. All those things kind of go into it as well. So we kind of gave you a little bit of a quick workflow there of how you can kind of look at your positions and your portfolio as a whole.
Nice. Good job out of you. A little bit of a recap piece there. I know you were worried, but the E-mini S&Ps were only up 38 or 39. They're up 45 again. So cancel that crash.
No, I think we get another 10 or 15 point down move. We are going to pin 68.50 today. That is the number.
More importantly, is the high end at 68.87 and change.
Yes.
I kind of agree. With you. Although volatility is pointing to a different hue or different color here, as volatility is down by 62 cents, keeping this bull market on its wings, keeping its wings up. One more question for you. Bitcoin trading 88,000. Is it going to have? Is it going to be a crypto Christmas, or is it going to be a Grinch type scenario?
No, I think it's kind of dead for a little bit, but.
So you're going Grinch after 88,000. It's 88,000 right now.
No, I think it'll sit here like around 85 to 90. I think that's the spot. I think you can kind of trade around that if you're, and I have been with those. I'm long IBIT, short the calls, and I've been kind of scalping around those. I think, you have to keep in mind that everything moves all at once sometimes, and especially in something like crypto where the liquidity comes kind of all at once. It's a relatively small product from a market cap standpoint. You think of this as an asset class, the whole space is, smaller than Apple or Nvidia. And so it moves all at once. And so there will be a moment where the consolidation and the chop ends and we move higher or lower, but it's going to be quick. I don't think this is a stair-step asset. So you got to be prepared for that.
I know you probably haven't looked, so I'm going to quiz you. Even the S&P's up 40. What do you think the settlement was in SPX? How many dollars higher or lower?
We settled probably at 6,800 on the dot.
Just about four handles off of that at 67.96.
Yeah, so that was 20 points off the close.
That's right.
Yeah.
Yep.
Makes sense.
Yeah, because even the S&Ps were up around 20. Remember, it's the opening of all 500 stocks. Now, some of them are going to open lower, some of them are going to go higher, some of them don't open for quite some time. But a lot of people are looking at, when you look at SPX today, up 47, they would have expected a lot more than, the $11 move or $20 move from top to bottom.
Amazing.
Let's take a quick, that's why it's so hard to trade the settlement price. You're much better off trading the 0 day that expire intraday, not the ones that expire overnight.
Yeah, I mean, at this point, the only reason why it's still a thing and there is because of the legacy. I mean, those options are probably way less traded than the day-to-day option.
No way. The open interest in the D19 options for expiration is huge. Remember
the AM expiration versus a normal day. I mean, we have.
Whoa! Remember what you're saying here. The AM options are the options that have been there for almost like leap options.
Yeah, but you got open interest of 10,000 contracts in the AM expiration. The 0 day options expiring today have 30K on each line. I'm saying the 0 day stuff is way more liquid than an AM settlement option.
The AM settlement option doesn't even trade today, yes, but it was the tradable option all month, is all I'm trying to say.
Yeah.
Okay. Let's take a quick 90-second break and come back. We got more Tasty Live. I think we got Q coming in. Anybody else or just Q today? Are we a one-trick pony?
One-trick pony.
Well, he better overperform. We'll bring him in about 90 seconds as Tasty Live.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower. What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
All right, yeah, I'll talk to you. There she is. Good, you found the place. Good, you're not stupid. I dated 3 stupid girls in my life. I loved every one of them. So maybe you're the next one. Having a good day? I'm having an awful day. But then it got really good again. Oh, good. So I'm feeling all right. Hey, where'd you go to college?
I went to
University of Penn State Community College. You didn't know they had one of those, did you? Yep, the Fighting Rams.
Oh.
I'm one of the Rams now. Do you have any sexual fantasies?
Excuse me?
I do. My parents are watching. They're sitting on a rainbow. I'm a half man, half giraffe, and I'm dressed like Brett Favre. What does that mean?
I don't know.
Yeah, talking about it gets me pretty hot, though. Uh-oh, there it is. His pants just got tighter. I'm a vampire. Can you believe that? Does that make me more mysterious and attractive? Uh-oh, watch yourself. We don't want to get hit by a car. My brother did that once. He can't talk now.
Oh, my God, that's serious.
Yeah, pretty serious. Are we getting serious? I think so. How many kids do I want? 5? 11?
Oh.
First meal. Here we go.
That was rude.
This is on you. So much time is flying by.
Yeah.
You're very funny.
Oh, thank you.
Does anybody ever tell you that?
Yeah.
Well, you're not that funny, so don't worry about it.
That's interesting.
Not a big fan of Sam's anymore. But now you know everything about me. I feel like I'm opening up so much. God, I'm scared. This thing's moving so fast.
Yeah.
Oh, wow. I haven't cried like this in a long time. Are these tears? Uh-oh, here we are. Front door. Big first kiss moment.
Oh.
This is just moving a little too quick for me. You're a great kid.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
son, and you know what that means. Enough out of you. Mr. Santa Claus himself, as E-mini S&Ps are up 52, trading near their highs, about $5 off of that. Quentin, my man, what's up?
Fellas, how's it going? How's it going?
We're doing well. Thank you so much for coming in, taking time off from the trade desk. I know you guys are busy there today with markets moving around, all week long, really. Good volume everywhere. Have you been getting a lot of gold questions? I know from the volume in GC and other gold-related products, it's been very heavy, concentrated there. Have you been having any gold questions?
Yeah, so recently we've been getting a lot of questions about like gold and silver, and we'll get a lot of customers that are more interested in like starting to trade the futures now rather than just like the ETFs and things like that.
Mm-hmm.
Yeah, you're able to
Awesome.
take a like better directional shot when using the futures for like intraday scalping, things like that, rather than using ETFs.
Awesome. Hey, listen, if you have a question that you want to ask, we got a couple of minutes here. If you want to ask it, or go right to the, if you're over there on Reddit or on the YouTube page, love to hear from you too. Put your question in there. Or call us, 855-238-2789 or 855-BE-TASTY. That's the number below. We'll have time for a couple of questions. If you call, we'll answer. But I'll let Quentin get to his list and tell us whatever he wants to do so we can make him get back to his busy schedule, and Nikki and I will carry on. What's up, Q? Give it to me.
All right, so it's been a pretty calm morning on the desk, despite it being, triple witching. We've got all the expirations today. It has been pretty calm. I mean, still busy, not too many calls on assignment, though, because we went over some of the dividend stuff yesterday with SPY. I think that helped a lot of customers. So not as many calls going over that. But I will say I've been having an okay day. But Marty, on the other hand, has not been having the best day. He was trying to send in an exercise request for someone. He sent it the wrong way. You know what he tells me? He messages me. He says, "Not my fault. The central scrutinizer was on centrifugal format, which caused rotational variance surplus." So,
he used ChatGPT to give him that response.
I think he just like sees things and, says them.
Yes, I like it.
But yeah, so I'd say for most of us, it's been a fine morning. For him, our dear friend Marty, maybe not so much. The central scrutinizer, that causes him a lot of problems.
Sounds brutal.
Yeah, all right, let's get to the list here. Top 20 symbols going through the system and their IVR. At number 1, taking the throne from Tesla. At number 1, we've got NVIDIA, 3, Tesla, 8, Oracle, 47, Nike, 23. Much expected for Nike to be high on the list there. Micron, 41, Palantir, 1, AMD, 16, iBit, 51, Broadcom, 12, GLD, 41, CoreWeave, 19, FedEx, 9, SLV, 82, TQQQ, 22, Robinhood, 13, Rivian, 60, Meta, 0, Amazon, 6, Google, 6, Rocket Labs, 34.
Nice list of who's there. NVIDIA, Tesla. I mean, Oracle up there because Oracle finally got a little bit of a rally, right? Oracle up 11 or $12. It's been anemic as of late.
Yeah. And we took off the Nike puts. You had a nice little bounce back. Nike rallied about $2 from the lows ish. So I just closed out the puts. We had the Jade Lizard. I closed out the call spread this morning, which doesn't really change anything. That call spread was basically worthless. It hasn't moved at all. But I just took it off because it was worthless. No point in having that upside risk. But with this little bit of a bounce, vol continuing to get smashed. That put was the trade as a whole was basically a scratch. So closed it, said goodbye.
Very nice. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. Give us a buzz. Q, I'll let you get back unless you have something to say before you leave.
I do have something to say. Tonight is
Please.
a very important night for me. So Alabama is playing in the college football playoffs. They're going against Oklahoma. I think it's 1.5. At least that's what it opened at. I think 1.5 Alabama's favored. We're going into Oklahoma and we're going to destroy them. You heard it here first. We are going to destroy them. Okay.
We're taking Alabama money line. I'm with you, brother. Let's go. You can't fade Alabama.
I mean, and also, I feel like it's the script, you know, because if we win, then we go to the Rose Bowl and play Indiana. I feel like that's the script. You know, you can't fade the script. I don't care how bad we've looked over the past few weeks. You don't fade the script. Okay.
I like it.
It was such a great. I don't know. I don't follow college football, so I don't take what I say with any. Don't take it to heart. But the Alabama Indiana game was such a great game. The next one can't live up to the hype. Somebody's going to blow the other team out. They're going to win by 14 or something like that. And it's going to say, all right, well, that team was the greatest team, you know, better than the first time they played, they learned, they adjusted. I would like to this year never see those two teams play and just keep the memory.
So I can tell you don't follow
as a loser in the game.
I can tell you don't follow college football because we haven't played Indiana. So that was Ohio State.
Who did Indiana play? Oh, Indiana played Ohio. I'm sorry.
Yeah.
Ohio State.
Yeah.
I was thinking Ohio State. Because isn't there a chance that Ohio State could play Indiana?
Yes.
Yeah, they can meet in the championship.
Oh, James has been on. James, you know what, James? You know what you're getting for Christmas? Coal, James.
That sounded like kind of like a whipping sound. Like
can't Ohio State play Indiana again?
They can at some point. I forget exactly how the bracket works, but it's either like in the semifinals or the Natty National Championship. But it would be us next if we win. And I feel like that's got to be the script, you know? That's what, you know, the ticket price, you know, what, like how you say, you know, you look at the market for where things are going. If you're looking at the ticket prices of that Rose Bowl game, you're thinking Alabama's going to be in there, not Indiana. So if the market's telling you anything, you know, hey, you got a good
Indiana
shot.
Travels well. That's a good fan base. Don't you get? You're on a little bit of a high horse here with your Alabama.
I will say, as much as I like despise
you're
everything
a New York
about
kid
the Big
for crying
Ten,
out loud. I mean, you know, let's not forget your roots here. I mean, you should be like Hofstra University or St. John's or something like that.
Yeah, well, yeah, but there's no like big schools in New York really like that, you know? And so SEC forever for sure. And as much as I despise everything about the Big Ten, I am quite surprised by their fan base traveling.
You're gonna get you make sure you're lucky Vanetta's not there right now. If she was in the office, she'd be
freaking like half of our, you know, company went to Indiana or whatever.
That's true.
But when we beat them, it's gonna be that much better.
Ooh,
yeah. Oh yeah. All right, fellas, you guys have a great rest of your day.
All right, be good, my brother. 855-238-2789 or 855 B-Takes is the phone number. Cole, you got a question from our chat or anything going on there, Nick? Or is there something?
Yeah, we got a couple people looking at SLV as a way to play this gold-silver ratio. Frankie posted that 11,000 of the 60 strike calls have traded today in SLV. So more playing for more of the squeeze to the upside. I don't know if that makes me feel good or bad.
This is open interest. Let me go to volume here. I'm not sure what month he was looking at, but let me go to volume if I can find it here. Here it is. You got 11,000 in January. Let's see if he's looking at February. No, not February. Could be at the money 0 days. No, not 60,000. Oh, he was looking at forward. You said in silver or in gold?
Yeah, no, I think in silver, in the 60 strike calls.
I'm not sure what he's talking about, but gold has had some big volume too. What do you want to do?
Trade wise,
he's talking about the rolls that are trading. Go ahead. I'm sorry. You know, because everybody, if you have January options that you put on last year and you want to roll to the following year, you have to roll out. More of an institutional type trade. But anyway, go ahead.
No, I got nothing. I'm working a couple orders here. I'm trying to close out of the AVGO 300 strike puts for like $50-$60 if we can get that fill.
Yeah, I've got a position AVGO that I'd like to get filled. Need a little bit more room in AVGO. AVGO up $5 and change. If it can go up another I don't know, $5 or so, or even $3, you got an expected move of $3 so far in the 0 day options, which are the ones that are expiring today. I'd be happy. Even the S&P's up 39. So far, your call in my call of 87 being the high, it's there. And Aaron, my buddy who writes me all the time, loves the number 6887.
Oh, okay. All right. I like it. I also got an order in to close that shop trade from yesterday. We'll see if that one gets filled. But
not the greatest markets in shop, but you're only 7 cents away, so you're pretty close.
yeah, I'm right there at 375, taking 75 cents ish out of that.
Yep.
We're trying.
Silver continues its rally, 66 and change. That ratio spread that we do, long 2 gold, short 1 silver, has gone against us. So at better prices now, if you haven't put that on, if you're interested in that kind of trade, if you're fading us and you put it the opposite way, good on you.
Yeah, you've been making money on fading us for the past about month. As
in the gold silver ratio spread, but we've been able to eke out a profit in it. But you've been in fuego everywhere else.
Yes, but the gold silver ratio has gone from mid 80s to now the lows of 65 today.
Yeah.
So it has been you've gotten bailed out a handful of times in between, but if you've stayed around on that trade, on the other side of our trade, it's certainly been a huge win.
Yep.
Huge win.
Yep. Most definitely.
We'll see, but silver up 2% right here. Big move.
2.5% in silver. Yeah, up $1.60 or so. Gold is only up around a quarter to a third of percent, up $13. Bitcoin hasn't moved. Trading 88.3 for most of the morning. Ethereum doing the same, just under 3,000 at 29.82. Oil up 17 cents after being about 30.
I got a couple questions for you.
Sure.
If you had a long-term, and this is from Too Much Delta in the YouTube chat, if you had a long-term sold put, so like your short puts, and it's say something like a 100-day option, further out in time, would you roll up for more credit with more time remaining? Like if you've hit the trade, you sold some puts, it's a little bit longer duration.
I've made my 50% or 25% of credit. Yeah. I see what you're saying.
Yeah.
Would I roll up closer to the money?
Yeah.
Get back to, if it's one contract, first of all, if it's more than one contract, I would probably close the 2 or 3 or 4 contracts and cut my size in half and roll a little bit closer as they're doing. If that's my assumption on the market going higher. If it was one contract, I would probably sit.
Mm-hmm. The other option you could do is take off the put and then buy an at the money call spread.
Yeah. We're both doing the same thing. We're both trying to get smaller on the bias. Yeah.
Yep.
Certainly agree. Certainly.
Yeah. Like if you made
Good question.
You made $2 on the put. You can take that $2 profit and buy a $2, a $5 wide call spread at the money, something like that, where it trades at $2 or $2.50. You basically keep your position on, but you take the risk off.
Yep.
So I think that's another one that you could do there.
Another question before we call it a day?
Any thoughts on Nike? We got some people with puts. Do you hold the puts as a synthetic cover call? Do you sit with it? Do you close it into this up move? I know we closed ours.
Yeah.
You think that's the move, or do you kind of?
Nike opened at 59.40, right about where it is right now. Only traded down to 58.70, about 50 cents lower than where it is. It traded as high as 60 and change. It's hanging right here at $60. IV rank of 20 is coming down. I like Nike as a directional play against all the probably with defined risk here. Some sort of vertical spread. If you look at a diagonal spread, if you want to go more in what Nikki likes to do, if you look at February has a 30% vol. And January now has a 30% vol. You certainly can do something diagonalized. I would be diagonalized to the upside, for argument's sakes. If you were looking at the 56s the 55s have a very wide market. I would probably go to the 57 and a halves. If you're looking to do some sort of diagonal there, selling January and buying February, I would do something like that.
Cool.
That would be my way of playing it. I mean, you're going to be selling a small one like the 62 and a halves probably. If you're getting some sort of directional risk, you got 33 long deltas on a spread like that. You'd be playing, you'd be trying to buy some time into some sideways action and then higher. That's the way I would look at it.
I like it. Cool.
All right, my friend, we're going to take a quick 90-second break. Market's still on its horse, like I tweeted out the picture yesterday. I got another picture I'm going to tweet out.
we got a lot of good ones in the chamber here that should get posted here soon.
Awesome. Let's take a quick 90-second break and come back. We got more Tasty Live with Liz and Jenny next. Peace, everybody. Enjoy your weekend.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Yeah, enough fun on the block all day, all night. Ears in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, just heat waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that Luke word. Fun on the block all day, all night. Laughing with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up. Yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, many wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she's still crazy. Ice cream truck, roll out, yeah, we all chasing. Pockets on lead, but the vibe's still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam, out here raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke is a spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
And welcome to the Friday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette is Jenny Andrews. Happy Friday, Jenny.
Happy Friday, Liz. We look like a black and white cookie.
We do. Black and white cookie, half white, half black. Do you eat the black or the white side first?
I prefer the white side. What side do you like?
I go straight down the middle.
You do?
Yes. Like a crazy person.
That's funny. I really only like the white side, the vanilla frosting on the black and white cookie. I know, like, for years, our viewers used to get boxes of those black and white cookies or deliveries of those black and white cookies to the office straight from New York. And they weren't from Juniors because they weren't those like big fat black and white cookies. They were thin ones.
We'd get them from all over, right?
All over.
All over. Yeah, it was fun. Do you know what is not black and white and is green today? Like that segue?
Yeah. The market.
Let's talk about the platform.
Will it hold? Let's take a look. Let me get a bigger view. Okay, there.
So SPOO's up 41 now. I think that's as high. We have a lot of work to do today, by the way.
Hey, okay, Nike's down $6. We did a Jade Lizard. That's like our one bad position today.
It's not even that bad. So we're long Nike. I
know. Yeah. So I just want to talk about this because this could be a segue into
the life cycle of a trade.
On the 10th day of trading, our traders gave to us
the life cycle of a trade.
So on Tasty, we show you the good, the bad, the ugly. And here you're going to watch us and we can go from start to finish on the life cycle of this Nike Jade Lizard. Here's the Jade Lizard we put on for earnings. Nike's down beyond its expected move. We lost. You're going to watch us manage this bad boy and try to turn this loser into a winner.
All right. So I kind of agree with you. We're going to go from the beginning to the end. So yesterday at exactly 10:40 a.m., Jenny and I sold a Jade Lizard for 99 cents. What we're going to focus on here, everybody knows what a Jade Lizard is the short put. This is where we're getting tested, the 62.5 short put.
And so let's talk about this. We have the 62.5 half put. We collected about $1. So our cost basis or our break even is around 61.5. So we're going to leave those calls. They'll all roll off. Expired options that are out of the money will just disappear on Monday. Like these expire today, Monday they'll be gone. We have that put. If we did nothing and left it, we'd come in with 100 shares of Nike and our cost basis would be 61.5.
Okay, I've never really looked at the curve view on a losing trade, so I figured this would be kind of fun.
Yeah.
So here's the curve view on a losing trade. To Jenny's point, let's talk about what would happen if we both drink too much Glock and pass out right now and we do nothing. Okay, so we don't touch this position at all. We would come in because we're short a put and we'd be long 100 shares of stock. And what price would it say that we purchased that stock, Jenny Andrews?
So if our short put 62 and a half and we do nothing, we'll come in long. And this is a good segue. And I might send this to the high school class because I was teaching them selling puts, but they were like, what happens if it's a loser? So if we do nothing, we would come in long 100 shares of Nike at 62 and a half. We know we collect about $1. So really, it's like we're long at 61 and a half. And if it's trading 59.50, that's about a $200 loser. It's $200 below our break even. But that would use more buying power for sure. To be long 100 shares of Nike is going to use more buying power than being short one put.
Okay, I think we should go through that in a second too. I'm just going to stay on this and put this to bed. I'm glad you said that because I think that is probably the most confusing thing to people when you are a short put and you get assigned. We know our break even is 61, but once that put goes away and we are assigned the stock, it comes in and it looks like we're long it at 62, but we've taken in that $100. That's the most confusing part.
Right. Yeah. Right. Whatever your strike is, that's where your purchase price, what it's going to say your purchase price is. And then the other options are going to be gone. They're going to be expired. So it's not going to say, oh, you took in $100 credit. It's just going to say you bought 100 shares at 62 and a half. Now, if you look at your history in Nike, we'll see that we're not down $300. We're only down $200 because of that credit we took in. But I don't want to put Nike stock. We don't want to use the buying power to hold the Nike stock.
And now I want to show something too. So if I bought 100 shares, this is worth the exercise as well. If I bought 100 shares of Nike, which is what would happen if, like I said, we pass out on our chairs right now and do nothing, we would then use the buying power of being long Nike, and it's going to use $2,877.50 in a market.
Honestly, when we originally sold this, I don't even think it used $1,000.
No, but if I was just going to go and close this, how about that? And we'll see what we get back. We close.
Oh yeah, that $1,191.
Yeah. Yes. So it's less.
It's $1,000 and then plus the $200 loss.
Mm-hmm.
I think that's about what the put held up.
Yes. So what we're going to do here, and that's why we don't panic. Did a Jade Lizard go wrong? Yes. Did we expect it to go up or stay there? Yes. Did it go past its expected move? Yes. All of the worst case scenarios happened to this Jade Lizard. But what we're going to do right now is just take this put and roll it out in time.
And honestly, you could think about this. If I got put the stock and I come in Monday and I'm long 100 shares of stock and I want to sell a call against my stock, what call would I sell?
You'd probably sell the 60. If I wanted to be aggressive, I'd sell the 60. If I wanted to not be aggressive, I'd sell the 62 and a half. And I might stick with the 62 and a half.
And so that's just it. Like whatever call you would sell if you were long that stock, that's what we would roll our put to. So I would say, if I would be aggressive and sell the 60, then let's roll our put to the 60. If I would be aggressive and sell the 62, or if I wouldn't be aggressive and I want more profit potential and I'd sell the 62 and a half, then I'd roll my put to the 62 and a half. So it's a menu, your choice. Where do we want to roll it, to the 60 or the 62 and a half?
Life is a menu, Jenny. It's just a suggestion. So I kind of agree with you, but sometimes if I was going to roll it really far out in time, I'd get aggressive. But right here, if we can roll to the 62 and a half, I'm going to put this in. I'm going to put it in as a roll and take in an additional 45 cent credit and have enough extrinsic value where I'm comfortable with it, with this amount of stock. That's where I might land.
Can you pop out the side? I just want to see and hit the overview and drop down. Just want to see dividend. Dividend was 12.1.
It's already done. Dividend's over.
That's over. Okay. All right. Because I thought, you see the extrinsic value of 73.82 to 82 cents on that 62 and a half. You would think, well, I should be getting about 75 cents for that roll.
Yes. Hold, please. What I'm going to show right now is probably more accurate. This is in the money options have a tendency to be wider. So keep that in mind. You've got 55 cents at 80 cents. That's a 25 cent wide market. Let's take a look at the one we're closing.
How wide is this?
15 cent wide market. So you've got 25 cents, you've got 25 cent wide and 30 cent wide or 15 cent wide, depending on where it lands. That's a pretty wide market. So you should actually get a little bit more for it.
And interest rates also play a role in the pricing. And sometimes that's why I look to see if there was a dividend priced in, because the dividends will be priced in.
So I'm going to go 60 cents.
Yeah, let's try to get 60 cents for that roll.
We'll see if we can. We'll let it work.
And just leave it. Leave it for now.
Well, we're rolling same strike to same strike. It gives us 23 days. You can go out farther. There's nothing wrong with taking it and going. We're at a weird time where it's 28 or 60. There is no 45 as the regular monthly options. So I picked 28. If we wanted to go out farther, we could.
Now, if you go back to Jan, if you open up Jan, so yeah, like Liz was saying, we're in the Jan is only 20 days. We could get more credit for Feb. But when I was talking to those high schoolers, and I'm talking like the high probability trades, selling things that if the stock stays right here, you make money, it could still go down and you make money. There's nothing wrong with closing this, taking the $200 loss and say, okay, I put on high probability trades. Most of them win. This one didn't. I'm going to close it and I'm just going to sell that 57.5 put. Now I know in the roll you're paying a debit, but it's just like taking you throw on 10 trades, 8 are winners, 2 are losers. You take the loss on one of the 2 and you start from scratch and give yourself a high probability trade. There's nothing wrong with that either.
Nothing wrong with that. 100%. 100%. I kind of agree with you. I'm going to penny it down a little bit. I want to get filled.
Or maybe get aggressive and do the 60. I know we're paying for it, but
we'll see.
I don't like only taking in 50 cents.
It's just the old college try the first time. We're keeping the same strike. It's the only reason I'm doing it, because we're keeping the exact same strike. Other than that, I would get aggressive.
Yeah.
So let's see if we can get filled on. Let's see if we can get filled on the 60. Then I'm in anything I can get filled in, because right now Nike is the market makers need to step it up a bit.
So
120.
And you know what? Great. We've got a lot of theta in that trade. We've got like $2 extrinsic value in that trade instead of getting 50 cents for the roll on the other one.
Yeah, and it's short term. Hold on, I wanted to look
right, and then in a little bit, in a week or two, we'll roll it out. I'm gonna push that out to the follow page, and as I'm doing that, Liz, you can talk about the benefits of the follow page.
Oh, yeah, here. This is what I was going to say, and we'll check Jenny's work. So we were also talking, and I love that they're doing the 12 days of Christmas, and there's a great email, and everybody's taking their own take on, kind of trade follow through or the life cycle of a trade or trade. They wanted traders' workflow is actually what they were using, and we used it as life cycle of a trade because Jenny and I are just floor traders. We're just old floor traders. But what I love about what's out here is take a look at this. You want to really see a trade, and honestly, this is my favorite thing about what we do is that I'm going to take Dr. Jim off too. What my favorite thing about what we do here on this network is, and Jenny brought it up in the beginning, the good, the bad, and the ugly. You watch us struggle. You watch us place a trade. You watch us close a trade, especially on this show. I know some people place trades and then put their orders out. We've been really good about, since the very beginning, trying to say that we're normal people that manage during 1 hour of the day. So I don't know a lot of people who have all day long to keep looking at things, right? But Jenny and I, especially on this show, we open and close, and sometimes it's worse, sometimes it's better. But it is real, right? Because a lot of people don't have unlimited time to be trading. So, but here you can watch people that do have unlimited time to be trading. Like the bats are trading constantly, in and out, in and out, in and out. Some people aren't, and you can watch and see how each person manages everything that they do. So if there's something you're particularly interested, go ahead and look at it.
So I would say 98% of the time. I would say 98% of the time, everything we do on the show. And so you can, and we do it on the platform. So you could watch us. You could watch us place the trade. You can watch us adjust the trade. You could watch us, tweak the trade throughout the time. So people will email us and say, hey, can you add comments to what you did on the follow page? And we'll say, here, you're going to get a really good commentary. Watch the show in the archives, because everything we do on the show. I said 98% of the time, because there are times where, like, if I had TP on, or you're out of town, or I'm out of town, and we have to. But otherwise, we're doing everything on the show, so you can watch it all real time. If you have any questions on what you see on the follow page.
Correct. I made some grave error in this. What
do you mean?
I typed in SPX earlier, and now I can't get out of it. Reset. There we go. Okay. I found a reset button. So to Jenny's point, I'm glad you brought that up. You can look at the date, and you want to see exactly what happened in Etsy. Type in Etsy up here. You can see the date we closed it, the date we opened it, the date, everything. The dates will be on there, and the shows are archived. I'm glad you brought that up.
Right. Yeah, the shows are archived.
Yes.
All right, let's take a look at our positions since
that's what I'm saying. We've got a lot of work to do today, lady. We are taking tweets with the hashtag LIZJNY. We're going to keep an eye on this market too, because sometimes we'll get some movement at around 10:30 when the European market's closed. But SPOOs are up 50, which is pretty good. Okay, do you want to go top down on our red and the money signs?
Sure. Or just I was just like looking at P&L percent. I mean, we top down. We've got that too.
Let's take problem children first, right? So let's go to IBIT. So IBIT, we were hoping for a little bit of a rally yesterday, and we got it. So
yeah, it's not a problem child. Worked out perfectly.
No. I meant in the money signs, action.
Okay.
So red in the money signs mean action or ownership. That's the one thing I'm going to say, and I need that on a T-shirt. You have to take action or you will take ownership. Because in this situation, if we sat right here and it stays, if we expire right here, we would take ownership of IBIT at 50-50.
And even though we have a spread, we sold a put spread, which people say like, oh, you sold a put spread, it's defined risk. But if we get to expiration and IBIT is in the middle of our put spread, which it is, it's below our short put, but above our long put, our short put would be automatically exercised. Our long put would roll off and expire, and we'd come in long 100 shares of IBIT. So we don't want that. So we're going to close this trade, and we're going to put on a new one. At least, hopefully, Liz, the Jade Lizards and the weekly Jade Lizards and IBIT are back on track.
I hope so too. I really do hope so. So yeah, this one's out of the money. This put would expire out of the money. This put would expire in the money, and we long 100 shares of IBIT. I kind of like looking at the curve view on.
Yes,
it's fun.
Look at this. 15 years later, and we found a new trick.
Yeah. So, but look at this, Jenny. So we are making money, and it's beneath our short put.
Right, but you can see we're in the green. We're in the green zone. We're in the green zone.
Okay, so I'm going to go back to I'm going back to the position page, and I'm going to close this spread, just in case.
I mean,
I guess we don't need to.
No. Oh, we only need to close the in the money put, but unless we wanted to close the call spread in case Bitcoin has some massive rally today.
Here, tell you what. There we go.
There we go.
Covering all of our bases, we're going to close those. And we're leaving the longs will expire, and if they don't, good on both fronts. If those longs come into play, okay. Then we're going to go back to weekly, and we're going to go through our little exercise where we take a dollar wide call spread for 21 cents. I'm going to go down and buy something for 21 cents, buy a put for 21 cents, because we know it holds up a lot of capital. So that is just, we're washing extrinsic value. That's all we're doing. And then Jenny, you get to pick whichever put you think you want.
Right. So I know people might say like, why sell that call spread for 20 cents? Well, if you take all of this off and sell a naked put in IBIT, which we like naked puts in IBIT, but they use a lot of buying power, $2,000 for a naked put in IBIT.
And keep in mind, we're using this for 7 days. So we're saying Bitcoin's going to go up, but not too far up within the next 7 days.
Yeah. So and honestly, if you think about it, it's like Monday, Tuesday, then it was Christmas Eve half day, Christmas Day off. It's a short week. So it won't take long to make our money if Bitcoin stays around here.
Right.
So we want that naked put, but we don't want the $2,000 buying power. That's why we need the 20 cents from the call spread. So we could use that 20 cents to buy the put and then let's sell. I mean, we'd love to get $1 on these, but
I kind of like the 50.
I think we have to.
Yeah.
I mean, we just took off the 50 and a half. The 50 has a little more extrinsic value, so just keep it there at the 50.
You could do the 49 and a half if we wanted to give ourselves a little bit more room.
Sure. Yeah. Right. You could do that. You could.
Okay. So, I mean, meaning there's 5 cents in risk to the top that we're well aware of how that looks. Now let's go to this. Oh, you know what? I don't know if it's going to work because I've got that other stuff in there.
Yeah, you can go to analysis and then click off the 0 day.
There we go. So this is what it looks like here. We have this little bit of a range, and we're trying to use 250 to make, around $60. And that's great. This is a good return on capital. We've been trying to do it each week in IBIT.
Right. I know we're taking in $95, but we'll put in a GTC to take 50%. So if we're taking $95, we're going to put in a GTC to take 40.
Do you care if I take it to the 50? I want to.
No, take it to the 50. I like collecting over because I have a feeling we could end up over 52.
Okay, so that is sent.
There we go. You never know what's going to happen on these holiday weeks.
I know. So in our IBIT, I'm going to get rid of all of our closed orders, and I'm going to put in a GTC for 50%.
All right, so I pushed out. Now I'm pushing out the closing IBIT order of this week's and the new IBIT trade we have. And honestly, if Bitcoin sits here all year and does nothing, and people are like, "Geez, I bought all this Bitcoin and it doesn't do anything; it's not going up," we'll be making money on the on these weekly jade lizards. It's a way to, yeah.
Well, and I mean, we're kind of looking at them all as a package. We're not, the IBIT is Bitcoin, but we have the Ethereum, Jade Lizard, not Jade Lizard, I'm sorry, Zebra. So we're trying to pepper the infield. IBIT has a high implied volatility of 50, so we're trying to take advantage of that premium. We also have Ether. I understand that it's got a high implied volatility as well, but that is our unlimited profit potential in Ether right there.
Yeah. Now, in IBIT, I do have some just like straight up long crypto positions, but I like to every week have some additional premium selling positions in case it doesn't just go up. I've got something that can be making money.
Right. I do like that. Okay, now we're just gonna, like I said,
but there is risk all these have risk if it goes down. Just want to put that out there.
Yeah, and we took pain in IBIT for a while on even that one. It came back today.
Okay, next in the money sign, IEF.
We are long.
Type it in again. What is it? If you type it in slowly.
IEF. We've had it on for 38 days. That's why you and I don't know.
Oh, yeah. It's that weird like treasury or something. I don't know where.
Oh, we were trying to get long. This is like the treasury yield. So we have the 94 call.
Just close it and get it.
I'm going to show this too, just because this is my new little trick, Jenny Andrews. So we're trade page.
We bought a call and
look at this.
Yeah.
We wanted to get long treasuries. Somebody brought this to our attention, and I believe it was from even a What's Your Assumption. We are right there. This is fine. It's a little bit of a loss. We're going to close this because I don't want to come in long IEF. So we took a $315 shot that something would go up instead of using $4,817.
Yeah. And so we're just going to close just close the call.
Yeah.
We don't need to keep this going.
No, we don't need to keep it going. But like I said, and it's not a full loss. We're getting back $232. It was a small loss. It didn't work.
Okay.
Next up on our list of red in the money signs is
I know.
So what is
Southern? It's Southern Company.
Southern Company. Okay. Now
this was one of my brother's picks.
Yes, this was. We can say Jeff took us down. Wow. When I run into him in Lamont, he's gonna get a knuckle sandwich.
You really took us down with Southern Company.
So
you know what the funny thing is, when he said, take a look at Southern Company. After that, it went up. If you go to the chart, after he told me that, it went up. But it's come down since. Like if you go to the chart, I want to say it was a couple months ago, I bought Southern and it had, see that rally that it had in October?
Yeah.
And I was like, I just held on. I was like, whoa, man, Southern. And I wrote it all the way. I have wrote it all the way up and wrote it all the way back down. Wonderful.
That's so funny. Okay. So then we have a spread in. We have a $5 wide spread. It's trading 86, so 86.41. So this should be worth about $1 something. I think we just close this as well. And go back to the trade page.
Yeah, right. I mean, you could look at rolling it.
Look at how wide those markets are, Jenny.
Okay, so here's the lesson. Here's the lesson for everyone on parity and to know what we should really be getting for this. You don't even need to deal with that 85. All we need to do is sell out the 90, but that market is 160 at $4. So how much should we pay for that 90 put on expiration? So parity would be you take 90 minus 86.48. So you've got 352. So 352 should be what, right? Not right? I'll double check.
Use your calculator. Just do 90 minus 80.
Yeah. So you take your strike minus stock. Strike 90 minus 86.48 346 is 350. Yeah, so it was 350. So if you want to pay a couple pennies over, pay 355. Pay 355. As the stock's moving, 346 now it's 344 or 354.
You got to pay a couple pennies over.
Yeah, pay like 355, and that's all you should have to pay.
It might be 360,
but we're still paying a penny over. Oh yeah, now 86.41. It keeps the stock's moving a little bit, but
that's what I'm saying. You might have to pay a penny or two over. There we go. We got filled at 358, which was a penny over.
That's parity, because like at trading 86.42, that would be parity, meaning if I were to have to get long the stock at 90 and it's trading 86.45, like just through the difference, the math is the difference.
That's what I was saying. You know what? I remember years and years and years ago, because there's different words, there's different verbiages when you're a trader, and I think parity is one of them. But parity is a word that people use all out, everywhere else too. But it's just the math portion. So the intrinsic value of something is just the math portion. The extrinsic value is the one that's got all the components that can change and bob and weave and volatility at any time. Intrinsic or parity is the math portion. So it was 90, the strike price minus the stock price is the value, the intrinsic or the parity value of that option.
Right. So with a put, you would take like the put strike. If you've got an in the money put, and if it's out of the money, if options are out of the money, there's no intrinsic value. It's all extrinsic value. It's all time value. If it's in the money, you take the put strike minus the stock price. That gives you parity, or what an option is worth at expiration. And if it's a call, you take the stock price minus the call strike, and then that gives you the intrinsic value or parity.
So intrinsic value equals parity.
Yeah.
Yes, that was a fun little lesson. So Jenny was my teacher on the trading floor when I got there, and she hands me her Nadenberg book and said, "You need to know all your synthetics, and what intrinsic and extrinsic mean."
And did I give you flashcards too?
You gave me your flashcards too. Yeah, the flashcards weren't like vocab words; they were flashcards of adding and subtracting fractions. Remember that? So it wasn't like parity equals this. It wasn't like I'm doing flashcards of like vocab words. The flashcards you handed me flashcards that were adding and subtracting sixteenths, eighths, all that stuff.
Because if a broker came into a pit, the first person to do the math, like if a broker came in the pit and said, "Oh, give me a market on the, 86, 84 put spread," you have to quickly, here it's nothing because we're at expiration. But if you're further out in time and a broker comes in the pit and says, "Give me your market on the 80, 87 and a half, 85 put spread," you have to do that math so fast because the first one to yell out the market is the first one on the ticket.
And that's why we always laugh, because kids these days, look at this, they have it in decimals. Ours was done in sixteenths, 1/1/6.
And then they changed it. Then it was first it was fractions, then it was decimals. But I would spend all I would do at night would be just try to get fast at math, just fast. All you have to do is be fast at math to get on a ticket.
It was funny because my brother would be the one. I remember we were sitting in my living room. My brother would use the flashcards and he would be just quizzing me. And he's like, "Yeah, I don't even know how you know all this." I was like, "You have to work real hard to learn 16s."
Really fast.
Yeah.
Yes.
It was fun.
Okay, so let me make sure I get all these things pushed out.
Okay, so as far as that goes, and I'm going to go with what Jenny wanted to do next, is because we have no more red in the money signs. So that's done. Okay. So done, dusted, and over with. No more in the red in the money signs. But let's take a look at things that we would like to take off. No key. We don't need that.
I know that fly. I'm very excited about fly because that's what I gave JD for his birthday.
I know. He's excited too. It's up. What percentage is it? It's up 20%.
I know. Yeah. Firefly Aerospace. So I'm just happy because Logan has it in his account. JD has it in his account, and it is up 20%. Now, up 20%. It's just back to where it was probably when I bought it for JD. When was his birthday?
Hey, the good news is his birthday is November 17th. I think we're back to even. Yep.
Oh, funny.
But it's good. What was I use a different, our news source is great, but I just want to see if there was news.
Firefly Aerospace faces class action over alleged abuse. I don't know.
To the moon, Alice.
That was old. That was that was a couple of days ago. So I'm not sure. But hey, maybe this could, who knows? All I know is JD's got a few shares. Logan's got a handful of shares.
Hey, life is good when you've got a couple shares and your stock's up 20%. Okay, that's
We
pretty
sold
funny.
a put.
We sold a put. I say we roll it up
to Fed. Oh yeah, roll it up. Sure. Move it up to the 22.5. Get crazy.
Yeah, right. I would like to. I want to stay in it, so we're gonna roll it up.
Or you could, yeah, right.
Or do you let's assess rolling it out.
Well, let's talk about this too. Like, look at what we collected. What are we making on the put we sold?
We collected $1.05 and we have 57% or 54% now.
Okay, so if we collected $1 and then what are we gonna get to roll it up?
Okay, so if you stay in the same cycle and you roll it up, you're gonna take in 172.
So we collected $1, and if we roll it, we're gonna get another $1.72, which means we've collected $272. We've got $272 on a $23 product. So that $272 is gonna move our break even still below 19. We've got 22.5, and if we collected 272, our break even is gonna be 268. 1968. 1968.
Yeah, I'm doing it. Come on, press the button. Okay, so the markets are a little wide there.
I know, but not terrible. I mean, they're wide, but this is, check the volume. Let's see what the volume's like in Firefly or the open interest.
Open interest, I'll do both for you.
It's little. Volume, we might be the only one. There we are. And that was me closing my puts. I had a lot of not a lot, but a couple jam puts. I closed them.
I still have mine.
I should have rolled mine up. Instead of closing them, I should have rolled mine up.
Yeah, well, we want to continue to play. Let me ask you this though, Jenny. Okay, I'm just gonna, once again, this is just a fun show. I love this because we get to kind of talk through, and this is real time. I had no idea. I wasn't even gonna look at Fly today because I have a short put and it never even came to my attention. But you could take your $50, and if you wanted unlimited profit potential. So today, we made $50 on it, and I get it. But somebody who was long the stock could have made more.
Yeah, right. Sure. Yeah. When you get a move like this.
Did you want to go out? No, never mind.
No, we're getting a lot. Just roll up to the put.
And it's got a 74 rank.
Yeah. Wait, it says we already have a closing order in for this. So just adjust it. Maybe you put it in.
I want that bar to go away. There we go. Okay.
Go to positions.
Yes.
There you go.
Good. 262. That's fine. So we've got
162 and another $262. So great. I can't believe Fly's on such a move.
Now, is there anything else we want to close? Palantir is still up. I was listening to Tim Knight. He's like, this is finally going to have its day in the sun.
Palladium?
Yeah, Palladium.
Yeah.
Not Palantir, Palladium, yeah. So silver is up again today. Is gold up again? We closed our gold. I know that.
I closed the gold. It's up, but I closed our gold.
Yeah. Gold is gone.
What did we have? 2 shares of gold?
Yes.
I closed. Yeah. I can give you that. I can give you, I'll sell you the $3.
No. You closed something for me. I forgot what you closed for me. Etsy. We're even.
I closed Etsy for you.
We're even, Steven.
And so I closed the 2 shares of gold, but I left the palladium. Remember? I said, we'll close the gold and leave the palladium.
Yeah.
So we're short silver, but we're long palladium.
I'm only laughing at this because I think it's Frank. I'm not exactly sure, but Frank said he hired a math savant who stood in front of him to figure out crazy ratio spreads. I was like, no, that's smarter, not harder, right? How good are you at math?
That's really funny. That is really funny.
Okay, so do you want to pop into Twitter real quick? Oh, we also have the market measures recap from Kai. So I'm gonna go to Twitter. I'm gonna go to Twitter real quick because I want to make sure we get to everybody because Ajit comes in with amazing trades every day, and I like it. Oh,
okay, yeah. And I am busy pushing things up.
I'm gonna go top down. Frank comes in. Someone covered their 5049 IBIT put vertical today for 10,000 times.
Wait, what?
So somebody covered their
10,000
times. Wow. Okay. That's big volume.
Yeah.
Whammies. Okay. Now this must be from the chat. Question for Liz and Jenny. My niece, 18 today, UK based and financially savvy. Is Jenny's high school beginner options education available that could be shared online?
Okay, so when I say my high school class, I'm kind of teasing. I went to the stock market club once and taught them how to sell puts. And then, okay, but here, she's 18, awesome. She can open an account. That's great. So that's what we give our kids when they turn 18. We help them open their account. They put some of their money in, we put some of our money in, and I think it's a good way to get started. I taught the kids how to sell puts, out of the money puts in low price products, but you can find that all on you could find. I pointed everyone to tastylive. I don't know if you have that pulled up at all, Liz.
I don't.
I pointed them all to tastylive because
I can do it real quick though. Do you want me to add tastylive? Watch this. It's a live show, Jenny. I can do anything I want.
Yeah, sure. So like go to tastylive and you can find in the Learn Center, go to Learn and see the option, the beginner options.
Yeah, you can just go right here, courses, beginner options, and it'll take you right there to they have stocks versus option, market metrics, the curriculum course. Now it's interesting because I told both of my kids last summer to go through these, and they actually have like quizzes and things like that after to make sure that what you're reading you absorb.
Yeah, look at that, 40 lessons for free.
Yeah.
So I told the kids, here, this is all free. Go right here, go to the Learn page, take these classes. And if you have questions after that, email me.
Yeah, for sure. Which is kind of fun. So hold on, wrong one. I had Twitter up on both. Okay, so then this is Great Gatsby. Help a guy out, please. What should one do with a calendar that goes against you? Let's take a look.
So D's Feb 70. Well, you've got lots of rolls in here. What is this?
I can't tell.
So, okay, hang on. Let me look at these prices. 300.
So, I mean, honestly, you're right. This D's is rolling off. No. Wait.
No, that's a different one.
No. This is it.
No, because what did I see that was D's Feb? The first thing I read said D's Feb.
I saw the same thing you saw. Hold on. Let's click on it again.
Yeah, see, D70, Feb 70. So if you've got this, you've got a lot of rolls, you've got the long Feb 70, you can continue to sell weekly 70 calls, but I don't know what underlying this is. Because I don't know.
I don't either, but yeah, that's what I would do. Just kind of generic. I would be rolling this, the short 70 to even the weekly, if you can get anything for it.
See, I don't know what your setup is. I don't know like where the today's mark is. Is that Feb 70 where it's down? That I see your P&L, but I don't know what the mark is. If that D70, if the Feb 70 is worth almost nothing, and there's nothing to do with a roll, like you can't sell next week 70 or next month 70 and the next 70. If you're not getting anything for it, your risk in the calendar is what you pay for it. You say, I got 63 days for this thing to come back, put black tape over it, and don't look at it for a while.
Nothing we do is trading advice. But yes, I kind of agree.
You know what I mean? Like you got so many days for that Feb to come back. If it's so far, and if it's all out of the money, if it's in the money, then you have to do something with it. You have to roll that short term. If the short term call is in the money, you have to roll it. But it didn't look like it. Why don't you write us what the underlying is and what you have?
Yeah. And I hate to say this, but the Great Gatsby has been, I think they're pretty good. So they know if it's out of the money, you can leave it. If it's in the money, you need to roll it. And then Punished Pixels comes in. Happy holidays. Quick question. The Mag 10, the new SPX style of covering Mag 10 stocks is not available on Tasty yet. Is it because of liquidity or is there any other issues why it's not available to trade? It just takes a bit.
Yeah, it's brand new. So they're just like still, I think it takes a little while to add things. And they're still working. Even you heard when we had Rob on talking about how they're still adding things to the Mag 10. They don't have the dailies. Do they have the weeklies yet or just the monthlies or working on adding dailies?
They just added it. So they're trying to get it all. Everybody's trying to get it all sorted out.
Yes. So fingers crossed, it is coming very soon. Can't wait to start trading it.
Absolutely. Okay. And then Frank comes in, another one from YouTube, which we appreciate. Question for Liz and Jenny. I'm short premium in BE, Bloom Energy, Oklo, the Jan 17th expiration and won't manage over Christmas. Is it better to close before the holidays rather than to come back inside 16 DTEs? It's a great question.
I mean, for me, I see they're both out of the money, right? Like Oklo is trading 83, you have the 65 put. Bloom Energy, where's Bloom Energy?
We're out of Bloom Energy. We've been into and out of Bloom Energy each day.
No, but for him, like he doesn't have our positions.
No. But I was going to go and see, like, it's the same thing if they're out of the money or in the money. But yes, so the BE's got the 65. Let's take a look at that too. So it'd be the Jan 60.
Look at Bloom Energy up $9.
Oh, look at that. It is out of the money.
So they're both out of the money. For me, if I have those, I'm leaving them or I'm putting in a GTC to take 50% out of them. But I'm not rolling now. I'm not rolling Jan to Feb now. I'm not. And I'm getting on a cruise and Liz is getting on a cruise. And by the time I come back, they'll be less than 21 DTE. And that's okay. I'm okay with that.
Well, especially with this is terrible to say, especially with the short puts, because worst case scenario for me is I come in long Bloom Energy at 65. If I do this for my position.
Or let's talk about this. There's a $1.45 extrinsic value in that 65 put. It's still out of the money. If Bloom Energy drops to 65, you're going to get way more for the roll. If it drops to 65, but it's still 65 is still teetering at the money or near the money, those at the money is like will blow up. And if you get close to Jan expiration, you're gonna get way more money for the roll than you will here, right? So
yeah, for sure.
I would just for me, this is not a recommendation, but for me, I would put in my 50% GTCs and not worry about them. But if you're going to worry about them over the holidays, like if you can't afford these positions, if you don't want to take the stock, if the stock drops, like I'm not going to have the Bloom Energy put at 65 unless I'm willing to take 100 shares of Bloom Energy at 62.
And let's go to something that you do have too, and I have as well. So Oklo, let's go to Oklo 60 puts, but they have OKLO. So I have Oklo as well. So they have the 60 puts. It's a very similar situation to Bloom Energy. It's pretty far down.
Yeah, like would I leave those 60 puts and sleep at night? Sure, if I'm willing to get long 100 shares of Oklo at 59. Yeah. Would I leave those 60 puts if I didn't have the money in my account to handle that position? No, then I'd close them.
But you know what's crazy, Jenny? I do think that comes with, I'm not saying age, but it comes with trading over and over and over and over again. Because I will tell you, probably when we first started retail trading with our own money, not from the trading floor, but with our own money, we would be a little bit more apprehensive and ask those questions. Like you'd be getting on a cruise and you'd give me your codes and be like, manage this.
But and it depends on the account size too. So like Logan's account, so Logan it's my son, he has puts in Oklo, and I think his Oklo position got a little too big for his account size.
It did.
Yeah, it did. So then, and he had puts, and I was like, okay, great. Shoot, these puts that he has aren't winners. I don't want to close them for a loss, but he's got too much of a position now in case the wheels fall off. So what we did, and we did on the train, you were sitting there with me, instead of buying those puts back for a loss, I went down and bought the 50 put, like a $10 lower, a different put to make it defined risk in case something happened.
So you just bought a $50 insurance policy for your cruise. That's basically it. Meaning
yeah. Right. And not even, I didn't pay the offer, but you see it's $24.50, like paid 30 or $40 for an insurance policy. So if something happened, it would be defined risk.
Yes, for sure. Interesting. Yeah, no, that was good. Okay, let's go back to Twitter. I want to make sure we get to everybody. Okay, and then Ajit comes in, and I appreciate this, Ajit, because I like how he really lays everything out. So this is in Meta. So it's a short put, 116 expiration. The expected move is $32. The IVR is 1.4. The IVP is 1.2. IV over HV is 1. I love that he gives us all this. Okay, so it's
so Ajit gives. I feel like Ajit gives more than we even need to know, because I've been doing this a long time, but I don't pay attention to everything. What's IVP?
I don't know what IVP is, but it's on there, so it must be important.
So that's what I'm saying. Like, I don't want people to feel like they got to know all this before they put on a trade. I don't even know what IVP is.
And I'm assuming it's good when the IV over HV is 1. I don't know what's a good number or a bad number in the IV over HV either. But yes, Ajit is very good at this. Okay.
So I just want to figure this out and clarify this. So IVR, implied volatility rank. That means where volatility is compared to itself for that underlying. IVP, I'm going to guess, is implied volatility percentile, which is just the actual implied volatility of that cycle. So IVP and Meta in Jan 26.8. Is that what it said?
Jan 26.8. Yes.
And so
no, it didn't say that. 1.2.
I don't know. IVR 1.4.
It's okay. It's okay. We don't need to know it. That's what I love about trading is you and I don't need to know that, but somebody might want it, right? And if you want
then
it,
the implied volatility over historical volatility.
Yeah, that's one. But I don't know if one's good or one's bad.
Yeah, G's given us a lot of information that you don't have to know.
So and then he goes, not exactly the right volatility profile, but good premium on a highly profitable company. Love it, Ajit. I like that you're following up, answering our questions in the same tweet. So he wound up selling for the 116 620 short put with a net credit of 480 with over an 83% pop, 7% discount if assigned. Okay, that's great.
Right.
Nothing wrong with that. And you know what is wonderful about Ajit? Like I said, Ajit has traded many facets throughout the years in lots of different things. I know this because we met him, which was great. It was wonderful.
Yeah, he's wonderful.
And what I like about it is what he says here, not exactly the right volatility profile, but good premium. So as long as you know why you're doing what you're doing, that's fine. And I love it.
Yeah. Oh, look at the Polish Warrior coming in. Hey, guess what? Polish Warrior, I got Polish sausage and sauerkraut coming in hot tomorrow. I have my godmother, Aunt Karen's bringing a giant pot of Polish sausage and sauerkraut tomorrow.
Right next to the deviled eggs. Okay, TGIF ladies ended up paying a dime for this one, thinking market may not give me a chance to get it for free in SPX. Please do your thing. Oh, Mikey, I haven't done this in a long time for you. I got it.
Mikey, I get it. If you put on that call, if you sold that put spread and you're trying to, turn it into butterfly and the market's all over and we were up 50, then only up, 35 and then up 55 and we're moving all over, I can get why you would just want to get it on and take the risk off. Yeah. With the days we've been having where the market's up and then it gives it back, or we're up and it gives it back. So with those days, I get why you would just want to get your butterfly on.
I get it. And it's good.
800 is his center strike. I want to see what's the center strike. I have the calendar on, the Friday, Monday calendar. Liz,
wait, what was his short strike? 6,800. So it's a downside butterfly. Okay.
Mine's the 6,830, I think.
So he's today and he's the 6,800. So he's down a little bit, which is right here, but that's not bad.
Okay. Mine's the 6,830.
Congratulations on your wealth, Jenny. It's trading 68.
No. Oh, okay. So Liz, you've got the 6,820. You're right there. So I put this on at 9:30 and it's up $80. So what, do you take it or do you leave it?
I don't know. I mean, honestly, anytime I've ever left them, they wind up being a full loss. But you do you. Because like I said, I pinned 2 butterflies and it was the greatest day of my life. If you can pin, I did pin 1 calendar, Jenny. And I will tell you, okay, this is just opinion. And keep in mind, my sample size is a sample size of 1. Okay. So my sample size of 1, I have pinned the butterflies and I made, $997 on the butterflies because I took in a credit and then pinned the strike by $50. So it was almost a full $1,000 win. The calendar that I pinned, I only made $400 on at expiration. I mean, at the end of the day. So the only way to make more would have been to leave it through the night and then take my chances in which direction the market went the other day.
Right.
So from that perspective, I like what Mike is doing because you're locking in the profit with a chance of something else. Because calendars and butterflies have the same principles. You want it to go to it, not through it, right? That's kind of what you want for a calendar and a butterfly. And so they have the same principles. I like them both. I do like them both. But I think from my amazing research of my sample size of 1, going forward, I'm going to close my calendars and leave my butterflies.
Because here's the thing, calendars and butterflies will behave very similarly as the day goes on. But if you can get a butterfly on for free, you have no risk. Where if you've got that calendar on and you're just holding this calendar that you paid $700, $800 for, $900 for, then you've got a lot more risk in the trade than the butterfly that you've got it on for free. You have no risk in the trade.
Right. Correct.
Yeah. So I think if you want to hold it, you're better off having that calendar. Better off having that butterfly. If you want to hold it and try to pin it, you're better off with the butterfly. If you're just trying to take 10 or 20% out of it, then that I think is the calendar is fine for taking a quick 10 or 20% out of it.
Yes, that's kind of in my sample size of one is what I'm going to think about next year.
Because in about an hour on the calendar, I made a 10%.
Yeah,
like just under 10%.
Mm-hmm. And it could move. But your point is, I think what you're spot on accurate is you still have the risk on the table.
I still have the risk. I paid about $900 for the calendar, and it's up about $80. So that's just under 10% in an hour.
Yeah.
But if we move, it's going to get far from there.
Right. Go back to Twitter. I'm going to go top down. I unfortunately think we might have to table our Kai studies. Oh, it was Nike and FedEx from Great Gatsby.
Oh, okay. Nike and FedEx. So take a look at Nike. So that was the 60, I believe.
This was the 60. Oh, yeah, you're in great shape. It was the 60 calendar, right? Let me go back to it.
Or was it the 70?
Hold on. I'm going to go back to the tweet. Where was it? Did I miss it already?
Great Gatsby.
Yeah, right here. Okay. So this is the 70. It's the 70 in Nike.
Okay, so here, go to so he's got the Feb 63-day 70 call. It's probably worthless almost, or very little. 70. Yeah. You know what you do here? You say, to me, there's nothing I would do. I'd leave that the 63-day Feb call and do nothing with it. You're never going to get anything, selling anything against it.
I kind of agree. And
that's what I would do. I would just leave this. I would say I've got 63 days for Nike to come back. I'm doing nothing with it because
I don't think you're in bad. I mean, I hesitate. Nothing we say is a trade recommendation, but I don't think you're in bad shape when you've got the 63-day Feb 70 call and it's trading 659. There's a chance.
The only risk you have left in this trade is $36. $36. So, and it's interesting because if you think of like,
I wouldn't even be selling this the 28-day for 10 cents or something.
Unless you've got a massive quantity. Like if you've got a massive quantity, if I have a couple of these and I've got $36 left to lose or $72 left to lose, I'm not doing anything. If I've got a lot of these, well, then I maybe would want that.
You've got 26. There you go. Okay, I kind of agree with you. And then the other one was FedEx, and that was the 300. But that was so that's a different story because he was 0-day, 3-day, I believe. So this is
7 day, 0-day, 7-day.
Yeah, 0-day, 7-day. So this is what you've got here. Very similar. All you've got left to lose. There's nothing you can do here. I mean, unless you want your $28 back.
Yeah, I don't know.
The positives, Great Gatsby, though, is that they were calendars and they had risk definition that hopefully wasn't too much.
Yeah, I mean, in FedEx, if you want your $25 back, you can sell that call. But then that's the situation where it's like you sell it to get your $28 back, and then some news comes out and it rallies up, and you're like, "Why did I take that? Why did I need that?"
But I almost correct. I kind of feel that same way. But when you're looking at something, when you're looking at Nike out 53 days, there's no
53 days. Yeah,
I wouldn't sell that. This flip a coin. If you want your $26 back, take it. If you want to leave it and lose your $26. With a possibility of maybe scratching it. This is different when there's only 7 days, in my opinion.
I know. And sometimes if there's a little more, like let's say there's 50 cents or something, what I might do would be sell out the 300 and buy the 285, 287.5 call spread. That way, if FedEx gets a little pop up, I make a little. So you see, if you just buy
but you don't want to put more in there, right? Like you don't want to put another $1.50 in.
Well, if this is $1.50 and I can get, 50 cents for my one I'm selling and then put $1 in, maybe I'll put $1 in to make it $1.50 if it has a little pop up, because then a little pop up would be going in my direction, but it's still not going to get to my strike. And then I probably covered my cost of the calendar. I will do this sometimes. If I'm getting anything for that 300.
That's not, I don't think that's enough.
Yeah, you're not getting.
I see what you're saying, because then you're giving yourself a better footing by putting a little bit of additional capital into it.
Yeah.
No, so thank you very much for sending us that.
I just got a text. Lily is done. Just took her just got out of her last final.
Woohoo! She's done for Christmas break?
Done for Christmas break. Is Annabelle done yet?
No, not yet. They have a full day. Okay. Like they don't do what you do where you go in only for your finals. So she's just got school, which made her very cranky today, by the way. Thank you for bringing that up. This morning I was like, okay.
Well, we're done. We're officially done. Today she had AP Physics, AP Computers Programming, And that was it. Just 2, AP Physics and AP Computer Programming. That's it. So she's done.
I mean, and I think it's very stressful. I was like, Annabelle, you don't need to stress about this, because she had rehearsal and then auditions during finals. And I was so frustrated with that because she was at like wit's end. All the kids were. They shouldn't do that to them.
It's stressful, and especially it is a lot. And seniors, I don't know, you know, tough. And they're busy. They're going through a lot with
the seniors. That could mess with their scholarship. I'm kind of mad at the theater program because that could mess with people's scholarships.
And speaking of seniors, and they're like, this is the time they're all finding out if they got in. So this is interesting. I didn't tell you this. So my daughter and her boyfriend both did summer camps at Notre Dame. Both did summer camps at Notre Dame. Her boyfriend lived there for 2 weeks, took classes that will count, which credits will count. If he goes to Notre Dame, that will count towards college credits. And she did a summer camp there too. And now we've heard if you do the kids from the summer camp, you know, might be more likely to get in. They talked to, because this week was the early decision for Notre Dame when they did all their acceptance of who's getting in for the early decision. They talked to all of their friends from summer camp. Not one of Lily's senior friends from summer camp got in.
Really?
And of her boyfriend's friends that he knew at summer camp, out of all of them, only one got in. They're really tightening up or they're just getting way more applications.
It's a real hard school to get into. So
anyway,
it's a real hard school to get into. But yeah, that is kind of tricky. And it's so hard when they don't get into where they really want to go.
Well, I might have a lot more money in a few years when I don't have to pay that tuition.
She's good. You'll find out this time next year. So think about that.
Yeah, a year from now.
On December 19th, a year from now, you'll know if you're broke. If you're broke and your daughter's happy, or you're rich and you're happy.
Funny.
I just want to make sure we didn't miss anything because it is expiration. It's the normal expiration Friday. SPOOs have been sitting in this range right here between up 40 and up 50 since our show.
Now, I will say, I know we've just glanced in the money signs, but if we want to be really diligent, we would open up everything and just see if there's anything close, because the way the market's moving, there could be something that could be close that might not be in the money now, but at the end of the day, maybe it could be.
Jenny, you and I are going to perform this exercise off camera. And if we catch anything, if we check our work and something has gone horribly wrong, we will push it out because we are now cutting into Option Trading Concepts Live.
Okay, tell me just what is the last thing we traded, so I want to make sure I have everything pushed out.
Activity, all symbols today. This is what we did today. The last thing was Fly. So we did Nike, IBIT, IEF, SO, and Fly.
Got it. Everybody have a wonderful holiday weekend. I'm sure people are going to parties. Liz, have a great weekend. Free JD.
Free JD. It's my husband's 50th. We've got party. So you're going to see me on Monday with sunglasses on because
have fun. Happy birthday to Dan.
Thank you very much. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you on Monday.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style. and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
They're gonna bring it down. I gotta feel good. You wanna see my moves? Let's party all night. We gonna build it up and then we tear it down. They gonna know our name all over this town. We gonna stir it up and do things our way. So if you wanna move, get out of our way. I'm feeling fly tonight, like a rocket ship. I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing. This body totally bussin'.
What's up, TC Nation? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal, and it is a Green Friday here. E-mini's up 50, NASDAQ up almost 300, Bitcoin up 3K. Pretty big rally, and it's sustaining, which is something we haven't really been able to say over the past couple of days. But Jamal, how you doing?
I'm doing well, my friend. I'm doing well. I mean, it's warm and fuzzy Friday, a little chilly outside, but warm on the inside. Markets are green. I mean, what can you say? What can you say? That billing, that game lived up to its billing last night, huh? I didn't watch it, but I saw it went to overtime. I mean, how about it? 1 point game. I heard some weird play happened, and I heard it was like a scoregami. It was like the fourth most original score or something like that. ever in NFL history or something like that. It's kind of weird.
Yeah, Seattle was down 2 touchdowns. They needed to do two-point conversions. The first one they easily succeeded on. And the second one, to your point, it was a check down backwards pass that ended up like getting batted down. But because it was a backwards pass, it's technically a fumble as opposed to an incomplete pass. And then Charbonnet just like walked into the end zone, picked up the ball. Nobody else was around it. And that's what counted as the 2-point conversion. And then they ended up making a drive and winning the game with yet another 2-point conversion to basically the fullback. So crazy game. Yes, crazy game.
That was so weird because he picks up the ball literally like okay, God, play is over. He's picking up the ball, about to hand it to the ref, right? Like I saw that, but that counted as a touchdown or a 2-point conversion. That was crazy.
It was insane. But yeah, at the end of the game, they were talking about how they were forced to go for 2. They couldn't just tie it because if the game ended in a tie, they would lose the number 1 seed because they lost to the Rams earlier in the season. So they basically had to get a touchdown and 3 2-point conversions in a row, and they ended up doing it. So good for Seattle. But yeah, if you have Puka Nacua, you're going to win your matchup in fantasy. That's for sure. Because he
got
had
busy last night.
He had 50 points by himself. So love to see it.
He got busy last night. Other than that, man, I mean, I have really done. I just started doing a couple of things. I just kind of letting the day play out here. It feels like one of those days where, like you said, it's a gamble, but I'm just letting my deltas ride. I obviously got long deltas vis-a-vis a bunch of different types of positions. I'm just letting them ride, but it's a gamble because, like you said, we haven't typically held on to these rallies. And so we'll just see how this plays out. But I just started doing a couple of things here. I haven't even really posted some trades yet.
Yeah, I haven't done too much. I mean, we placed those earnings trades yesterday. FedEx is completely flat, which is interesting. This was that 300 strike call calendar spread. And like we talked about, because it's a short-term one, the 7-day, even on a flat move, you lose a ton of value here. But next week we could see literally any upside move. It'll be fine because the debit paid here was 80 cents. So I just need this long option to get up to 80 cents in value. And that is very possible. Any 5-point move or greater next week, and this will be a profitable trade, especially if it happens Monday or Tuesday. But Nike, we tried. This thing's dead. Yeah. This thing is absolutely dead. We should have listened to our actual analysis of what's going to keep this thing propped up. And apparently the answer is not much. Down 10% after earnings, sub 60 for the first time since early July. But yeah,
it's funny because I'm pretty sure, it's almost like we in these, I almost think like we might have to do something where we talk about earnings trades and then we go back and listen to ourselves, like the initial part of the comment, because you literally said it. You said, well, the shoe trade has been dead. That's what we've been talking about. You're like, well, not dead, but yeah, it's dead. I mean, and they didn't have good China sales apparently. And they talked about how tariffs has hurt them, I guess, which was obviously one of the things that's been weighing on stock this year. So yeah, we should have listened to ourselves for sure.
Yeah. But yeah, either way, still a long-term trade. It was still a very small trade, $100 in risk with the 70 call calendar here. But same story. If this reverses because this option's in Feb, it'll be fine. But yeah, kind of surprising to see nothing able to keep this thing up. But yeah, Bitcoin rallying, IBIT up $2. It's great for this position, the 60-65 inversion that I've rolled to February. And this is I'm basically long stock here with my delta. So looking for a continued rally there, but MES position working out nicely. MCL long contract with the call ratio on top of it working out nicely. Got about half of my loss back from the previous contract that I rolled from, but everything else kind of just moving within expectation here. And I'm letting my P&L day guide me in terms of making adjustments, and SPX is coming in nicely with the continued rally we're seeing here. And we'll have to come back to next week when we get some more premium out of this thing, see where the market ends up. But these trades are looking fine.
Nice. One trade that's not on either one of our sheets that I just happened to notice as we were starting to show, Rivian. Rivian has been making a monster move more recently, 2 strong bars in the row. The stock is quickly at 22. And yeah, I mean, look at this thing. It's been on the run.
Yeah, this is
people trade it.
Being resuscitated for sure. But yeah, I think it's back in the conversation. But this is one of those products where you perpetually have high implied volatility. Even with an IV rank of 50-ish, you still have an IV of 80%, which tells you that an IV rank closer to 100 is probably an IV closer to 100 as well. So if you think that the headlines are going to move this thing eventually, like when it's trading down in the teens, now you have this great opportunity to capture some gains if you were bullish when the market wasn't looking at it. So another thing to keep in mind is like, just because people aren't talking about it doesn't mean that they won't in the future. And this is a great case here showing just that. Tesla down a little bit, which is always interesting when you compare the EV car makers side by side, but Tesla's sitting at highs similar to where Rivian is now. So still a subtle move, down 5 points, 1%, nothing too crazy here. But looking deeper into some of the other futures markets, ETH up 7%, Bitcoin almost up 4%. So big macro rally there. Silver will not be stopped, still ripping higher. It's absolutely nuts. Sitting at 67.5. Crazy. But NASDAQ, oil, natty gas, all moving to the upside. Really not much moving to the downside other than Japanese yen down over 1%. That could be interesting. We'll check out the Tasty FX tab, see if any of the positions I'm in are coming in nicely. But yeah, kind of an inside day with the exception to a handful of names. But if we look at the equity markets, S&P 100, Oracle up 7%, AMD, Nvidia, Intel. Do you see a theme? Palantir, big moves to the upside. They're all leading the charge in the S&P. Downside, your classic retail stores, Home Depot, Lowe's, Target, Starbucks, Walmart, Costco. So interesting shift in sector rotation a little bit, at least we're seeing here in the S&P. And if we look at the NASDAQ, we'll see similar names to the upside, but to the downside, Lulu, Tesla, but these are all 1% moves, except for Lulu, down 2.5%. Upside, same story, Micron, AMD, MicroStrategy catching a bid, Nvidia, Intel, Palantir. So a lot of tech names, a lot of chip names, a lot of AI names moving around to the upside specifically.
So in case, for those of you who might have forgot, early in this week, we were down 4 days in a row. Remember that? And going back to late last Friday, I think, too. But the point being, a lot of that was a sell-off in tech names. And we were marked on the show a couple of days back of how they were buying all the crap, the Lulus of the world, or just the things that had been underserved, the Walmarts and all those. And now we're seeing the absolute reverse. And also on top of that today with the positives, you mentioned MicroStrategies, Bitcoin's up. Again, it's the same money that's trading Bitcoin and the tech names. So they're really kind of tied together more recently.
Yeah, absolutely. And we've seen that over the past couple of months. I think we've seen more of that where you have macro moves in sectors, high correlation moves, and you see rotations in to one, rotations out to another. And it's kind of been the theme over the last couple of months as tariff news and industry news and just general things happening are kind of driving that concentration. If you want to join us in the YouTube channel, we are streaming live there. Tasty Live. You'll see this video streaming live. I've got the referral program pinned to the top of the chat. If your friend joins, this is a great talking point for your forced interactions with aunts, uncles, cousins. Tell them about Tasty Trade. Get them on board. You both get $100. So check that out. But yeah, we have plenty of time for questions. If you have any questions about our trades or trades you're looking at, let us know in the YouTube chat, and we'll get to them right now.
Right now.
Right now. James Bond, 007, kick it off. I have a naked call in GDX, Feb 20th, total credit of $1 at the 86 strike. This started as a call ratio. I've rolled up and out the strike price. Anything else to do? Let's take a look. So you have 86 for $1, Feb 20. Short call. Yeah, I mean, you basically have a covered put risk profile here. If you just look at the curve analysis, it's similar to having short shares with a short put against it. But yeah, not much else to do unless you wanted to add a downside put. So you have $1 in premium. That's probably why you're running into issues here, is because the current value of the option, even the out of the money options, are $500, $400, and you only have $1 credit. So I think even you can still lean short, but like even throwing on a 75 put or an 80 put, picking up between $100 and $300. You could even go to a straddle if you wanted to be more neutral. But I think picking up some premium and getting your credit a little bit higher will help you in the long run. But again, if you want to lean more short, 80 strike, 75 strike, they have premium here that makes sense, and you're still going to make back a ton of value even if you get a sell off closer to 75. So that's what I would consider. But other than that, it's going to be a waiting game for sure.
Yeah, no doubt about that.
A couple of people followed the FedEx trade. Yeah, no problem if you just cut it. It was a super small trade anyways, but flat move means vol crush everywhere. And we saw, because it's a flat move, that just increases your vol crush as well. So we're seeing these implied volatilities were in the high 30s yesterday, mid 30s in the back month. Now we're sub 30%. And they just killed the 7-day cycle, brought it all the way down to 23%. So huge volatility crush here. You can see across the board, regardless of whether you sold puts or calls or bought puts or calls, you're losing money on all of the value here. But again, this is an 80-cent debit trade. So if you look at the 295, 5 points lower than my strike, it's trading for about 70, 80 cents. So we need a 5-point rally or more on Monday or Tuesday, and this can come back to a scratch. If you get a bigger one, it'll be a profitable trade, but as of now, there's nothing really to do with this trade. Costco.
Another retail name that's down today, as you correctly noted, how retail is struggling.
Yeah, we've got the calendar spreads to the upside here. I've just been rolling this short option week to week, but rolling it into a 6-point sell-off isn't really going to help me too much. We can look at this here. Yeah, I could pick up a 60-cent credit to roll it out another week, but I really would rather see if I can roll into a rally or just get out of this trade if there's a bigger rally next week. Yeah. The closer I get to the long options expiration, the more it turns into a vertical spread and just slows down the ability to get value out of this thing. So I'm going to wait and see what happens next week. But yeah, again, I'd rather roll into a rally versus a sell-off where it kills the premium collected. Let's see. Steve did the FedEx trade, legged out on the short side, closed the long leg in hopes of a small bounce, but much happier to take that loss than the Nike trade, which I did nothing in. Yeah, both of them, Nike moved to the downside, but much longer term. If this move can be reversed, it can look, it'll be fine. But FedEx, much shorter time frame.
I feel like my calendar call spreads, when I think about it, really did well in the third quarter, not so much in the fourth. Just kind of thinking through it, I feel.
Yeah, I mean, that was the heyday of the rallies, and you make more on the upside ones because of the increasing extrinsic value across the board when you have a higher stock price. That's why it's harder to make money on the put side, which is why we don't really do it too much. In the Nike one, even though this market moved down, like there was just no premium on the put side. All the premium was on the upside. So it was a tougher one to get into. But yeah, we haven't seen many like rip roaring rallies this quarter for earnings. Few exceptions, but
few exceptions like Micron.
Yeah. It's been a pretty meh earnings cycle for sure.
Yeah.
Anyway, we can set up a call ratio on GLD. And if you would, what would be your duration? Goal is to catch the upside and not overpay for the call. Would you consider adding a put? Let's take a look. GLD. So you're looking for further upside? I mean, yeah, if you want to combine a short put with a call ratio, totally fine. I don't like taking undefined risk in a 20% IV stock or product like GLD. You can't really, I mean, I guess it's okay. You can still pick up a decent credit if you did like a 10-point wide call ratio. But yeah, to your point, if you don't want upside risk, then I would just do a straight up vertical spread. Get into like a $4 10-point wide vertical spread, and then you can sell a put below that market, like selling the 390 for a scratch or 395 for a similar credit. That way, if you do get this rally you're looking for, you have no upside risk. Problem with a narrow call ratio, like a 10-point wide call ratio on a $400 product, is that you can quickly see losses prior to expiration just because you have that undefined risk to the upside. So if you're more comfortable taking downside risk, I do like the adjustment of selling a put to finance the call spread. And you could even move this out if you wanted to pick up more premium. You could move it out and get a lot more premium with a little bit more upside profit potential here, like a 15-point wide starting at 410, something like that. But yeah, nothing wrong with this setup. It's going to be a high probability trade as long as you collect a credit overall.
So I have employed one of your trades, and I still have it on, the crab trade. And again, that's done me real well, actually, long the Feb 390 against, and it's $15 wide. Still short the Jan 405 2 times and long one of the Jan, short 2 of the 405s there and long 420. Yep. And this has done me well. I'm actually up like $600, I think was the what I paid for it. I'm currently up 200 and change on it. So that traded, I think I got it for 650 actually, because I'm up 230. So yeah, that trade has done me well. And it's nice that I don't feel the need to adjust or do much. Most days I come in and I'm like, man, should I take this off? And I think about it every day and I'm like, I think gold is kind of consolidating here, looking for an eventual little more upside move. I'm just going to chill out here and sit on it. And it's been a nice trade.
Yeah, these trades are really nice, especially when you get into them cheap. Like this is a 15-point wide that you got into for $6, like you said. And this is a theoretical P&L over the next couple of weeks if we just fast forward. So you can see you have a nice neutral range of profitability. And the closer you get to expiration, of course, the closer you get that full butterfly feel, where if we're at 405 or near it, you're going to be able to capture all that intrinsic value. But yeah, defined risk, and that just goes back to like not wanting to have undefined risk to the upside, and still like not necessarily wanting undefined risk to the downside here. Like 20% implied volatility doesn't tell the whole story when you look at where this thing was. Like this thing is up 30% in just a couple months, and it's up 40 points, over 10% in just a few weeks. So when you look at the realized move, if you just look at those stats, and then you say, okay, where is the next 10% move? Like we're sitting at 400. How do we project going from 400 to 440, which is what we've realized from let's see. If we just say the bottom here is at November 5th. So in 1 month, we've gone from 360 to 400. That's over 10%. Where's the next 10% move projected? 150 days out. So it took 30 days to get up 10%. And looking forward, we have a 150 point projection or 150 day projection to get another 10% move to reach the implied volatility. So I think this is a good example of implied volatility still not really telling the whole story. And I still expect to see implied volatility here be higher. SLV is a lot more in line, 50% implied volatility. And SLV, you've seen go from 40 to 60 in the same time frame. But at least in SLV, you're getting the 50% implied volatility price point, where GLD, like you still, like this is an IV rank of 40 and we're looking at a 20% IV. It just doesn't match up. So all that to say, I like Jamal's trade. I like the crab trades. I like diagonals, calendars, zebras. It just makes a lot more sense to keep risk defined and go the debit route when you have a 10% rally that you've realized in a month and you're not projecting another 10% move for another 150 days, all the way out to May of next year. So sticking with the debit side, regardless of whether you're bullish or bearish or even neutral, it just gives you a lot more bang for your buck and it protects you if you're wrong.
Yeah, gold is unique in that way. I mean, it is, I feel like it's one of the most unique things that we trade, that we look at. I mean, it's part currency and it's part commodity, which gets to the idea of what you're saying here about the IV. I mean, it's weird, right? But it's weird for that reason. It's part currency and part commodity. And again, you look at all the commodity, the currency IVs, you'll see they're all in the teens, right? Like that's what we see for the most part. Single digits half the time. Bonds, single digits, right? So it's kind of weird when you see gold, which is usually probably like, I think fair value might be like 14 or 15 IV, and right now it's 20. So it's just kind of interesting in that way.
Yeah, and it's definitely its own beast, but still, when I see realized moves that don't align with future projections, it takes me off the undefined risk short premium route, because you're just not getting paid to take the notional value risk in there. But yeah, there's always opportunities from the other side, on the debit side. Question about futures. Do you scalp futures? Never, seldom, daily? What say you, Jamal?
I do at times. I actually do. I'll do it during volatile times more than anything. I think that's the easier way. I shouldn't say the easier way. It's you get bigger ranges and therefore are able to scalp. I mean, like right now, obviously we're up 60. So the idea of scalping, getting short here, I don't know where markets are going, and they're not really that volatile, I would say. So right here, I just don't feel I don't necessarily know what I would be looking to scalp here. Like as far as the ranges, I mean, I could try it within that, and I guess you can use that as your guide, the daily average true range or something like that. But currently I'm not scalping because I just don't see the need, but I definitely have at times. And I usually do it during the more volatile markets than anything.
Yeah, same. I'm just taking more static stands in some of these micro products. So like MCL is a product I've traded all year, this year and last year, just waiting for price extremes, taking the other side and just doing one contract because I know I can hold that regardless of what happens going into the future. And I think that's really the key, is if you're scalping or if you are doing more price extreme swing trading or longer term trades, it just has to be in a size where you can turn your scalp into a longer term trade. I think people get into trouble when they're trying to scalp a 10-minute window and they're doing it way too big and then they get smashed. So I think it's all got to be size oriented. But I know Nick has done a lot more scalping on the morning show. And the smaller you start in terms of your initial contract size, it just, again, allows you to layer in. So like a good example is not scalping in TastyFX products, but I've been buying this dollar franc pair 3 different times over the course of a month and a half. And I'm doing it in such small tranches that I'm able to dollar cost average down from 81 to 80 to 79. And now I've got my basis wrapped around 80. So starting with smaller contract sizes or smaller products and then layering into more allows you to add that dollar cost average to your scalping or swing trade endeavors.
Swing trade endeavors.
Rocket Labs? Mooning? Oh, yep. Yep. What is going on? Are we back in craziness world?
Yeah, I think a little bit. I think what's the other name that's like the ALAB? Yeah, that's doing a similar thing. Again, I really haven't traded either one of those two. I don't even know if they're related, but I feel like most times they're both moving around the same time. RKLB and ALAB. I don't know. I think we're back in those times. Again, strong day in NASDAQ is showing people buying all these names again.
Yep.
EE making a move. I think Oklo, I would imagine Oklo as well. Yeah, I mean, we're back, baby. We're back.
We're back. We're back. We're back. Yeah, 6 points, 8%. Rocket Labs up 10%. More, actually, 16%. 10-point move, 16% move. But yeah, these things are flying around. 100% IV tells you everything you need to know. And
I mean,
yeah.
Don't you, what? Don't you? Yeah, what? Yeah, I hear it. Yeah, Santa Claus rally is getting started. I hear the sleigh bells ringing. I'm telling you. It's beginning to look a lot like.
Mm-hmm. I think we're well on our way to 7,000. I don't see a reality where we don't end the year at 7,000. Who's going to stop us? Nobody.
We get to 6,900 a day. It'll be a heck of a lot easier.
Yeah. Oh yeah. With basically 2 weeks ish left, it's going to happen. Really interested in the SPY year-long trade. Buying power is irrelevant, so I think I'm okay with SPY, but it's 70K notional, which I do have liquid, but it's still a big portion of my portfolio. Is this the smallest instrument to try this out when buying power is irrelevant for me? Haven't done this before, so I'm feeling a bit nervous about it. In case we have a huge sell-off, I'm not sure how exactly that's going to work. Well, I can tell you how it's going to work. You're going to see big losses, but the whole key to this trade is to not use leverage or reduce your leverage to where if SPY sells off 40%, it's going to not feel great, but you'll be outperforming buying and holding SPY because you can roll down the put. You can roll it out a couple months and roll it down until eventually you have to plant your flag in the sand and say, okay, this is where my intrinsic value notional risk is going to be. But it's always going to be significantly lower than if you buy a SPY now and you realize that move in a static way. So yeah, I'm doing one contract. SPY is 68K in notional. XSP is the same. It's cash settled. I'm using MES, which is half that. So the notional in MES is 33K. Uses a lot less buying power, but it just depends on where you want to go. Nothing wrong with SPY, but yeah, if you have the liquidity to cover it, like SPY is not going to zero. If SPY goes to zero, these accounts don't matter. How much rice and beans you have in your pantry matters more. So I'm not considering the fact that SPY has a real possibility of going down 50, 60, 70%. It's not in the realm of possibility in my mind. But I'm doing this in a way where I can cash secure this position so that even when you get those jolts of volatility like we did with the Japanese yen unwind and the tariff stuff, it's a situation you can wade through. And over time, we've shown a lot, like historically, when the market's down 10, 20%, if you fast forward 6 months, 1 year, 3 years, 5 years, the probability of it being back up is extremely high. So that's another reason why I'm going to S&P 500 or the NASDAQ, is that it's extremely predictable that these markets historically have always recovered. So that's where I want to park my risk if I'm taking a bigger chunk of risk and I'm going to do it in a consistent way. But yeah, MES or SPY, totally fine. SPX call butterfly for December 29th. Ooh. I kind of like this. We got to put our money where our mouth is.
I like the idea already. I know, right? I like the idea already.
69.50, 7,000, 70.50 for December 29th. Why not December 31st?
I was about to say, why not the quarterly?
69.50, 7.75. Let's see. $2 for the 10-day, or I'm already in an iron condor or a Super Bowl in here, but 69.50 is right where my spread is. So in theory, I'm already here with you in spirit, but 69.50, 7,000, 70.50.
$4 and change, I think.
Yeah. For $2 more or 2 more days. So yeah, I don't mind the shorter term one, whatever you want to do, but
I'm gonna put it on.
Yeah. This is a trade where you're likely going to exit prior to expiration, unless you just get a continuation like this, where every single day we are open, we're up 50 points. Then maybe you roll the dice a bit, but yeah, cheap way to get a lot of upside exposure here.
12 days. 100 points, huh? It's not impossible.
Mm-hmm.
Yeah, whatever. $400. I'm gonna put out there for $400. $4, I mean. See if we get filled. Yeah,
Love it.
Stingy. I'm being stingy because I know we're gonna pull back today, right?
We'll see. Yeah, what's Vol doing? We haven't talked about that. Yeah, 17 and change, 19. We're sub 20 almost all the way through the J contract. VIX at 15. We are going to 7,000 and beyond if this is the vol environment that we're in.
It's been an interesting year for volatility in VIX. On This Week in Stocks, I showed a couple of charts this morning, and one of them talked about the average VIX price for the year. It's 19. And again, long-term average of VIX is 20, right? So close to there. And it was obviously a year where we moved a lot. And again, I think we, even in the lull periods, we still had a lot of movement. VIX was probably, you would have thought, what did I just get filled on? I got filled on it, $4. There we go. Filled on the spread. But yeah, it's just kind of fascinating. The kind of year we had, there was never really a dull moment, I would say, which was kind of nice for us trading this year. A lot of two-sided action. And yeah, the average VIX for the year so far is 19, which I basically would end up to be. We only got a few more trading days left in the year.
Yeah, it's been when I think back, it feels like it's been a pretty muted year other than the tariff stuff. But when you scale out to the VIX, you can see in 2025, if we just look at how many times we've gone above 20, it's still a lot. It's like every month
for you too.
Yeah, every month there's something happening. To 30, we've gone 1, 2, 3, 4, 5 times. If we rope in this end here, close to 30, I should say, we've hit 5 times. This obviously, the big spike to 60 is contributing to a lot of the VIX elevated averages, but still, we've had plenty of two-sided action, plenty of two-sided markets, even in the Mag 7 names. If you look at NVIDIA, like, it's been crazy. Started at 150, dropped all the way to sub 100 with the tariff stuff. Then we had the euphoric rally to 180, dropped down to 160. Euphoria continues, go to 210. We drop immediately back down to 170, and now we're sitting at 180. So plenty of two-sided action, although the chart is up and to the right. It's been crazy. It's been wild.
26% of the days this year, we were above 20 on the VIX, like had a close above 20. So just so you have an idea. And I don't know, that breaks down to probably about 60 days or so, 60 trading days.
It's crazy. Crazy.
And if you're wondering, on top of that, I'll tell you too, The average is like 37% across since 1991. The average, and then again, there's plenty of years where we were well above 20 for majority of the year. There's about 4 years where we were above 20 for 90% of the year. That's 99, 01, 09, and 2022. So the average obviously is skewed to some of those few years where we were just largely above 20 most of the year, but we're below that average when you talk about over time, over the last 34 years. Again, that 26% of this year was above 20.
Yeah, it's been a crazy year. It feels like it really hasn't, but it has, really has.
Yeah, indeed.
AVGO put spread 330, 310 for 650 credit. We talked a little bit about this yesterday, but I don't like when I'm selling an at the money put spread and I'm not collecting 50% of the width. You should expect to get $10 for the spread. If you're selling a spread right at the money, yes, you do have 5 points of wiggle room to the downside. But like if I'm actually bullish in Jan or Feb, I'd rather just do this, do the 340, 320, get closer to $10 here, or go the debit route, go the call spread route, where you can manipulate your risk reward a lot more easily. Same amount of risk here. If you did the 330, 310, same monetary risk. It's of course shifted up, but if you are bullish on this thing, you can make almost 3 times as much with the call debit spread versus the at the money put spread here at 330, 320. And your break even, your loss range is really not that different when you consider the 320, 340 call spread or the 350, 330. Just something to consider here. But yeah, anytime I see an at the money spread that's not trading for 50%, I'm just not going to do it, because over time, I have a hard time believing if you run this 1,000 times, I have a hard time seeing this be a net profitable endeavor. Just because it's a 50-50 pop, I should collect 50% credit, and it's not the case.
100% right. Yeah. Basically, what Mikey's saying is true. And you talk about the fair value of that spread is half the width. And if you're not collecting at least that in that situation, especially at the money, it's not worth doing.
Yeah. And you'll see this a lot when there's put skew. If you're doing the same thing on the upside with calls, you'll see that in call skew where you're paying a lot for the defining risk option, and that kills a lot of that profit potential. But either way, whenever you see something like that, there's a way around it. So again, instead of selling the at the money put spread, I would rather just buy the call spread or shift it in the money a little bit. 340, 320, you're selling a little bit of intrinsic value here, but you can make a lot more on that same rally, and it can happen quicker because you have a higher delta position. Let's see. Santa bought calls on the last dip, it turns out. That'd be amazing. Santa just YOLOing calls. Anything in Rocket Labs? Not for me.
Same.
Yeah, it's a tough one.
I already sort of dance with the devil with BE. I was short of strangle in there the last couple of days. Literally just closed it. Gonna post that after the show. So I danced with that devil. That started late last week. I looked at BE, I look at Oklo, and both of them were kind of high IV. And I was like, I could rent a strangle in here for a little bit, and did. And was able to escape, make some money in BE. I'm done. Rocket Lab, similar vein. I mean, those names, Rocket Lab, ALAB, same deal. They're high IV. They move a whole lot. You got to really, you're dancing with the devil when you mess with them.
Mm-hmm. Anything with lab in the name, it's going to be a troubling product sometimes. They're cooking up some stuff in the lab, but yeah, nothing for me. I don't need this kind of volatility in my life to end out the year.
Very smart.
Yeah. So example trade for the SPY year long, I would literally do nothing else. I mean, I have the 6,600, 7,100 in SPY. That's the 660, 710. So I have I think I have the Jan end of month, but you can go to Jan or Feb. Because this is a year long trade, you can just skew it however you want. But if you're waiting for a sell off, then by all means, this is not the day to do it. But to the same point, I'm going to be in this trade all year. So it's ideally, of course, I'm turning this in or turning this on into a sell off so I can get a lower basis, which is what I did when I entered my trade. We were down 50 when I entered the initial trade, the 667.10. But this is basically it. And then you just adjust the trade throughout the year. And IBIT, we've already done that. I have a 20 point in the money IBIT short put, and it's still a $1,500 winner because of the premium I collected throughout the year. So I expect a similar story with SPY. I'll be diligent on eliminating upside risk to ensure that if we do continue higher and we're up another 10, 20% next year, that puts us at 7,500 in SPY or in the E-minis. So, but you'll always outperform a buy and hold to the downside with a strangle, especially if you take the long delta eventually with that short put. Nike short put in Fed? Certainly could.
I was just looking at that actually a little earlier. I didn't really think there was much premium in there. Is there? I guess you could.
I mean, it's kind of crazy.
I was actually wondering if there was that was actually what I was looking at when we first talked about it, and that's actually a great idea, right? Like usually after earnings, if a name is down, usually the ball is still up, and you can possibly do something like that or a strangle. But I don't know. I don't really love it.
Yeah, I mean, maybe call Zebra instead for $800, something like that, or a diagonal spread. But yeah, the premium here is just not that great.
Yeah, I mean, just take, so that's why I was halfway distracted when you're saying it, because you reminded me of IBIT, and I still have my 55 straddle in there, but just look at that name, similar price point. As a matter of fact, IBIT is lower, and look at the amount of vol and the amount of ability and different trades that you can do as far as a straddle, strangle, etc. So, don't force it in Nike, I would say. Go stay in something in like IBIT that actually has the vol, and it's just better to trade in.
Yeah. And to your point, they killed vol here. This is now a 30% IV product, which is at my no-go zone, regardless of IV rank. If you're dealing with an equity with a board and a CEO and all these things that can happen and push and pull the stock price, and there's only 30% implied volatility in that product, I'm probably not going to be selling premium in there. I'm probably going to be going the diagonal spread route or the calendar spread route, something like that, just because you run the risk of selling this put for $1, and now all of a sudden Nike's down at 30, and you've sold this for $1, and you're taking $2,000 of risk. So it's it just doesn't line up when you have super low IV in these equity products. I'd rather take a stand directionally and go the debit route where you can make significantly more for way less risk.
All right.
Amazon. Buy the 220 call, sell the 240. Keep selling around 20 days to reduce cost basis. Let's take a little look-see here. The December 2026 220 call. Okay. So yeah, you could inventory delta. And we talk about diagonal spreads all the time where we're going more near term. You can do this with longer term strategies. And I do like it when you have low implied volatility, 30%, like we just talked about with Nike. But yeah, if you can afford to do it and you want to inventory bullish delta on Amazon, and you want to sell something against it, the 240 in Jan gives you $250. So you'd be getting into this 20 point wide diagonal for way over $20. But when you look at the curve analysis, because your long call has so much extrinsic value, even into a rally, you really don't start taking upside risk until you get way in the money. So you're going to have your opportunity to close this trade if it goes in the money. The thing though is if you really want to try and milk this for all it's worth, you have to be diligent in getting this call up and out if you do get a rally. So if Amazon goes from 220 up to 240, I'd be looking at buying back this 240 call, going to Feb or March and moving this thing up. Like, look at this. When you roll, the second you roll it into the earnings cycle, going from 28% IV into 35% IV, just rolling it 1 month out, look at all this premium here. So this gives you the ability to buy back this near-term call that's not going to appreciate in value all that much and roll it up and out to the 250 or the 260. If you roll the 260, you're still picking up a credit. At least right now, you still would, as long as this is done prior to earnings, which is definitely going to be the case. But if you get this rally, you can roll up and out, still pick up a credit, give yourself another 20 points of upside wiggle room in your long call. And now you'd have a net basis that's less than your overall width. So I like this strategy for sure, especially if you think next year Amazon is going to get back to highs. This is a strategy that certainly would play into that. Wish we took the Oklo 100 calendar yesterday. That was a quick $140 lunch money. Yeah, I wish we did too. I was scared. I was scared. But yeah, March, Jan, I mean, it couldn't have been that expensive. Actually, maybe it could have.
Everything is expensive about that name.
Yeah, I think that's what we did. We looked at it. It was too expensive. We were like, But yes, great trade. Great trade indeed.
Yeah. Winners.
What's the difference between a zebra and a diagonal spread? So a zebra, just looking at Oklo here, if I buy the 70 twice and I sell the 85, I'm basically getting into a stock rental position. You can see I'd put up $2,800 to get 100 deltas to the upside of unlimited profit potential with a defined risk trade. So I like this better for low IV products like GLD, because in Oklo, as you saw, we're putting up $2,000 plus for an $80 stock. In GLD, it's going to be way less costly because we're dealing with a 20% IV product. So same story here. Relative cost, same cost, $2,500, but we have a $400 product that we're dealing with now. So, and of course, the more near term you go, the cheaper it's going to be. So if I do this in Jan, the 390, 400 zebra here, getting rid of all the extrinsic value payment or most of it, $2,100 to get 100 deltas to the upside in a $400 product. So as you can see, we've got basically a stock rental position here to the upside. A diagonal spread, you don't have that unlimited upside profit potential because you are just doing it one for one. So if you're buying Feb and you're selling Jan, you are getting into a similar upside profit potential trade in the near term, but you don't have that same 45-degree angle upside risk profile as you do with 100 shares of stock. So this is also a much less expensive trade because you are getting rid of that unlimited upside profit potential. And then the only other alternative would be like a calendar spread, which is a pure extrinsic value trade with no intrinsic value profit potential. And that's even cheaper because you're just dealing with extrinsic value. So that's really the high level difference. Massive sell volume on Bitcoin at 1233. Yeah, it did drop a little bit. It did drop. Let's take a look. Ooh. Yeah.
Massive talent.
Mm-hmm.
I don't know about volume. I don't really see massive volume. But it did sell off, yeah.
Apparently there's a Trump announcement at 1. Wonder what that is.
I don't know. No telling.
No telling. I guess we'll see at 1, huh?
Guess so.
Couple minutes left. Earnings are basically done for the year. Not much to even consider looking at. Yeah, none of these products I'm going to be trading, and there's nothing really next week with the holiday. So it's going to be movements in some of these names that we've talked about. It's going to be more macro movements in the E-minis, NASDAQ. We'll see what happens there. But yeah, it's actually crazy because yesterday on last call, we were looking at the SPX implied move for today, and it was still like 40 points with 1 day to go. And we're exceeding that, up 60. So next week, going into the holiday, December 26th, only a 65-point move for next week. Disgusting. Disgustingly low.
There's there's 3.5 trading days, is that right? Basically between now and then. I mean, not including today. You got Monday, you got Tuesday, you got Wednesday is a half day, I think, and obviously there's no Thursday, and then there's Friday.
Yep. I think you'll see, maybe you see a movement on Monday. I think then you just get a little chop action for the rest of the week, and then you see some movement on Friday. You might see the activity barbelled to Monday and Friday, but anything can change. And sometimes low volume, super light volume can create big moves. So just keep your eyes peeled. Make sure your risk is where you want it to be. We've seen that many times before over Thanksgiving and Christmas, where one market or the general market is moving in a big way on light volume. So just keep that in mind.
Well, I'm about 12 points away from being right, Mikey. I mean, we said 88 points on the week. We have moved 141 points on the week. And I said it's going to feel like a whole lot happened where we're going to end around 68.50. So we're pretty close to it. Pretty close.
Yeah, I think you'll get it. I think you'll nail it. 68.50 in SPX feels like a nice round number to end the week on. But yeah, I mean, given the vol environment and the fact that we're getting interest rate cuts, blah, 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 you know, that it could already be priced in here with the markets near highs, just a tiny bit off highs. But I think we go to 7,000 by the end of the year.
There it is.
But that's just me.
12 days to go.
12 days to go. That's it. We're out of time. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Stay tuned, though. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Check out the referral program. I pinned it to the top of the YouTube chat, tastytrade.com/referral. We also have the money match promo, tastytrade.com/money match. A couple of things for y'all. If you don't have an account, or if you do have an account, you can refer your friends, your cousins, your uncles, your angry family members. Give them something to look at every day with us. Flip those frowns upside down, if you will. But yeah, have a great weekend, everyone. Go Bears.
Go Bears.
I think the Bears are going to win, and I think it's going to be just a run the ball fest, similar to what we did to Philly, where Swift and Monungai both got 100 yards and some touchdowns. I think we're going to see the same thing.
I love it. I love it.
And it'd be great. But yeah, we'll see what happens. We'll see what happens the rest of the day. We'll see what this Trump announcement's about at 1 o'clock. Maybe I'll tune into that, see if there's any tradability there. But yeah, have a great rest of your trading day and weekend, and we'll see you same time, same place on the shortened holiday week next week on Monday. Peace.
See you guys.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody? And welcome back to Risk and Reward. It was a pretty long trading week. It was the last full trading week of the entire new year. You know, next week I got Christmas and we got the new year. So we got some things to talk about, some things to catch up on. But before we do that, I hope everybody's doing well. And my brother Gus, how are we doing today?
Doing good, always good. Yeah, Rivian making me a happy camper today. I'll tell you what. I've been waiting on this move forever, and we're just finally getting it. They got a big analyst upgrade yesterday. People are raising price targets. I mean, across the board, analysts were upgrading them yesterday. Price targets are getting raised to the like $23 to $25 range. We were at 16, 17 to start out this week, so quite the hike on those. But everybody, the market is frantically trying to price all of that new information in. And it's going swimmingly for me. People are really high. Analysts, when I say people, I mean are really high on the new R1T, or I guess it's the R2 truck line. I'm not exactly sure of the models, but yeah, I think it's the R2s, I think, are the trucks, but they're really excited about the new line of trucks. They're really excited about the AI integration, and everybody has finally come around to something that I've been talking about forever, which is that the Rivians with their self-driving, and actually most companies not named Tesla that do full self-driving use LiDAR instead of Tesla uses cameras, and LiDAR is just better for self-driving in general because it can see through fog, it can see through rain a little bit better, and so the LiDAR self-driving like autonomy model is what people seem to be gravitating to a little bit more, and that was something else that analysts are drawing attention to in this case with Rivian. So yeah, but it's going swimmingly. Pretty much vertical lines on the chart. That's what I like to see.
I love that. I mean, by the sounds of it, anything to do with better self-driving. I know that was one thing that a lot of people are hesitant to do when it comes down to AI and somebody driving a vehicle with no actual human in the seat. So, I mean, if I were to hear something like that, I would feel a little bit more comfortable and a little bit more excited as to where the space is headed, because I think it's always going to be safety first when it comes down to those autonomous driving vehicles. I mean, we're talking about driving in traffic here. So whenever there's updates on that, I'm all for it. So interested to see how it pans out. But from a stock-related standpoint, sounds like Rivian's doing pretty well today, right?
Yes. Flying today. It was flying yesterday. I'm actually trying to decide if this is about where I should exit one of these two leaps. But I'm in this interesting situation because I have two leaps. I have a 12 strike that is September of next year, 273 DTE, and then I have a 25 strike that is January 15th, 2027, so 392 DTE. So these are 120 days apart, but the closer dated one is way deeper in the money than the longer dated one. So that would obviously make a little bit more sense to continue holding in a leap context if I want to continue holding. But then, conversely, obviously, logically speaking, you'd want to hold the longer dated one and exit the one on the front of the date. So I'm not exactly sure how I'm going to choose to manage this position, but I am feeling like I should probably take one of these two contracts off today with the juice that we have going on these premiums. The other thing is it keeps moving higher. I was having these thoughts when it was at 22.15, and now we're at 22.47. So
yeah, I was going to say, I mean, just an hour or two ago, I mean, we were at lower prices. So what a move on Rivian, and it seems to be holding so far. So Merry Christmas, Rivian. Christmas came early.
Yeah, no kidding. No kidding. Merry Christmas to me on that one too. I've been frustrated with that position for some time, but we're finally getting into prints. So, and it's also like should the percentages even matter in this context? Because I am now at hold on, this is gonna sound unbelievable when I say it out loud. Let's see. I entered these 25s at $1.60, and they are now.
What are they trading for now? So what? 600.
So that's a 5x on those. What did you say?
Like 5 something.
Yeah, and then I entered the 12s at $5.90, and they are at $1,200.
There we go.
So like a 2x there. So the 25 is obviously much more juice. I mean, that's such is the nature of options. That should be no surprise. But the percentage standpoint is also what kind of has me, getting cold feet here, because logically you would want to exit the one that's the 600% gain, not the one that's the 200% gain first. Logically, you probably should exit both. But I'm sticking to my convictions here. I would really only like to get out of one of them. So yeah, very, very tough situation. I'm juggling what to do, but I more than likely will exit one of those before EOD today.
No, that's so nice. And I mean, who knows? By the time today, we're trading at 22.5. I mean, we're just approaching 23. So regardless, both those positions working out really well. I don't even think you can make a wrong move right now. It sounds like just make the most efficient one. You can't even. So that's fine.
Yeah, I think the only wrong move would be if I hold both of these and then it like craters back tomorrow or something. But with the price targets being moved to like that 23, 25 ballpark, I'm sort of waiting to see those levels as well. We'll see.
100%. With that being said, we can jump into the TradingView platform. We got Rivian pulled up right here. Let's get a little visual on what that's looking like. An absolute banger to the upside today. So a dub on the board for the EVs today, Gus. But we'll zoom out a little bit over here.
Is anybody's sentiment moving on this? I haven't even looked. Is Tesla moving?
Actually, good question. Let's double check on that real quick.
We can trade Lee, right? LI. We have access to that too.
We should. Let me see. So Tesla's up a little bit. Not as much over the last 24 hours like Rivian, but I mean overall, seems like Tesla's the leader in the EV space, and they're trading at its highs into the end of year. LE?
Yeah, I wouldn't be surprised to see Tesla hurt by this move as well. I mean, obviously Rivian is their biggest domestic competitor.
Was that LE or LI?
LI.
LI. There we go.
That's still Li Auto? Yeah.
There we go.
Whoa.
There we go.
But there you go, though. it is jumping a little bit.
100% gapped up and then a run to the upside. So smaller company over here, but
I didn't realize how sold off this is. That is actually looking like a attractive long spot to me. I mean, somebody correct me if I'm wrong, but these are giant in China, right?
There we go. Zoom out. Give us a little bit of a better perspective on kind of where we've been and where we're at. Yeah, definitely trading at the lows. It's not. It's used to trading at these levels. So I mean, that's not terrible. It's not a terrible idea. I don't know what the IV rank's looking like on the Tasty platform right now, but definitely something to throw in the basket of EVs for sure. Cheaper underlying as well.
Yeah, and I mean, I think that they're like the second largest EV in China, if I'm not mistaken. I think there's is it Xiaomi EVs that are ahead of them, and then there's these ones.
I'm actually not too familiar. Yeah.
Yeah, I don't know, but that's interesting. I don't trust that this. I trust that this is the correct move. This is obviously a sustained move. This isn't like some crazy sell-off that's happening that might be over exaggerated. It's happened over the course of a year, but
yeah. There we go. I mean, with that being said, we got a little bit of action, and we got a little bit of action in the NASDAQ today. Nothing too exciting, but let's zoom in a little bit. If I'm not mistaken, I hear Trump is speaking at what 2 Eastern, 1 o'clock Central. Is that? I need to double check on that, but if that's going to be the case, maybe we get a little bit more volatility into the market. Again, today's Friday. It's the last trading day of the full week of the year. But
Yeah,
we took
I had in my head that it was 8 p.m., but
Was
maybe
it
that was
8
earlier
p.m.?
this week. He speaks often. He speaks often. I don't know.
Maybe so, maybe so. But I mean, since we're together right here, it's looking like price is not wanting to reject this value. So what we're going to do to here together right now is we're going to exit this position. And this time around, I don't want to wait for this to run all the way to my stop, right? Just because the market's starting to be a little bit choppy, volatility's kind of dying right before this here, and Trump might be speaking a little bit more. So instead of waiting up here, I'm just going to click this X right over here. So like if you're ever trading, you want to change your mind on a position, just boom, X on the position, it'll get you out whatever you're in currently. So that's one way you can have a little bit more confidence to just pull the trigger on some of these trades so that you're not kind of gun shy, because it's very easy to get back out of your trade as well. So with that being said, we got a little rejection off the value area low today. You know, we had taken that opportunity elsewhere off the first rip, and then the market started to trade back to this value area high. Really wanted to wait for the retracement all the way back up here. These were some early entries, but wanted to take a stab at it. It was very, very, very small risk on these. So we took a stab here, took another stab here. We got top ticked on the stop out, and then we pulled to the downside, but that still didn't, help the market run to new lows on the day. So there wasn't much there. And then we went and pressed up against our value area low right here. So that's kind of been the story of today, kind of put in the high, put in the low, and then kind of just trading within this range. And maybe we kind of trade with a little bit more uncertainty until we get more news coming out, or if Trump is going to be speaking here in a little bit. But that's been the move for the day.
We have
managing
the info
risk.
drop from JS2 here in the chat. It's 1 Eastern drug. Which is right now actually.
Cool.
Drug pricing and affordability, not illegal drugs. Initial headline didn't specify. I see.
Thank you. So I could have swore Donald Trump was just signing an executive order with something to do with marijuana, if I'm not mistaken. I'm going to assume that's past information from yesterday. I'm going to assume that's not what this one is related about, but correct me if I'm wrong.
If you ever want to know what Trump is doing with marijuana regulation, just pull up TLRY, and the share price will tell you.
I saw saw the funniest tweet today. It was him signing that executive order for marijuana, and someone said they got this man an AK on the list. This man, I thought that was hilarious. But we'll see what kind of volatility it brings to the market. What did you just bring up? What was I about to type into this?
Tilray, TLRY.
TLRY.
Yeah.
Cool. TLRY. Absolutely beaten up. I mean, these marijuana stocks, we'll look at ABC next.
What's that price say?
$11.05. That's a McDonald's Happy Meal. There we go. One share a Tilray or
that's true.
McDonald's Happy
Meal. Yeah, so we
Meal.
mooned over 15 when he initially made those comments, and then we've since come back down. So
yeah,
that's what I got. If anybody has additional info on what's happening with the marijuana legislation, because that seemed like a fairly sure thing. I mean, I don't know. I'm saying it seemed like a fairly sure thing. I think that the vernacular he used was that they would consider it.
That's
maybe
a no.
He said heavily consider it,
That's
or
a
something
no.
like that. But yeah, by no means was it ever a guarantee, I suppose.
We'll consider it. Hey, I'll think about it. Yeah, that's a no. Bitcoin, brother. Bitcoin's been up, it's been down, it's been up, it's been down. It's been a lot of uncertainty. We're less than a week away from Christmas time. So will we get the Santarelli? I have no idea. But Bitcoin hasn't been making any moves. Crypto's kind of just been trading within the same range we've seen the last 7 days.
Yeah, we do seem to be finding a bottom, though, at least to an extent, which is worth noting. I mean, we've tested these levels a few times and tried to go lower, but we just can't quite get there. I think that all the profit taking is probably done by this point. So now I think we're just kind of entering the waiting room until we start to move back to highs.
Chilling in the queue.
Yeah, the QUE.
Chilling in the QUE. Quickly check out some of the metals right now. Gold's still trading near its highs. These are going to be ones that I think are going to be fun to get involved in. Same kind of story, though. Difficult to trade these at the highs. I mean, what do? Risk to reward's not really in your favor. I mean, you can get long to try and maybe exit near the highs, but it's a difficult trade. But these are some of the levels that we're looking out for. Honestly, over the last few days, this level of value that we've been trading in has been, respected so far. So, I mean, I would at least pay attention to 4,340 based off of what this volume profile is telling us. But let's actually recalculate a little bit because we got to put it in for today's information too. Okay, there we go.
Oh, Merry Christmas to you too, Mike. That's thank you for the kind words. He said, just want to thank Errol for turning me on to volume profiles. It's really helped my scalping game.
Oh, I appreciate that, Mike.
How about that?
Yeah, no, that's fire. I mean,
Errol turned me on to volume profiles also.
No, I mean, volume profile is I was using it and I had no idea what I was doing for a long time. I'm not even gonna lie. I had no idea what I was doing, but it is really helpful. So it's nice that information is free nowadays. So we have the opportunity to use some of these tools. But I hope you have a good Christmas too, Mike. We're just looking at gold right here and just looking to see mostly these price points over here on gold. That's what's gonna be most significant, at least in my eyes. Maybe if you get short something down here, maybe look at these swing lows, but I don't want to jump the gun on something like gold. It's so attractive though, isn't it? Right? I mean, let alone silver. Am I right? So
yes, that's exactly what I was going to say. Yes, every time that we look at these things, I'm just like, I want to get short so bad. But yeah, like I said, I'm 2 strikes. I'm out on silver. I don't know what stops this at this point. So I tried to. There was a while I was trying to rationalize. I have given up on trying to rationalize silver. It makes no sense. 1,000.
It makes no sense. Silver to 1,000? Say less. The risk reward is in our favor now, if that's the case. No, but one thing, interestingly enough, if we have any other older individuals in the chat, though, I heard volume profile was more popular like 10 to 15 years ago. And let me know. I wasn't in the market, wasn't around in the market at that time, but it does make me think, like, is it just a generational thing? Because there are some tools that are more popular in our generation today, but some tools are just absolutely timeless when they're, just ran off of the data, the current data that you're getting from the market. But I am curious, because like even today we're trading a little bit more NASDAQ, and I know, our brother from the CME that was live the other day was talking about how it was SPX all day, and now NASDAQ is highly, in terms of volume, outperforming some of the other futures products. So it is interesting. I'm not too sure how it shifts from generation to generation and where that kind of comes from.
Well, I can say this. 15 years ago, I was in 4th grade, and I was in the investment club at my elementary school, and we weren't using volume profiles. So that's
he said that's actually Rose flexing on all the 4th graders right now. He said we weren't.
I think maybe I told this story on air before, but I was so frustrated because my friend and I actually sat down with like his uncle or something who was like a legit financial advisor, and we built like a proper portfolio. The concept was that you got $100,000 to paper trade, and then it was like this contest through the end of the year. Not to be confused with the same contest that I did in college that some of you are aware of. But anyway, so we sat down with like this real financial advisor and put together like a legit portfolio, like S&P 500, Berkshire Hathaway, like a bunch of good stuff. And then the girls that won, like didn't know what they were doing at all, and they took. I didn't even know we were allowed to do this, and I don't think they did either. But they took $200K in margin on top of their $100K cash and YOLO'd it all into something, and then they had like $2 million.
Yeah,
it was hilarious. But yeah, I remember being really frustrated because we spent all this time and they just YOLO'd with plus margin into some nothing. Yeah, it was really funny.
It's boomer bust. It's feast or famine right there towards the end.
Yeah, but what I can definitely say is that we weren't using volume profiles. So that's my experience with volume profiles.
No, interesting. I know, like for example, I know Josh uses them a little bit more often. And I think a couple other people, but again, it's just not as popular in our generation, but I think it will become a little bit more as we go forward. But Seth, in terms of the volume, I
was going to point it out. I was going to point out the question. You're good.
Do you have a video on volume profile? There is a video on the Tasty channel. Maybe we could drop the link in the chat, but we'll have to look for it. But if you want to look on the Tasty channel, I believe we have one that we had put out maybe a few weeks ago. If I'm not mistaken.
Is it one of your trading vlogs?
It is one of those ones. It's just a volume profile.
There's a playlist for those trading vlogs now, so
okay.
You can. Yeah, that would be a good place to start. But yeah, if somebody could find that and toss it.
I will say though, the video that's coming out this weekend, if you like the volume profile, you're really gonna like the video from this next weekend because it's gonna add a little bit more context from like day to day and in terms of like how to position yourself, what to look for, and like why certain levels will give you multiple opportunities throughout the week. So if you like the other one, I think this one will really piece together a lot of that information. So look out for that this weekend. But no, with that being said, I mean, I don't know what the market's doing right here, Gus. I mean, like today, I mean, this is a type of price action that'll make you crash out. So, I mean, I'm done for the day, done for the week, but I mean, I don't know what the market's doing now. And I don't know how we're feeling into Christmas next week. I don't know if we're going to be doing too much on Monday or Tuesday in terms of scalping, maybe position longer term trades into next week and into the new year. But in terms of scalping, I can't imagine the volume is going to be any good Monday or Tuesday. And that volume is critical for the scalps.
I'm buying the Santa Claus rally is here.
I know we did.
We established yesterday that today marks 6.5 days left in the trading year, and that's when this is supposed to start.
Hold on. No, you're right. Longer term position, Do we want SPY or QQQ? We've been neglecting SPY a little bit. We've been neglecting SPY a little bit. We can jump over to the Tasty Trade platform here in a moment, and we can look at some of those options chains.
I think with the shall we say, shrinking enthusiasm for, and not rapidly shrinking, but gradually shrinking enthusiasm for AI and for quantum stuff right now, that NASDAQ scares me just a little bit more in a longer term context, more than the S&P. But at the same time, I don't think the AI trade is going anywhere anytime soon. But we just have seen, the core weaves of the world have started to lag a little bit. We're not just straight to the upside anymore. Even Palantir is stagnating a little bit.
Golly, where do we go from here? I mean, this just seems like a massive bull trap or a massive short trap. We're kind of in one of those right now, because it does seem.
Yeah, this is a clear inverse candy cane right here.
Bro said an inverse candy cane. I never heard that one before.
Inverse candy cane 6 days before Christmas, super bearish indicator. If you catch inverse candy cane like on the week of Christmas, that's a whole different situation. Also, obviously performs better on Tuesdays and when it's over 60 degrees outside. But inverse candy cane generally a bearish thing. So
that's true. But one thing I got to bring your attention to is if you zoom out a little bit, you can kind of see that nutcracker structure, with the mistletoe.
You're so
off to
right.
the left.
This totally is nutcracker retracement. Shoot.
Exactly.
Oh man. Well, that's going to put us in contango.
That's going to put us in backwardation. How do we get long this into the all-time highs? I don't mind some out of the money puts on SPY. Let's see what some of them are going for. Start at 28 days. Scroll the other direction, arrow. There we go. 670 by the 675. What do we get for that? Something light. Nothing too crazy. 94 cents. Absolutely not. Nothing on the bone there. 6-7 kids. Nothing on the bone there. Maybe a 680, 675. Anybody else positioned for the all-time highs? Anybody else positioned for the all-time highs, or are you guys positioned for the downside?
I'm positioned for all-time highs.
All right, cool.
That's sure.
Chat, please. I hope everybody else, let us know. We need a little bit more data before we send this through. 680. We'll go 680, 675. That's $1.54. I mean, still just barely under a third. I mean, these contracts really aren't too attractive. Let me see. Let's go February 20th. Let's see if we did maybe the 675. Go a little further out, 670s, 130. Pull this up, 670, 680, 675. Oof. There we go. We just need $1.60. $1.58. 2 cents off. Can't do it, Gus. Can't do it. No. I'm okay getting on some long delta. January 30th. I think we'll rock with this. See if we get filled.
Did everybody hear that? Errol is putting on long delta.
Let's go.
This is a rare occasion.
On the record.
Everybody take a screenshot of the moment that Errol put on long delta.
It denies my trade. No, we're going to send this through at $1.60. If we get filled, we get filled. The market's looking like it's trying to get... It looks like it wants to be a little bit bullish right now, so if we could pull back, it'll fill it. But, I mean, if we keep heading to the highs, it might run away without us, but we're not going to chase.
Smart.
Let's quickly, anything else top of mind that we can touch on? I know VIX has been a little quiet, a little sad about that, though, Gus, right? We want these positions to work out, but if we're at all-time highs, we're setting VIX below 15, I feel, so... That's going to be unfortunate.
CoreWeave has turned around and ripped in the opposite direction. I'm pretty pleased with that. That's
CRW?
Yeah, CRWV. That's been catching my attention. I timed the bottom very well on that. I knew that CoreWeave had to move because I woke up this morning and my tweet from like 4 days ago when I got long CoreWeave had like way more likes all of a sudden. I was like, oh man, this CoreWeave must be moving.
I haven't really traded this one. I'm not gonna lie. Like I've heard all of the chatter with Jamal. I mean, you've brought up CoreWeave multiple times, but this is one I've really gotten too involved with. But I think it's
this is CrowdStrike. This is CRWD.
What was the ticker for
CRWV? Like Victor.
Good Lord. Like Victor. That's a touchy subject.
That's what they say, right? Is V Victor in the military phonetic alphabet? Somebody let me know.
Yeah, let us know.
So.
Oh, real quick, you know what movie I watched last night for the first time?
Oh, what?
Interstellar. It was one of the best movies I've ever seen.
Oh, really? Interstellar is my favorite movie of all time by a wide margin. Yeah. Yeah. Oh, yeah.
That's literally
yeah,
Paris's too. And she literally is the best movie. And I was like, bro, this thing's 3 hours. Like, I got stuff to do on the computer. Watch the whole thing.
It's insanely long. But yeah, I've seen that movie no fewer than 6 times.
Awesome. Yeah. No fewer than 6. Bro,
yeah, I've probably spent close to a day of my life.
I hear every single time you watch it too, you pick up on other things that you didn't notice the first time around.
Yeah,
Good
absolutely.
Lord,
It's
the wisdom in that movie too is just.
Well, yeah, and like there's just so many things happening that even still on like the 5th watch, you're like, oh yeah, it all starts to click. V equals Victor. Thank you, and thank you for the kind words earlier. Is that Mount Gorail? Is that Interstellar was the movie we were talking about? Yeah, there we go. Why not do Spy and normal monthly? Asks eMedia.
Why not do Spy and monthly? I guess we could have checked out Spy. I mean. ¿Por qué no los dos? Why not both? But why not both? We could look at, I don't know. We should have looked at the premium on both of the indices. I know. What do we have a position on? This is what, Spy? So we'll go to QQQ. So we have the one on in Spy, but we'll go to QQQ now.
Mike says, guys, I am older than dust, and I have never heard of volume profile. I have never heard of volume profile. So there you go.
Older than dust is crazy. We definitely can get a little bit more juice on QQQ. QQQ tends to be a little bit more volatile than the S&P 500. In this one, I'm in the 21-day cycle, and we can look at the 28 days as we come to a close here. 28, there we go. Oh, that chain looks disgusting.
Check the monthly chart, and you will see the heat miser pattern.
Oh, I could have swore we missed that one too, guys.
We're so stupid.
Oh.
How are we not picking it up?
Bro.
Errol should cancel Spy and go January 16th or February 16th.
I will admit that. No, I'm just eyeing NASDAQ again in the corner of my eye.
I was going to say, he's going to reposition to QQQ is what's going to happen. We got him to finally click place trade on one Spy trade, and then here we are back.
Man.
20-point wide iron condor in Tesla. The Fed DT. I like that quantification. Fed days to expiration. 380, 400 put, 600, 620 call.
There we go.
Well, that's wide. So that's really wide.
You do a 20-point wide iron condor. 30, 48. 20-point wide, man. That's a pretty wide one. I don't think I haven't done a 20-point wide iron condor. The largest iron condor I've done is just a $10 wide where I've collected about $3 to $4 worth of credit, but $20 wide, have to collect like $6 or $7 worth of credit. It's a lot.
If you have the portfolio to tolerate that, then yes, I absolutely see your thesis and agree. But yeah, it's just that's a lot to post up relative to my size. But if you got it like that, I say send it. Too much delta. I like that. Too much.
All right,
delta.
guys. Hey, last NASDAQ trade of the day, guys, and I'm done. All right, we're done here. See how this pans out. But that's going to be the last one of the day that we have. We're probably going to put our stops somewhere in around 25,586 because if we're trading at these levels again, don't want to even touch it. Last day of the trading year, trading around near that value area low. Do what you will with it. We'll see how the market pans out. Put your stops in.
If you guys have ever seen the Dave Chappelle crack addict skit, that's Errol with NASDAQ.
No. The discipline on points, I will say. So I will say, if you can manage your risk really well and take 5-point paper cuts, 10-point paper cuts, it'll allow you to get a few jabs because you're never going to pick off the top perfectly every time. You might sometimes. You really might sometimes.
Oh, yeah.
But
I'd like to hack on you, but it's if it works, it works.
No. I mean, no. To your point, Gus.
If it works,
no.
To
your point, Gus. I took two of the trades I took today. I should not have taken. Like the one now is more justifiable, but the other ones I chased, and it was a terrible risk to reward, and that's why I got stopped out. So I mean, to your points, whenever you review, you can see like there's 2 or 3 trades that I shouldn't have taken, and that would have saved an extra 30 or 40 or 50 points. And it might not seem like a big deal in the short term, but when you save 50 points week after week after week after week, you just save 500 points. You know what I'm saying? Like those things really add up. So I mean, to your point, it is always nice to see which trades you can also avoid and then which trades you can be a little bit more patient on. But if you do wait for that risk reward, it'll give you multiple times to take a couple jabs before the market does what it does. But no, there were a couple trades that I chased today. But with that being said, I know we're cutting it short on time here. Anything else top of mind?
Yeah, I mean, just to the point that you just made, I think that one of the hardest and most underrated skills in all of trading is the ability to do nothing and not overtrade when the conditions do not present a trade for you to get involved with.
Especially when they're so close to the conditions that you want. Ooh.
Yes. Yeah, and especially when you think, oh, you know, I could grab this extra $5 if I get in here now instead of waiting for the confirmation. But yeah, I think that having that discipline is genuinely one of the hardest things to learn in trading, and it doesn't get enough attention. If you and any book that you open on trading, it'll get a mention, but it's going to be a little deeper in there. And I think that is rule number one.
100%.
With doing nothing sometimes.
100%. And I will say, if you ever get yourself in a tough position in the market, if you have the skill to be able to cut your loss and just take the ego and pride out of it and admit you're wrong immediately, you're not going to be scared to take the next trade. You're never going to be scared to take any trade. With that being said,
if you're newer, I promise you get numb to the losses very quick. You just got to stick with it. And if you're not getting numb to the losses and your years in, you're taking losses that are too big, and you need to be tighter with your risk management.
Absolutely. Anything else top of mind? Broncos 13-2. A couple more games.
Last night was unreal. That was craziness last night. Not the Broncos, obviously, but oh my gosh, Sam Darnold turned into prime Tom Brady in the fourth quarter. That was crazy.
I didn't. I have to catch up on the highlights then. I didn't catch it.
Yeah, insane. Like instant classic last night. But yeah, Broncos look legit. If they get the 1 seed, they obviously got the inside track. That 1 seed is so huge.
I hope we get the 1 seed because we need to clinch. We really need to clinch the first round so we need to clinch that so we can skip the first round. Just because the Broncos kind of got away with a few games to where the record looks really good, but it could have easily been not that great. So I think we need to build the good habits.
The Giants earlier this year was
gosh!
Like
I mean, even the Eagles, right? I mean, there's so many games where it could have gone the other way. So hopefully we get the first seed because I want to get out of the first round because you know how football is, boom or bust. Doesn't matter if you if you had no losses all season. It happens. Anything else on your mind?
Nope, that's all I got.
Cool. Guys, everybody, thanks for taking the time to hang out with us today. That's going to do it. Be sure to stay tuned for more segments coming on next. We hope everybody has a great weekend, and we'll catch you guys next time. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Watch the world fly by. Watch the world fly by. We're making our own way. We're making our own way. We're making our own way.
We are back. It is still Friday, December 19th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm Chris Vecchio. He's Ilya Spivak. Ilya, we're wrapping up the final full trading week of the year.
And you would think there would be more quiet, frankly, on the board, but it's kind of feisty out here.
It's a big day in crypto and stocks and metals with the yen. Yen Intervention Watch 2025 is officially on, Ilya.
Oh, yeah. That's
a little bit more time in the currency section today.
Interestingly, the story to have a discussion about at length today is probably Japan.
When you look around the market, I mean, I couldn't help but notice that euro-yen rates at a new all-time high today, going back to the inception of the euro. That's probably drawing some attention that obviously U.S. traders are probably ignoring right now, because it seems like we're putting some holiday window dressing, or at least pre-holiday window dressing, on the board here as we turn our attention to the slides. People are trying to get their books settled up. You know, I'm trying to imagine myself, Ilya, if I've had a year where I want to show my clients that I've earned their money for another calendar year as they prepare their year-end statements. I want to show them that I've owned some metals. I want to show them that I've owned some tech stocks. At least I can say that I got on board at some point in time. And volatility really isn't going anywhere either. This was something you and I discussed yesterday on Overtime when VIX futures closed at the cycle low in the F26 contract. And today we see a further flush in the VIX. We see a further push lower in volatility across the curve. That healthy contango remains. We're getting some covering perhaps of short-term traders expecting more of a downside push. But you mentioned the volumes here. You mentioned the activity in this market. It has been healthy all week long. Very high volumes throughout this week, and that's not different on today's session. Ilya, I know that we usually do the macro calendar next week at this portion of the show. It is a holiday week, so this calendar runs quite thin.
Not much of a calendar.
Quite thin. We can do this in 1 minute if we so desire. There's no major earnings reports, and I count a handful of things that would be released in the days ahead that potentially would move the needle for us here. Do we care about the forthcoming releases next week, as few and far between as they may be?
I don't think so. I don't think there's much to care about here. I think the larger issue here is probably sentiment. I'm not sure we're going to learn anything from next week's releases. Kind of ironically, actually, the RBA meeting minutes are probably the avatar for how much we ought to care, which is not at all. The Aussie has been probably the currency that's been soggiest against the US dollar, absent this yen move, which is completely on its own. And yet the RBA is actually expected to hike rates next year. It's one of the few central banks that's actually fully priced for a rate hike in 2026. So it just tells you how much the markets care about any kind of macro nuance here. It seems to be much more a sentiment on, sentiment off kind of a thing. I don't think the calendar has anything to offer for us, frankly, at this point.
Good point. Let's move on. Usually that's something that we'd spend more time talking about, but quite frankly, there's really no reason to spend that much time talking about it, considering, well, the lack of participation. And
even a macro nerd like me is not going to try to make sense of caring about this economic calendar for next week. But watch now, though. Durable goods suddenly explosive. Why? Because we said it doesn't matter.
That seems like a fair course of action. Ilya, once we get through, well, next week, we're looking at a calendar where there's really no meaningful data until Friday, January 9th. Friday, January 9th, when we get the non-farm payrolls report, and then the forthcoming Tuesday when we get CPI. Then we're back on track in terms of the two major U.S. data releases, non-farm payrolls and CPI, on the other side of the government shutdown. Ilya, we come into today with that continued volatility crush. You can see the IVs on that left-hand side of the screen for all of the stock indexes dripping lower for the Russell, sub 5 IVR. Can't remember the last time that I've seen that, quite frankly. But greater point here, VIX, now 15 handle, 15.36. It's off 1.5 today. It's nearly a 10% contraction. Not that we care about volatility in percentage terms, but at the cycle lows, we see our January volatility contract. And Elliot, narratively, this sets something up very interesting, I find, as we go into these 10 or 2 weeks of the year. If this is really the final day, right, the final full week, volume is okay. It's not past 1 million contracts. We got much more participation in the past few sessions. But as people walk away now and go into their holiday time off, we're effectively making the collective judgment as a market that there's really nothing to be concerned about here in the very short term. With VIX dipping into that 15 handle, with volatility futures in the F and the G expiry cycles closing at what would be cycle lows, what are people left to worry about right now as we head into the end of the year? I mean, there is AI, of course, but that seems to be baked in, dare I say?
I mean, it seems like what people are deciding here is that we're not going to have a committed rally. We're not going to have a committed sell-off. We're going to be at the underside. I mean, if you look at the S&P here on the daily, I think that it's really a perfect avatar for what's going on. I mean, just look at where the underside of the range that we broke after the Fed is. I mean, we're basically at the close of the post-Fed candle from the other side.
68.90.5.
So the sort of upshot here is grumble, grumble, grumble. The Fed won't give us what we want. That's annoying, but we're not going to make a big sentiment decision with the holiday basically right around the corner. So we'll see you all in 2026. That's essentially the sort of positioning upshot here, seemingly, where the market's just not going to make up its mind. It's not going to panic. It's not going to exuberantly rally back into the high. It's not going to make any statements. It's going to say, you know what? Nothing has changed, but we're not going to panic now. This is not the moment where we're going to set ourselves on fire and sell everything. It's also not the moment that we're going to buy up everything that's not nailed down because everything has worked out and everything's okay, and we're happy with the outlook 3 months forward, 6 months forward. It's neither. It's, okay, now we're just tired and we're not going to make a call. We'll see you all in January.
I see a chance of a greater reset within this channel, and it doesn't necessarily mean that the channel is going to, or the recent consolidation is going to yield a topside break. But looking at some action down here, Ilya, I could make a case that maybe we've started to put in some sort of bottom or bottoming attempt.
That could be a head and shoulders type of situation.
Right, because we're getting out of the channel here. We're getting back above that 68.60, 68.70 level. So it appears we're back into the broader consolidation that, if we go back to our 4-hour time frame, November 26th up until December 15th, we traded between 68.60 and 69.70 in the ESH6 contract. So, okay, we're poking through those areas here. If we are indeed rounding out, great, we've bottomed. Where does that take us? Not even clearing the highs that we had back on December 11th. So it would suggest that this slinky price action where we're not really making any sort of progress, it would continue at least through the holiday session. Maybe a little bit more upside here. Volatility is down in the lows. Obviously, if we're breaking out in stocks and we're going home for a 2-week holiday for most people, kind of the autopilot situation is vol staying down, markets scratching and clawing their way higher in a low vol, low volume float to the upside.
Yeah.
But not breaking up into new highs.
Yeah. Yeah, I mean,
so not
you
a test of
essentially
7K either.
Yeah, I mean, I think you're absolutely right. You have a setup here where you had a down move most recently, obviously, from the Fed meeting, which again, high fun here that every major top for the past several months has been marked by a Fed meeting. The year-to-date high for stocks, that's the October Fed meeting. The most recent local top that we're looking at the top of this channel, that's December's Fed meeting. So the markets are clearly focused on a thing here. But when you look at the bounds of that down move, it does appear to be cracked. Now, does that mean that we're going into an up move? No. It just means that this particular slope of the down move has been probably diffused here, and you're going into some sort of sideways drift. Now, could you find yourself meandering higher because there's no liquidity and you're bouncing things around over the next 2 weeks and you've diffused the down move? Yeah, of course. Is it possible that you meander down into, let's say, well, you have NASDAQ on the screen here, that we range ourselves lower to test 25,000 again? Is that possible? Of course. But it doesn't look like you're going to have conviction. It looks like you're going to either meander up or meander down, but you're basically within the bounds of these most recent highs and lows. The Fed high and this most recent low, call it just above 24.8 on NASDAQ. So are you going to have conviction here? I think you would need to have something really serious happen. And I think we have to entertain this possibility, if we get one of these years where the inter-holiday period gives you a little peek into what people are positioning for, because that sometimes happens. When markets get ready for some sort of a flush in January, if everybody is sitting there and going, okay, let's just get to the snapshot of the high water mark on December 31st. Let's take that snapshot so that I get paid and I go to my clients and I tell them, look at what a brilliant fund manager I was. I was long stocks all year. They went up all year. Look at that. Go ahead and pay me. But next year, I'm very pessimistic, and the first thing I want to do is dump everything and allocate short at the start of the year. You'll sometimes see that begin to seep into the price action between Christmas and New Year. And because there's very little liquidity, that kind of speculative sort intent, but basically saying, I want to be short when the markets open in January because I think this is going to be some sort of a flush, you're going to start to see it, and the thin liquidity is going to amplify it. So if for some sort of strange reason, and this is not the baseline that I'm working with, but if the markets decide that they're going to do something of conviction for no apparent emergency reason from here into the end of the year, up or down, that's probably an important sentiment marker, because you really wouldn't expect anybody to have conviction now unless they really have an opinion.
The NASDAQ here has a pretty clear level in my view. When we go down to like an hourly or 4-hour time frame from December 3rd out here to December 10th, and then again on the 11th. Concurrently here on the 15th, 25,000, we'll call it 650 up to 700. There's been some wicks on both ends that have occurred around there. So you want to see further progress. We've got to clear that hurdle. And then that opens up again, to rule of thumb, heuristic, you leave a consolidation only to return into it. You typically see a return to the other side of that consolidation. That puts, again, the highs somewhat back into focus. but not necessarily a push into new highs during the holiday if that were to occur. So ES and NQ, in my view, they have decent setups now, having turned a corner, perhaps stabilized at a minimum here at the end of this week.
Could be.
The Russell, not quite yet. It kind of feels a little bit more like the NASDAQ, where we have a level that, you get through 25.65, you feel a little bit better about things. Until then, you've got some stability.
Exactly. Yeah. I mean, like 25.50 to 25, let's call it 25.55 to 25.65 is a kind of band here, just as I look at my chart, maybe even up to, if you want to look at the March contract, because you're starting to run out of liquidity in December, all the way up to 25.75, maybe call it 55.75 as a kind of 20-point range. You need to clear that in order for you to feel any kind of positivity, because you're right. You're kind of on the other side of a break, and test after test, you're holding in it. So you really got to let the Russell show you something. Otherwise, the setup here looks a little soggier than elsewhere.
And the Russell, interesting, no matter how you measure it, and we're on an hourly time frame, but I see a head and shoulders pattern, potentially left shoulder, head, right shoulder.
Yeah.
You want to take the neckline at the 12th low. It's going to give you a target near 25.14. If you want to take the low here from the 10th, it's going to give you a target closer to 25.05. Either way, if you have this as a target zone for this topping out, we got into that zone, no matter your measurement style. And that's why I kind of like doing these blended measurements, giving you a zone, markets overshoot.
Yeah. Well, and markets don't align to a price level. It's always a range. There's always some fuzz. We're living in the real world here. This isn't some sort of stylized reality where, as long as you just figure out the calculation, you'll get to the price point. That's not how life works, folks.
No. So if we're thinking about this having been a local top, that topping process was completed down here. At least we've gotten some relief. So if you get back through 25.65 and you see these necklines start to go, you would, I mean, the technician's view is that the rally is resumed and the correction has been completed. Now, if we were to get up here and fail and start to make a break to the downside and then set another new local low, then we have a very clear downtrend in place.
Yeah, it'd be a different kind of story. You need to diffuse the sell-off now. And to diffuse it, you've got to get through that range barrier. If you can't get through it, then you've reached the initial target on that shorter term head and shoulders. And this is sort of the timing conversation that you've been explaining to folks, which I think is very, very important, based on the Stan Druckenmiller kind of calculus for timeframes. That's a head and shoulders on an hourly chart. So how much follow through are you expecting? Not much. You've kind of you've made the move. So does that mean the next move's up? No. Does it mean the next move's down? No. Because the time frame here is short. You've kind of completed what there was to complete. And if your time horizon was a day or two, this is the kind of pattern you would look for. But if your time horizon is...
Got it in 2 days.
Yeah. If your time horizon
15th,
is a couple
17th.
weeks, then you need this thing to give you something convincing.
Well, what's funny is as we round out into a potential reversal and bottoming here, if we were to think about what a new move higher looks like, depending upon, if we wanted to consider this, left shoulder,
Head and shoulders,
right shoulder.
head and shoulders patterns on all sides.
You're kind of, maybe it's just me, but I'm kind of seeing these look like maybe it's because it's confirmation bias, as you said, the best of all biases.
Who's coding these algos that apparently are shaping everything to look like a head and shoulders pattern?
They look like they're bottoming. They look like they're bottoming and rounding out.
Yeah,
they look they look textbook.
At least on this down move. Does that mean the next thing is consolidation or a rally? Who knows? But whatever down move we've had since the Fed seems to be at least resetting, resloping, as it were.
Right. You see the Russell downtrend here. We break out of it. We started to poke through the most recent local swing high on the 18th just yesterday. Yeah.
Which, it makes sense, right? It makes sense that it would be resloping. With the holidays coming up, nobody wants to have conviction. Momentum has been sapped. one of the most critical insights, I think, from technical analysis that's applicable here is possibly also the simplest one. Markets will trend, then consolidate, then return to the trend prior to consolidation.
Yeah.
Until you break some of these range tops, what you have is a sideways consolidation in a down move ahead of a major holiday and a big drain of liquidity, which makes sense. So you would think if the down move has conviction and if it has follow through and if people intend to engage it in January, this is actually a very healthy development here if you're bearish. You don't want the markets to lose their mind before the end of the year, because then the first thing that's going to happen in January is everybody's going to rush back and go, oh my God, it's where? And buy the dip. But if you see now a sideways consolidation where you basically meander from around these levels toward the lows, maybe a little bit toward the highs, back and forth, you don't really get too far from these current levels, which are kind of a middle oscillating axis between the high and the low. I mean, you're basically at the 50% mark here, as you can see on the screen.
That's what I wanted to walk through, because if the view here is a meandering next 2 weeks of the year, it's not a typical tasty trade. It's not the most appealing thing with the 12.6 IVR.
And it was
certainly from the
bearish for January.
Well, I mean, I'm thinking about, we've showcased some of the longer term research. What's the best type of strategy to apply given the volatility regime? And it comports with something that I know is part of the 12 Days of Trading series that's going on right now for day 10 today. It's about traders' workflow. My 6-step workflow is context, structure, execution, order mechanics, risk framing, and then life cycle. And when I'm thinking about the context here, it's about the volatility regime, the catalyst calendar, the liquidity sessions coming up. And liquidity session can mean, New York, Asia, Europe, or it can mean just generally what's happening in the market broadly. And broadly, we're going into a holiday season. We're going to have some half days coming up. We're going to have weird Fridays where we can't be closed, so the market needs to be open, right? Like, who's really working December 26th of importance? Okay. Making big trading decisions on a desk. Probably not many people.
Big trading decisions, no. Unless the world suddenly comes apart.
Yeah, like if a nuclear weapon goes off in Kyiv, then the markets are going to move on Friday.
Markets are going to wake up immediately. Liquidity is going to come back. Everybody's going to immediately find their way.
Everyone will be back at work. Casey will be on
their desks. Yeah, immediately.
Right.
And so, we're not reveling in catastrophizing a tragedy. This is just the reality. We have a number of open conflicts in the world. We are maybe spoiling for another one in Venezuela. Weird things have been known to happen with this assortment of live wires out there. And so you have to keep an open mind.
Thinking about the volatility regime, this isn't the best place to be directionally neutral when the VIX is sitting just above 15. But given where we are in the calendar, if we're thinking about playing for, over the next few weeks, over the next 2 weeks, we're going to see the market just chop around between the recent local range highs and range lows. The high is 69.88. The low is 67.71. So 67.71 to the downside, we could go 67.50, 67.25 on the short put spread side. We mentioned the recent highs were up to 69.88, so we can go a little bit higher. We'll go long the 670.25, short the 7,000. Ilya, for a 50% probability of profit over the next 2 weeks for the market to stay range bound, it's a little bit better than a 3-to-1. It's not quite a 2-to-1 risk to reward. It's somewhere in between as it bounces back and forth. But you could make the trade. Maybe you tinker a little bit here. You pull in the strikes. You're feeling confident that we're not going to test the upside. So we go in a little bit more to get a little bit better of a risk to reward here. But there is a way to look at the volatility regime and this catalyst calendar and the liquidity environment that we're heading into. And you could make that assessment and find a decent risk to reward and place in the whole, this thing's not moving higher. It's not going to set new highs. It's not going to set new lows. We're just going to chop. We've reset the table. There are ways to capitalize on that view right now. It happens not to be my view. My view here is that this thing is going to make a test of ultimately the top side levels. that
Could
we've
be.
seen play out recently, because consistent with those inverse head and shoulders bottoming patterns, this looks like it has the opportunity with the Russell, with the NASDAQ, the rounding corners here. And I'm a directional guy and I like being a bull. So I do need to make some adjustment today. For example, there is an MES Z5 contract that I'm still holding on to. I need to get this off the books and roll it into the H6 contract, because today is the last day for the ES-Z5. And so in doing so, I can go right here onto the platform. I can right click onto the contract, roll futures, and go right to review and send, because I want to be in H6 still. And well, it got rejected here, but I'm going to have to get that going here. Is that the point, Ilya? I need to get this off the books. I need to get into the H6 contract. I personally want to retain my bullish exposure, so I'm going to do so. The other side of the position was in the end of year, 12 days to expiration, 7,050 call spread. Now that's not doing so great because we haven't made the directional move to the upside. But with that vol crush and this setup here, given the measured move off the bottom for at least an attempt back towards the high 69 area, I'm going to ride this out for a few more days, because I will be actively managing my position here as you and I are working next week. And so heading into a Santa Claus rally window, last 5 days of the year, first 2 of the new one, in which since 1950, the S&P's returned 1.3% on average. I'm going to stick with my bullish bets. But I do see the neutral trades that are very viable. And quite frankly, if you structure it correctly, this is a market where I could be right and this thing runs up towards 7K, but doesn't breach it. And people are right that we don't get a breach of the recent local highs or lows. So it's just about swinging within that high-low range itself.
Yep. Yeah.
That's really it. I think we can move over to bonds, which
there's not much more conviction there.
Not much more to do. ZB here, down, not breaking out per se. This is the wedge that we've been watching on the lower term time frame, Zilia. 116 has been a line in the sand. We can see we tried to get through it today. We got to 115 and 30 ticks yesterday in the early hours. Today, again, rejected. We're getting pretty close to falling back into the downtrend off of the highs that we had on November 27th and December 11th. We're not really seeing anything move in Fed cut odds. I would look at the recent lows here. That might be a sign that maybe this market's getting ready for another leg lower. That would work out well for me, being long a short put spread, or being long a put spread, excuse me. But this has been a little bit tough because the vol's not coming in and we're not getting much directional movement. It really hasn't moved for the past 2 weeks, all things considered.
Yeah, I mean, it's been very, very quiet. It's been very slow going. I got shaken out of my long position because it looked like things were breaking down at the long end. Then it didn't ultimately run, and we've kind of gone not dissimilar from stocks. And I suppose this makes sense considering Fed policy expectations seem to be front and center for both here. If you want to look at sort of the breakdown around 115, just above 115 on ZB here, you had a support back from early November. You seem to crack it ahead of the Fed, and you kind of reestablished a new band, and it looked like there was maybe a break that was starting to occur kind of in the immediate aftermath of the Fed. You retested on the 11th. You have that interesting wick candle there. And then you kind of push lower. And by the end of last week, it looked like the bonds were breaking down. Well, we sort of short-circuited that whole conversation this week because that Friday break really didn't get any follow-through. And so now we've sort of reset to a new bottom with a low, let's call it somewhere just above 114 on ZB. And you're kind of stuck there now. And we have to decide. There has to be a decision, much as with stocks, about what is this? Is this a sentiment thing? Is this a Fed thing, because if you look at the way that the way ZB looks here, it's remarkably similar to the S&P. Actually, you have a topping, a break of a local kind of oscillation axis, and a rebound back to retest it without a break back up. And you're kind of in this no man's land where either that was a break that's now been diffused and now we're going higher, or we're just pausing and resloping the down move here because no one has conviction into the year.
No one has conviction. I just need this to get away from 112, which today is getting closer to 112, so it's not working out of notes. ZB, I'm still sitting long the put spread. I haven't made the decision to flip back over. I got to see 116 cleared, Ilya.
Yeah.
It's been a lot of chop, but if we're below 116, we're short. If we're above 116, we're long. That's been the ZB playbook. Notes here. Ooh, good thing there's so much time on the board. 63 days to expiration. This position is not doing too hot so far. I don't feel like I need to get rid of it yet. But in terms of performance, I mean, this has just been bleeding out little by little by little as we tether ourselves to 116, or 112. So I would like for that to move. But over the next few weeks, what's going to get this market moving? Short-term trades here, thinking about the low volatility, low volume, 14 days. Does this look like something that's really going to break significantly? You don't even see liquidity in here down below 111, Ilya. Do we really think they're going to bust on through like 113.5? It's picking up pennies in front of a steamroller. That's the problem with these negative IVR environments. It's difficult to size up a trade where you feel like you're getting good risk to reward right now. So operating the notes and bonds, it's still, again, longer term. Use the low volatility to get yourself a little bit more duration if you have a specific view. Otherwise, I'm looking at the calendar here. We already went through the 10s, the 30s. We went through the 20s. We don't have anything. 2s, 5s, 7s, Monday, Tuesday, Wednesday. Monday, Tuesday, Wednesday. Okay. Yeah. What's going to move the bond market? Fed announcement?
Maybe. I mean, you're going to have to.
Yeah, that's maybe.
Maybe. I mean, you're going to need. I mean, the January FOMC is not early in the month, if memory serves. So it'll be either, let's say, a Fed chair announcement. It's on the 28th of January, as I now see, and the probability of a rate hike has, or a rate cut rather, has only declined. It's at 22% now. So either we get something with a Fed chair announcement, that could be something. We could have speculation just engage and pick a side. Actually, we have kind of a case in point today. Just look at the yen. You have the news flow, and then you have the price reaction. And you might, this is the kind of thing where if you're not a macro watcher, you'd be very tempted to go, this macro stuff doesn't mean anything. This is totally backwards, blah, 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 blah. I mean, that's the assessment of the uninitiated into how macro actually impacts markets in this kind of a near-term speculative sense. We're not talking about structural macro changes over years that people allocate for. But the yen move today is an excellent case in point where the news is one thing, but it's filtered through a sentiment context. And then the price reaction is what you might think is counterintuitive. So could you have a headline, Fed chair nomination, a speech about policy, or just sentiment engaging with a view because it's decided it's a new year and we're going to allocate to what we think is going to be the story, and then markets move? Yeah, of course. But it would have to be, in my mind, some kind of a Fed thing for bonds or for stocks or really for the dollar to have something that looks like conviction and follow through?
We are starting to get conviction and follow through here. Oh yeah, it just totally occurred to me. The MES contracts are AM settlement. So need to just go over right into the MES H6 right away because that's off the books already from this morning. But keeping the exposure, rolling it forward, right?
Yeah.
MES Z5 into MES H6. I will be playing for the long here over the next few weeks. We've seen in recent years past how the markets use that holiday window. I'm thinking 2018. 2018, second half of December, really the last week of December, things kind of went wild. Will that happen for gold? We have another earnest breakout attempt here today, Ilya. We tried to get one going the other day where we briefly sniffed above $4,400 an ounce. You could see that we were rebuffed
this
immediately.
Thing wants to break and it just can't.
So bad. And you know what? Platinum
it's
today.
So annoying.
Platinum today hit its highest level since 2008, climbing above $2,000. Silver prices have started to make a move higher again. They're up by another healthy 3.44%, 67.46. So that long 67, 68 call spread that was put on just a few days ago, about $4 cheaper, is already working and in the money, which is nice. Best laid plans of mice and men often work out. And then copper.
Palladium has erased 2 years of losses as of today. Yeah. It's back to January 2023.
It's just getting started. Oh yeah. Copper here yesterday, we talked about the diamond top a little bit, which, I caveated as something it's not that I trade around. And we briefly mentioned that there are harmonic trading patterns based on Fibonacci relationships that some people use. And I'm not here to knock anyone's particular trading style. I don't follow the diamonds, but it did give me some pause thinking about the broader metal move. Maybe that is being eradicated, and not caring about this pattern is what I should have been doing the entire time, because it's not something I ever take seriously. And even expressing concern over it yesterday now looks foolish in hindsight, because we did technically hit a new relative high in copper prices today, breaking through the earlier December high. That's not what happens in diamond patterns. Okay, maybe this is rounding into a sideways range or more of a double top kind of thing, but that's not the correct interpretation. If anything, we can make the case that this is a flag, and copper, like palladium, like silver, name something that's metallic. It's just been in a little bit of a phase before it finds its next leg to the upside. So, Ilya, I don't know how you can not be long the metals still. Through the holidays into next year, they continue to work.
Yeah. Yeah. I mean, there's just no reason to look at this and go, okay, this is definitely not going to break out. We don't know. And whether you look at silver, or you look at copper, or you look at gold, or platinum, or palladium, the bias is there. It's just there's a sequencing, it seems, in terms of which ones want to engage with a convincing rally on a given instrument. If you just sort of look across,
look at that.
Gold is basically pinned right up against October's high. And we're going to see. But we've essentially, all of the sell-off that we saw, that violent sell-off from mid-October into the end of October, before we kind of start to stabilize in the first days of November, we have now erased all of that sell-off. If you look at silver, it's not exactly the same chart as it were, but you're also not really making a tremendous amount of headway. I mean, yes, you set a new high today, but if you look at a shorter term chart, do you expect follow through here, or are you kind of meandering near the highs that we recently set, let's say earlier this week? Not really. And then you start kind of looking across all of them. It still looks very bullish, pretty much across the board. It's just now a question of where do you get conviction for the next run.
Where do you get conviction? I have conviction right now, right here. Bottom left, top right.
I mean, I'm not getting off my long positions. I'll tell you that much.
Right. I mean, the ascending triangle, Ilya, it's typically a bullish resolution. We broke out through resistance. We've been consolidating above that resistance. The market just set a new relative high today. It feels like a breakout is trying to get going. So the function is, or the question is rather, do you have enough time on the calendar to express some of these views? I feel at 39 days, I do. Looking for the 5758 call spread here in copper prices. Same thing with silver, 67 days, long the 67, 68, and that's 39. We want to go to 67, so we're long the 67, 68. Gold, Icarus trade, 4 DTE on the 4350, 4400. So a little bit more upside would be nice. And then the 4400, 4425 at the 39 days for gold. So this looks like it wants to break, Ilya. Gold and copper look pretty similar here in terms of ascending triangles, consolidation after ascending triangle. That looks like a long.
Yeah.
We'll press on. Can't shake us off the metals here. We have 10 minutes or so left. We want to get to Intervention Watch 2025. So we'll spend a brief bit of time over in oil land real quick, where volatility is off the board a little bit. IVRs were closer to 30 yesterday. In fact, they hit 30.8 at the high. We're back into 23. Prices are up a touch. We haven't turned a corner. We need to get through, call it 57 or so. Swing lows at the end of November, here in December, and then recently resistance on December 17th, 2 sessions ago. In doing so, we would find ourselves getting back into an area where, okay, maybe this was a flush out low. I question how much more upside we're going to see around any Venezuela headlines, even if it's something that I've been looking for, because we've made the $2 move or so off the lows. And vol's coming back in. Do you think that energy probably is something that traders might want to stay away from if they're not going to be actively trading through the holidays, given the geopolitics of it all?
Certainly doesn't seem like the price action is engaging with any of that stuff. Seems more like we've come down to hit that longer term. I suppose that's a relative sort of statement, but the bottoms that we've had going back to the Liberation Day excitement, we've basically stopped at those lows. This is where you would expect to stop, at least for some sort of a gut check on sentiment. And that seems like all we've done here. There's been really no back and forth, no big engagement with anything like a geopolitical narrative. I mean, at the very least, even if you hadn't gone anywhere, you would expect to see some long wicks up and down as the markets try to figure out what the narrative is. But it doesn't look like anybody cares.
Similar story here in natural gas. We are off the lows of the week, bouncing near levels that we saw form as support multi-year basis. I mean, really going back October of last year. Cyclically, we're kind of in the same portion of the year where these lows are found. There's also a great deal of lack of inventory in Europe. What does this all mean for Russia, Ukraine? This is also the weather forecast, Ilya. It was 60 degrees here this morning.
Some of that.
It was 20 degrees, and it's going to be 20 degrees tomorrow. I'm not sure if that's normal. NOAA's temperature ahead shows that the heat dome that's in effect over the southern portion of the United States is going to start to fade after Christmas. But like Christmas Day, it's going to be 50 degrees here in New York, Ilya. So the short-term outlook for natural gas is not fantastic. In terms of the trade that's on at 39 DTE in the G6 contract today, a little bit more reprieve and recentering a little bit better, but not out of the woods just yet. I loathe natural gas. I love it and I hate it. Right now, I'm in a hate part of the relationship with it. So we get to the fun portion of the show.
Not unlike heroin, one might say.
Natural gas is not something you should inject, that's for sure. When you look at what's happening in the currency space, 6J.
Yeah.
Triangles are often continuations of the preceding trend. We had this triangle drawn, it broke to the downside. following the BOJ's 25 basis point rate hike, a rate hike that did not necessarily indicate that more was coming. Now, I had no position here. I used the downturn that we had back in the middle portion of December 9th, to get out of that 64-65 put spread that was put on weeks ago. And I was thinking more, I'm waiting for another flush to put on a trade that would benefit if there is an intervention in the yen during the holiday season.
Yeah.
Now, since that rate hike has come out, Ministry of Finance officials have been active in local Japanese media saying that they stand ready to act in the market if they see currency moves that are beyond their pleasure, beyond what they consider to be tasteful.
This is very telling. Next thing they're going to do is ask for quotes.
There's a sequencing here, right, Ilya? And the fact that you already have Ministry of Finance officials talking on the other side of the BOJ rate hike, because the rate hike is not doing to the currency what the officials were hoping it would do, absent the promise of consistent and forthcoming tightening efforts, we're now in the teeth of the intervention watch once more. So to that point,
I'm a little bit long here.
It's a 0.4 IVR. It's as cheap can get to express views. I want to have something on that covers the holiday window.
Yeah.
So the shortest expiration cycle that we currently have in the books is 21 DTE. This is by no means a typical tasty trade. We're not looking to sell vol here. This is more about if something were to occur while we're gone, if you're not trading, even if you are, it's overnight. Heck, the BOJ could do this going into December 26th. It's Christmas night for us, Ilya, right? I'm here fat and happy.
No guardrails.
I'm here. Yeah, people are fat and happy. We're by the fireplace. The kids have just gone to bed. We're having a nightcap, right? It's a nice glass of scotch or whatever by the fire. And the BOJ intervenes because they know that American traders aren't there, but the markets are open. What happens? What happens to stocks, to bonds, right? Like what does that do? 66, 67. We're currently trading at 64. Ilya, in an intervention, would we see 200 basis points of moves? Like, could we see this go back to the highs that we had in November? I think so.
I mean, at least episodically.
Just if only temporarily.
Yeah, you could spike there. Sure.
A 66, 67 call spread, a intervention protection trade is going to cost you $25. It could potentially yield $1,200. Having $25 of insurance for the next few weeks, given the talk, given the yen's exchange rate, given the fact that we don't show the spot products that often here on the platform, but euro yen today spiked into a new all-time high. Okay. The yen is really in a tough spot versus a number of these currencies.
Yeah.
It's not just about the US dollar because the dollar is down so much this year, but here you go. Dollar yen back up to near.
So I am short dollar yen spot against this high on this exact logic that what might happen here. And I'm not using 6J only because it's large. And I don't want to have that kind of commitment. I just want a little insurance, just a little bit of insurance. And you're at the high, you're testing here. This would be the spot if you're the Ministry of Finance to go, as you're saying, on the 26th, on the 30th, on the 31st. When everybody's asleep. And frankly, the New Year is a holiday in Japan as well. So I'd be looking at Christmas and kind of the pre, December 24th, December 26th. You could absolutely be looking at a situation where the Ministry of Finance goes, all right, go. And there would be almost a little bit of poetry to doing it because this rate hike that the BOJ just did, it runs counter to what the new prime minister wants.
Yes.
This might be the last time they get to defy her like this. And because they're not exactly independent, the BOJ. But we're potentially going to learn to love central bank independence, depending on how this is going to work, because everybody's going to be able to look at what happens when a central bank governor and the prime minister fight, only the central bank governor doesn't have independence as such. And the prime minister can make the calls. So.
And rates volatility is real low, man, right now. The move index is sitting at 60. It's down over 10% the past month. But bond vol being crushed, it's probably going to be probably good for the stock market. But like the move index is at the lowest level since October 21. There's a lot of this is because the pricing is so cheap in the rate sensitive space right now in the yen, 0.2 IVR. Having some of that protection is a worthwhile endeavor. It's a good hedge right now, especially if you're leaning long all the things that are kind of high beta. And in theory, right, it's not a carry trade situation right now, because if you were to look at the most recent available futures positioning data, you would see that traders were actually net long the yen, not net short like they were in going into July, August 2024.
And maybe this is what this sell-off is today, is people taking that off.
Longs liquidated. They got their rally from
they got
DOJ,
their hike,
and they
DOJ
got
was
their
kind
hike.
of
No
wishy-washy on what it's going to. I mean, they said they want to hike again, right? So let's just put the details out here. Ueda came out and said rates are low, they're very accommodative. Tariff risks from the U.S. appear to be receding. Wages appear to be edging higher. Inflation appears to be resolving to a higher level in a lasting way. So you'd be hard-pressed to look at the commentary and not arrive at the conclusion that this is a central bank that wants to stay credible about tightening.
Yes.
Also, they're raw, and Ueda talked about this in the press conference. Their estimate for what neutral is somewhere between 1 and 2.5%. So the bullseye is like a barge wide. But when
so it's we could raise rates by 25 basis points or 175 basis points.
Yeah. And he's like,
But Ilya, is that a credible range? Like,
but see, this is the whole thing, and this is
the market goes, oh yeah, you're not really serious about hiking.
This is the whole thing. So the markets come here and they go, right. So this rate hike was all the way priced in up to 75 basis points. Next year is all the way priced in up to 100 basis points. Did Ueda tell you anything new? No. Because you're already priced to reach the bottom of the normalization range at some point next year. So has Ueda told you anything that would encourage you to be on the long side of or to stay on the long side of the yen through the holiday, knowing that what Ueda just did was defy his prime minister? And if the prime minister wanted, because the Ministry of Finance answers to the prime minister directly, what the prime minister in her metal band drummer ways could do here is go, oh yeah, Professor? Okay. I'm going to direct the Ministry of Finance to undo whatever you just did by way of yen intervention in about a week's time.
That would be very
and so why would you be holding the bag? Ueda didn't tell you anything that told you that maybe they're in neutral already as of next year, which is already priced in. So where would you go? Why would you go?
Hell yeah, for $25, yen intervention lotto ticket seems well worth my while. And if we were to break down towards 63, I would add in another leg with closer strikes. Use the opportunity.
Yeah, I've got a little baby exposure of basically the same kind on there going, listen, if Takaichi-sana is who we think she is, she's not going to take this central bank front lying down. She's going to let the professorship know what time it is.
Yeah, it feels, yeah. We talk about the thin economic calendar Monday. That's very much the case. Do you like the Chicago Fed National Activity Index? Because if you do, lucky.
We got a thing for you.
It is just your time of the week. Other than that, RBA minutes at night. Ilya, no major earnings releases as far as I can tell. You and I will be back, though, in about an hour's time. We're on last call here today to take out the trading day, check out the trading week here as we wind down this final full week of the year. Ilya, I'll see you in a little bit. For everyone else, go get some coffee, get a sandwich. It's time to take a quick break here. But we're coming back because Dr. Jim Schultz is here with From Theory to Practice next. I shouldn't be showing you my email here on Tasty Life.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Friday edition of what it is that we are trying to do. Welcome to the educational piece edition of what it is that we are trying to do. So today we are going to shoot from strength and kick this off with a little educational content. So Paul, cue us up on the title slide. In the spirit of the 12 days of trading, I wanted to offer my thoughts and throw my hat in the ring on the life cycle of a trade, right? We put a trade on, a bunch of stuff happens, and then we take a trade off. So how should we begin to think about that process? Here are a few things that might help you along your way. So Paul, bring us into the content today. So I think it's very helpful to think about the life cycle of a trade in 3 very distinct phases, each with their own kind of set of characteristics and features that we want to pay attention to. So obviously you have trade entry, you have trade management, and you have trade exit. I think that the criteria that we're using for each one of those phases is indeed different. So trade entry. 3 things that I think should be on everyone's radar. Number 1, liquidity. Number 2, volatility. And number 3, your directional bias. So first and foremost, liquidity. I mean, man, there is nothing worse than trading an illiquid stock. There is nothing worse than doing a trade, picking a direction, whatever, have it all work out, and then all of a sudden you can't get out. Like all of a sudden, it's like, man, I can't get out. I'm stuck in an illiquid product. Like I've got to pay through the nose to exit this position. We've all been there. And that is a really, really, really difficult spot to be in. So having a highly liquid stock on entry is first and foremost, this is mission critical and top priority. The simple way to do this is just use the Tasty default watch list as kind of your overall reference point for the different stocks and indexes that you might be trading. And then from there, if you want to branch off and do some other things, that's fine. But I think that's a great reference point. Number 2, volatility. So if we're focusing on specifically selling premium, which is what I kind of want to focus on here for this life cycle of a trade, we're looking for high volatility. Right? Like we want to sell when volatility is spiking. We want to sell when volatility is expanding. We don't want to sell on a day like today, December 19, 2025. You've got the VIX falling through the floor. This is not going to be the most opportune time to sell premium because we've shown empirically, you can show this mathematically. There's a number of ways you can look at this. Volatility has a tendency to mean revert. And when it expands, it doesn't like to live in that kind of expanded and expansionary state. It wants to contract down lower. So we want to take advantage of that by selling volatility when it is indeed high. So we sort by things like implied volatility rank, maybe the raw IV itself, because the raw IV is the thing that goes into the option pricing models to determine what the corresponding option price should be. But this is all trade entry stuff. And then lastly, what directional bias am I going to choose? Am I going to be a bull? Am I going to be a bear? Am I going to play this thing neutral? That's a separate discussion in its entirety for another time. But if I could offer up a shameless plug for another crash course that is on the very YouTube channel that you are watching this show on here today, there is a portfolio management crash course on the YouTube channel. Within the first, 3, 4, maybe 17 minutes, I work through how to figure out what your portfolio delta maybe could be. Like it's going to depend a lot upon, your personal outlook on the markets, of course. But in terms of your account size, how much directional bias you want to hold, how much leverage you might be comfortable with, I kind of walk through some different ways for you to figure out those numbers. Well, once you know what the portfolio numbers are going to be for you and what you're trying to accomplish, figuring out whether or not you want to be bullish or bearish at the individual position level, the micro level, becomes a little bit more plug and play. It's a little bit easier to figure out. So that's trade entry. Those are 3 things to think about. Trade management, profit targets, loss management, or loss thresholds, I should say, and then adjustments. So number 1, profit targets. This one's fairly simple. We're usually around 50% of max profit for most of our short premium plays. I mean, yes, there are times when we take things off early if it's overperforming or doing better than we thought it might do, in only a couple of days, or maybe for an earnings trade or a binary event. We may go ahead and kind of use a different set of rules. But a great reference point for your kind of life cycle of a trade checklist is management profit targets. 50% of max profit is a great place to start. What about your loss thresholds? Well, when it comes to defined risk, I don't really think you need one because that should be determined on order entry with your position sizing. So if I'm defined risk and I'm 1% or 2% of my account, even 3% of my account, that's plenty small enough in our opinion that you don't necessarily have to cut the position early if you don't want to. So loss thresholds, in my opinion, are far more applicable to undefined risk strategies. So what are you going to do? Are you going to do 2x of credit received? Are you going to do 3x of credit received? Are you going to have no predetermined exit point and kind of treat it on a case-by-case basis? It's like, I may not sleep for a couple of weeks, but that's okay, right? You have to decide all of these things on order entry. And so that's why I think it's worthwhile to go ahead and work through these things right here and now while you're putting the trade on. And then lastly, all of your adjustments. right? Am I going to adjust when the strike is tested? Am I going to adjust when the break-even point is tested? Am I going to adjust my deltas even more aggressively than that? Like maybe when my deltas on a strangle get to a certain point, I like to cut them in half, or I like to cut them by 30%. These are all very valid strategies, and only you can decide what's going to make the most sense for you. I don't know that there is a best. I don't know that there is an optimal strategy. I think it's largely about gimmies and gotchas and what your personal risk tolerance might look like. And then lastly, trade exit. This one is the easiest of the bunch, in my opinion, because once you've done the work on trade entry, and once you have a plan, a contingency plan, or a set of contingency plans for trade management, the trade exit becomes kind of, very much plug and play. Like you've got winners, you take them off. You've got losers, you've got your plan, right? Defined risk, I just let it ride. Undefined risk, I'm 2x, 3x, or no predetermined exit point. I treat it case by case. But these things have all been kind of predetermined. What about the miscellaneous situation? So this would be, you're around 21 days to go, and maybe you have a small profit or a small loss. Like, how do you handle that situation where it's not fitting neatly into one of these categories? In my opinion, a good way to think about this situation is the following. So number one, if you have a winner on your hands and you're at around 21 days to go and you're trying to figure out what to do, look at the actual amount of profit that you have and ask yourself, is this an economically significant profit? Again, only you can decide if it's economically significant, but I think most people would agree 7 cents or 9 cents. Once you factor in commissions, transaction costs, there's zero to close on tastytrade, but still you have to factor these things in their totality. That's probably not economically significant to motivate you, or economically significant enough, I should say, to motivate you to ring the register right there. So maybe you keep the trade on, maybe you roll it out to extend some duration if it's undefined risk, what have you. If you have a small loss on your hands, now you're in a situation where it's like, okay, I probably don't want to eat this loss right now, because if I have a small loss at 21 days to go, I'm probably pretty close to kind of bringing this position back. I'm probably pretty close to a spot where this position is going to be in pretty good shape. So here, this is where I'm thinking about defined risk, I let it ride. Undefined risk, I roll it out. Like undefined risk, I push it out to the next cycle. And of course, if it's defined risk and you can roll for a credit, then you roll for a credit. But a lot of times you can't do that. So the final point I want to make today, in my opinion, trade entry, fairly streamlined, right? Fairly straightforward. Trade exit, fairly streamlined, fairly straightforward. The real magic is everything in the middle. The real magic is all that stuff around trade management in terms of adjustments, in terms of directional bias, in terms of, even the profit targets that you might set. That is, in my opinion, what separates the good traders from the great traders. Obviously all the entry stuff is important, all the exit stuff is important, but in terms of separating the wheat from the chaff, in the words of Matthew, I would say it's trade management. Trade management is the thing that I would try to sharpen my skills on to the best of my ability if I was in your position. So there's a few thoughts around the life cycle of a trade for these 12 days of trading. So Paul, go ahead and bring us into the market. Man, let's do it. I see you guys trolling me in the chat. We got the sweatpants on. We threw on the hoodie. I can't do that today. It's like 85 degrees outside, man. No hoodies today. This is a t-shirt day here in St. Petersburg, Florida. But I appreciate you guys, man. I appreciate you guys so much. If you guys have a question for me, drop it in the chat box. I'm going to try to get to as many as I can here in about 10 minutes or so. But for right now, if you happen to have a banana daiquiri handy, if you happen to have a Natty Light Ice handy, pour one out for our FedEx trade, right? Pour one out for our Nike trade, because it seems the Dr. Jim heater is over. It seems the Dr. Jim heater is no more. We had a nice little run there, right? We did 5 or 6 or 7 out of 8, whatever it was. Like, that was a nice little run, but it has now come to a screeching halt. So FedEx, crash, boom, bang. Nike, crash, boom, bang. Now, thankfully, with the market being so strong today, even the S&P is up 60. Risk-free instrument, also known as the NASDAQ Futures Extremely High Risk product, up 318 on the day. You got the Boomers up 265, and you've got the Russell 2000 Futures Index up 18.5. Man, with the market strength, our two futures options equity positions are doing quite well, and they're carrying the load today, because you can see that our P&L days are looking pretty good for MES and for MNQ. The MES, of course, is the ratio spread. The MNQ is the short put. I'm not going to do anything with those guys right now. Like, let's let those guys kind of simmer on the back burner, and we'll come back around and loop back around to these guys on Monday or Tuesday of next week, and maybe we take them off going into the Christmas holiday because we've only got Monday and Tuesday of next week. And so, but let's take out the weekend. Let's get some weekend theta, over the weekend. Which is it real? Is it not? Does it exist? Does it not? Like, I don't know. It feels good to have a little weekend theta. So we'll just go by the feelings, because feelings are greater than facts in 2025, heading into 2026. But if we look at FedEx and we look at Nike, it's not good, guys. This is not good. Who gave me these trades? Did I write this down? Man, I think I forgot to write it down. I forgot who gave me these trades. Were these my own trades? Yeah, that would make some sense. So FedEx is a downside butterfly. Nike is a short put. So let's do Nike first, because this has at least a wee little bit of a silver lining in it. Maybe not much, but a little bit. Nike down $7 today. I mean, it's getting the Chipotle treatment if they're still in business. But you've got Nike down $7. That's a pretty big drop for a pretty well-established stock. I mean, for a, is Nike in the Dow? I don't think Nike's in the Dow. Is Nike in the Dow? Somebody help me out in the chat and let me know if Nike is in the Dow. I don't think it is. It's obviously in the S&P 500, and it's not in the NASDAQ. No, it's New York Stock Exchange. But let me know if Nike is in the Dow. I don't think it is, but it could be, because the Dow's kind of like, the Dow used to be blue chips, and the Dow used to be like, General Electric and like Sears and like Kellogg and like whatever. But now they'll just let anybody in. Like, I think Nvidia's in the Dow, right? Amazon's in the Dow. It's like, man, what are we doing now? Do we have any criteria anymore for getting into the Dow? Like, it used to be something. And so Nike might be in there, but let me know in the chat if they are actually in there. The good thing, though, about this strategy, it's not working. That's not the good thing. But the good thing is we have 63 days to go. So the good news is we have a lot of time left on the strategy. So it still is, from a winner versus loser standpoint, it's still very much TBD. Like, we don't know. I mean, we have to wait and see. There's a long time to go on this strategy. So we're just going to sit tight and get comfy cozy there in the bathtub of filth and give this guy a chance to remedy itself over the course of the next 63 days. I mean, it's pretty wild that we're trading. Man, look at that, guys. We're trading February 2026. Man, we're trading February 2026 options now as basically the front month, since January has, only 30 days or 29 days. That's some pretty wild stuff, man. That's some pretty wild stuff indeed. But FedEx, unfortunately, we don't have any silver linings. Unfortunately, people did not agree with, my own personal hypothesis in terms of FedEx's inability to conjure up demand from the Amazon return crowd. UPS obviously has that on lockdown. And so maybe FedEx is doing some Walmart returns now. Like, maybe FedEx is doing like some Michaels returns now. Right? I go to Michael's, 2 times, 3 times a week, because my oldest daughter, Penelope, is like way into crafting right now, like way into crafting. She's like sewing things and knitting things, and it's super fun. And I think it's amazing. I mean, it's a really cool thing for her to do. And so she sends me off to Michael's like in the evenings to go pick up all this, this crafting supply, or all these crafting supplies. And I'm like, yeah, Michael's, the return situation at Michael's, it's in some desperate need of some improvements. And so I'm like, man, maybe FedEx lock that down. I mean, I'm still a bit surprised Michael's is still in business, but they're doing okay. They're doing okay for themselves. But FedEx, unfortunately, not going to make it. So 0 DTE on the strategy. It's a butterfly. Apparently, they're telling me I can get 12 cents for it. I don't know if I believe that. I mean, do you guys believe that? I mean, should we try to get our 12 cents? I mean, there's only an hour and 15 minutes to go. And, well, actually, wait a minute. Wait a minute now. Now I see. So our long put strike, we're pretty close to that. I thought it was actually further away than it actually is. And so, wow, I'm going to leave it. And so if something were to happen, like going into the close today, like some kind of tweet, some kind of truth, like something that has happened before, like maybe it will happen again. If for some reason this long put sneaks in the money and I don't see it, before it's too late, then we're going to come into the show on Monday with some short FedEx shares. Like, we are going to be assigned on the long put, and that's just going to be that. Now, remember, when you take assignment on an in the money option, you want to understand there are going to be some buying power effects. There's going to be some capital allocation, differences that are happening in your portfolio. But generally speaking, like, even if something goes haywire to where like it exhausts all of your capital, your buying powers go negative, you've got people from Tasty Trade showing up on your property, right? You typically have the day to clean that up. Like, it's not something that has to be remedied like in that moment. But if you have, if you see it happen and you clean it up that day, you're typically in a pretty good spot. And of course, if you're ever unsure, you can always call Tasty Trade and be like, hey, listen, I got assigned on some FedEx. I was listening to this random guy on the internet. I knew I shouldn't do it, but he was very convincing. And he took me down. And so what do I do now that I'm negative, $4,000 in my buying power? And of course, the first thing is don't listen to said random guy on the internet, but we can clean up your buying power, no problem. So just give them a ring. But that's FedEx, that's Nike. And then, man, other than that, I mean, there's really nothing else to talk about, believe it or not. I mean, Starbucks getting hit a little bit today. That's how you know it's bad. Oh, look at the metals. Man, look at my metals, bros out there. Guys, take a look at this. I mean, you thought it was over? Man, it's just getting started. So gold up 1350, up to 4378 today. I think it got over 4400 last night, did it not? Let me take a look at gold here. Yeah, so just yesterday, it was 4409, and then that may have been overnight. I can't remember, or like in the evening or whatever. Oh wait, no, that would make sense. That would be that must have been during the market hours yesterday, because the evening hours are included in this candle, this daily candle. And so gold snuck back over 4,400. It got over 4,400 here, but again, I think that's just from the rolls. It didn't actually do it. This time, I think it earned it. And so you've got, gold over 4,400. Look at silver. Man, look at silver. This thing was 27 like 4 months ago. Like Liberation Day. Let's go back. Let's remember, right? When we were all liberated from our financial goals, each and every one of us. Look at this. Silver was 30. Look at that. Silver was it 29 something? Silver was 29.62. I'm going to leave my cursor on that candle. This is not my opinion, people. This is not my subjective analysis. This is objective truth. Silver, 29.60. Today, I can get you into, 100 ounces per contract? 1,000 ounces per contract? I have no idea. I can get you into one brand new silver's contract today for the one-time low cost of 67.48 and a half cents. That's what I can get you into a silver contract for today, right? Back in April Liberation Day, 29.62, right? 50% off, 60% off. This thing was on clearance, man. Like, and we thought that was high then. Like, I remember the days when silver was trading like 16, 17, like beans in the teens, man. I remember it. It wasn't that long ago. It was only maybe 6, 7, 8 years ago. I mean, that's an incredible run. I mean, look at this. I mean, when I look at this chart, I don't know how anyone could possibly be anything other than bearish. But what a run, man. What a run. It's one for the history books, and just some crazy, crazy stuff. But yeah, Hunt Brothers looking good. They probably won't have to push too much pizza product this weekend to kind of offset and augment their silver contract losses. And so that's good for the Hunt Brothers and their pizza establishments. But yeah, I mean, 70 is right around the corner, man. It's right there. I mean, look at it. It's just a quick little jaunt on the chart, right? I mean, this is how you do it, right? This is how you do a little TA for you guys. Just a quick little something, right? We just got to go, whoop, and we're right there, 70. And so this is probably going to happen, Sunday night by 8:30, 9 o'clock at night? Like, give it a couple hours to kind of find its footing, but 70 is a foregone conclusion at this point. And by that, I mean the next tick is probably going to be 51.75. So, all right, so there's my silver analysis. It's not that valuable, but it's pretty much on par with what you would find elsewhere. All right, so let's see here. Look at Tasty Live show coming up, Clutch. Silver is 5,000 troy ounces. That's what I'm saying. That is 100% what I'm saying. So nicely done there, Tasty Live show coming up, Clutch. We got Paul, we got James. Man, we got everybody. Ryan's back there. We got Matt's back there. John's back there. And so, man, some good stuff. Let me see if I can I surprise and delight somebody here in the middle? Wait, here I see MG up to 98.27 says the FedEx butterfly was profitable in the morning. Dr. Jim, was it really? I didn't see that. I saw last night, like the initial move was higher a little bit. And so I'm like, oh, here we go again. But then it cooled off and I'm like, okay, we got a chance. And then this morning, I really didn't. I saw it early in the morning, like pre-market. But then once the day got rolling, I mean, just too many things going on. I wasn't able to keep up. And so let's go to FedEx though. If I go here, let me go to a chart. Let's oh wow, look at that. I mean, wow, look at that. Well, man, not only was this thing profitable, but it was like, I mean, that was like some bonefish reservation type stuff. I mean, it opened at around 270, 272. Hang on, let me get a 2-minute chart. Let's get our boy Earl Coleman some royalties on this guy. So if I do a 2-minute chart, let me just go back to the open. Wow, look at that. Yeah, I mean, I saw it around here and I was like, okay, there might be a little something, but then I didn't catch it on the open, but look at that. Man, we had him. We absolutely had him. 270. Look at our short strike on this butterfly, 267.5. Man, that would have been bonefish Friday night, Saturday night, Sunday brunch. Like we had it, like it was right there. Like, it was 1,000,000% right there. But Matt, we'll get him next time. And this is something to keep in mind. When you have positions on, when you have trades on that kind of need, some management and some oversight on a daily basis, you've got to be aware of that. Like you've got to understand what you're signing up for, as I always like to say. And one of the things that you might be signing up for is, hey, I kind of want to be around to be able to manage this guy one way or another. Because if I'm not there, I may miss an opportunity to take some risk off. I may miss an opportunity to get a profit on a trade that may turn around on me, which you guys just saw happen to me with this FedEx position. And so I'm going to try to be better next time. But sometimes it is difficult because I do like to trade on the show. I mean, that's one thing. That's the way I've set up the show. And so that's kind of like my default setting and the way I'm usually thinking about my trading and my positions. I'm like, well, I'll do that on the show. But then sometimes it kind of slips in my mind that I'm like, well, that's a butterfly and that's expiring today. Like there's no wiggle room if this thing goes wrong. And so maybe I need to be a bit more Johnny on the spot on Friday mornings, I should say. But thank you there, MG. I appreciate you, my friend. Let's see. Where are we at? Man, look at Tasty Live Show. Tasty Live Show in the chat, pumping the algo. Man, that's what it's all about. Man, I appreciate you. The Preston in the house. What's going on, the Preston? I'm all the way back to the beginning now. Dr. Jim, I copied your FedEx butterfly for 21 days to go. Is it better to wait for the butterfly to come in as a single trade or take the gain on the body and wait on the wings? Merry Christmas, brother. Man, Merry Christmas to you too, my friend. This is a very good question. Generally speaking, especially because it's defined risk, I don't like to break apart my defined risk strategies because it can lead to some unexpected results, especially if, like you're closing wings or closing guts and leaving wings or closing wings and leaving guts. I mean, if I was going to leg out of a butterfly, I might take off like one of the spreads and leave on the other spread, but I probably wouldn't be doing guts and wings, especially like if I close the wings and leave the guts. Now it's an undefined risk position. So now it's a straddle, right? If I close the guts and leave the wings, you just bought a strangle, basically. I don't like that either, just for the same reasons we don't typically buy strangles on order entry. So I'm not saying you can't do it. I mean, you can do whatever makes sense to you, but you could maybe make that make some sense. I am typically on as a package, off as a package when it comes to defined risk. The undefined risk strategies, that's kind of where the creativity and the innovation can come to play and be an option for you in terms of taking a strategy that began as a given strategy and then evolved and morphed into a different strategy. Like that can certainly happen, like short puts becoming short strangles becoming short straddles becoming inverted strangles. I mean, that's a very common path, put ratio spreads becoming short puts, becoming short strangles, becoming short straddles, and so on and so forth. But when it comes to defined risk, don't typically love it. I would probably just leave it on, honestly. And I mean, because you chose a longer term type of butterfly, that's a very different type of trade. I mean, to get anything close to maximum profit, you're going to have to wait till the very, very, very end, like the final day or two of the strategy. But as long as you understand that's not really what you're, most likely going to be going for, then it could still be a successful strategy, from start to finish. Just understand like, okay, if I have, 10% or 20% in just a week or two, you might want to take that off. That might be worthwhile to consider. Let's see where we at. Margin Walker in the house. What's going on there, Margin Walker? Margin Walker says, "What's up, Dr. Jim? The market is pricing in some A- humor for today. Don't short us with the laughs." Now, the market can't possibly be pricing that in because remember, the market prices in the expected move, and A- is outside the expected move. And so the market prices in on any given from theory to practice show C plus to B minus. Like that's your expected move on any given day, even any given Sunday for my Willie Beeman fans that might be watching the show. And so thank you, though, Margin Walker. I appreciate you. Danish Dynamite, for the love of the algo and the show. Have a great weekend, everyone. You too, my friend. And thank you for pumping that algo because we need it. We need it in a huge way. And so let's see. A Wills in the house. Dr. Jim, what are your thoughts on these 0 DTE SPX trades? I've had very little success with them long term. Yeah, I mean, well, so because of, and I kind of introduced this a few minutes ago in terms of, and thanks for joining the show there, A. Wills. I don't recall you having been in the chat before, but I've been a little off on my blueberries, and so I could be misremembering. I don't do a lot of 0 DTE, not the traditional 0 DTE, because, I like to do my trading on the show, especially my trade entries. It's very rare that I would enter a trade off air. From time to time, I have to exit a trade off air like I should have done with FedEx this morning. But even then, that's still going to be 5% of the time or less. And so trade entries, though, it's important to me that you guys see the analysis, you guys see me walk through the strike selection, and I think there can be a lot of learning and a lot of value that takes place in your seeing me kind of walk through that process from start to finish. Sometimes it's quick, sometimes it's not quick. Well, actually, it's never quick. It's usually almost always not quick. But seeing that process, I think, is valuable. And so because of that, I'm on air at 2:30 now. It used to be 2 for the longest time, and then they bumped me to 2:30. Right, so now I'm in the 2:30 slot. Pretty soon we're going to be in like the 11 p.m. slot, and so just get ready for that. I'll be in the infomercial slot. I'll be competing with like the ShamWow guy. Right, I'll be competing with like what's the Scrub Daddy guy? The Scrub Daddy guy. I'll be competing with him, and so we'll be competing with all those guys. And I think R.I.P. the ShamWow guy. I think actually, right? So yeah, that's really really sad. That was just a couple years ago. And so anyway, show's totally off the rails, but it's a Friday. That's what you've come to know and love and expect, of course. I don't do 0 DTEs because there's only an hour left in the day, so it doesn't make sense. But I do a lot of 1 DTEs where I'll do a trade today that's for tomorrow. I typically only do it for like binary events and NFPs and FOMCs and things like that. And so, I think that there's a lot of promise there. I mean, the Tasty Research has been all over this, obviously, giving you guys lots of ideas, lots of things to think about. For me personally, 2 things are kind of fundamental to how I view, any type of 0 DTE framework or even a 1 DTE framework for like what I do like today going into tomorrow. Number 1, I don't love selling premium because there's not a lot of time. The research has shown that selling premium at the 45-day marker is incredibly successful. We've looked at this over and over and over again. It keeps coming up, and it's empirically repeatable. It's empirically verifiable over and over and over again. And so when I think about it, I'm like, all right, am I going to sell premium in a 0 DT world or a 1 DT world where I'm just not getting very much? Like, I'm definitely not going to sell undefined risk premium. That doesn't make sense to me. But even defined risk, I'm like, man, I don't know. Like, this doesn't really, I don't love this. I don't love this makeup. I just don't love the fact that I'm not getting compensated for essentially, significant risk on the trade. I know it's defined, but even still, if I'm risking 2 to make 1 or risking 3 to make 1, like that can really add up if it doesn't work out. So I don't like it because I much prefer to sell premium and, for like an opening new position in a later dated cycle. But then secondly, I don't like to look at 0 DTE / 1 DTE as a foundation for what I'm trying to accomplish. I don't think we're there yet. Some people may disagree. Some people may be like, Jim, this has been my foundation for the last 18 months and I am crushing it. And I think that's amazing. And that just goes to show you, there's so many ways to slice and dice this thing that is called the market that we all know and love and trade every day. That's totally fine. But my opinion is I like it as a complement. I like it as kind of a supplement to the core foundation, kind of 45 to 21. I just think that's such a sturdy foundation. So if you're struggling, as you kind of alluded to in your comment, I would encourage you to maybe maybe do less of it. Maybe just do less of it for a while. I think there's opportunity there. I think there's definitely potential there. But in terms of like a substitute or a replacement for, the core foundation, I don't think we're there yet. So that was a bit of rambling and a bit of kind of riffraff mixed in there, some ramblings and riffraffs, but hopefully it gave you a little bit of value. Let's see. Wolf's in the house. Happy Friday, Dr. Jim. Why don't you ever wear any tasty swag? Like the stuff they try to sell us in the commercials. Have a great weekend, man. Have a great weekend to you too. Because I only have 3 shirts in the rotation. I got this guy. Happy Magenta Friday to you guys, by the way. Which I'll probably wear on Monday too for Magenta Monday to kind of get that guy back up and running. But I've only got like 3 shirts. That's why. I do have some tasty swag in the house. I actually have a Tasty Works jacket. Like this is going back into the Wayback Machine, man. This is like 2019 stuff. I have a Tasty Works jacket, like a long sleeve guy that I never wear here because it's just shorts and t-shirts every day. But I've got some tasty swag I may break out now. Now from every once in a while, I may have to shock the muscle a little bit there, Wolf. But I appreciate you. And definitely, man, buy some merch. You got to buy some merch. And if you buy it while you're on air with me, I get a little kickback. I get a little affiliate link. So when you go in there to buy your t-shirts and get your hats and your mugs and stuff, do it between 2:30 and 3:15 because I get the attribution back for that purchase. I think I get like 35 cents or something, man. So hook your boy up. So Theta Trader is in the house. Dr. Jim, are you on air next week? If not, Merry Christmas in advance or at appropriate time, one of those. Yes. Thank you, my friend. Yes, I am. I'm on, I believe we're live Monday, Tuesday, and then Wednesday morning. Off Thursday, Friday. So no Wednesday because there's no afternoon programming that day, but I'm live Monday, Tuesday. So I will be with you guys for Monday, the skinny in the morning and with you guys in the afternoon. And then also with you guys on Tuesday. So I think that we are going out of town, but we're not leaving until New Year's Day. So we're actually leaving to go to Carolina, South Carolina, but it's right there on the border between South Carolina and North Carolina. We're leaving on January 1st. And I'll probably be gone for, I think it's 7 or 8 days. And so I'll let you guys know more about that as it gets a little bit closer, but prepare for 7 to 8 days away from live from Theory to Practice, Dr. Jim, which is good. I think we all need a much needed and earned rest from Dr. Jim. There's only so much you can consume before you're like, okay, we've gone too far. Daniel Perkins in the house. I'm actually here today. Hope everyone is green as can be. Yes, thank you, my friend. Thank you for being here and being a part of the show. Sam L in the house. Doc, hope you slept well. Unlike that Nike trade, which clearly never woke up. No, it did not. The Nike trade is brutal. But again, it could be worse. It could be the FedEx position. Let's see. Ron Vashar, let's go. Let's from theory to practice for the love of the algo. Appreciate you, my friend. Thank you so much for the love of the algo, of course. Emmett Morrison, woo woo, it's time for everyone's favorite doctor. Man, I appreciate you. I appreciate you so much there, Emmett Morrison. Thank you very, very much for being a part of what we do on a daily basis. And let's see, Dr. Jim, I'd really like to get into trading futures options next year, but it is a bit intimidating. Do you have any educational series that you can recommend for futures options? Man, I would just, nothing pops off the top of my head. I've not done anything personally. Like I've done some things like on the skinny and I've done some things like, on this show even. And so I would, you could Google skinny options abstract, futures options, and you'll get some segments that I've done recently with, Tony and Nick. I've even done recently with, Tony and the artist formerly known as Bom Nosnoff. Right. I've done a number of segments with them, but I've never done I don't have a crash course or anything like that. But I would just, I would encourage you to do MES and MNQ. That's where I would start. That's where it's going to make the most sense because it's going to be similar to SPY and QQQ. And they're very small positions, right? Very small positions. And MES is going to basically be like 50 beta weighted deltas. So remember, an SPY has the maximum notional value of 100 beta weighted deltas, of course. MES is going to be 50. MNQ is going to be about 85. And so understanding that, it's like one MES and one MNQ, very small positions. Even if you totally mess up, like make a huge mistake, like buy when you should have sold or, do this when you should have done that or whatever, it can only get so bad when you have those really, really small positions. And if I remember correctly, Stephen, you're dealing with a fairly sizable account. And so knowing that too about your specific situation, which again, this doesn't apply to everybody, of course, but you and I have spoken about this even at live events and stuff. I think that would be a great way to start for you. And it's just like everything else, right? Like you've become really successful and you've got a nice, well-worn path that you like to follow with equity options. And, I know you really like short puts and things like that. It's like, man, to get to the same spot with futures options, you need the reps. You got to be in the arena. You need the reps. And so, I mean, poke around in the archives. I would Google futures options. You'll probably find some things. You'll find some things of mine, like I alluded to a couple of minutes ago. I can't think of any like series type stuff that's out there, but that doesn't mean it doesn't exist. It just means I can't think of it. Poke around, and I think you'll find some things that can kind of get you on your way. But again, MES and MNQ is a great place to start. Theta Trader says, I still like Dr. Seuss. Yes, me too, my friend. I would put, I mean, you've got Dr. Seuss, Dr. Phil, Dr. Jim, right? So if you're just wondering about the ranking, right? Dr. Seuss, Dr. Phil, Dr. Oz, maybe neck and neck. I don't know. Dr. Jim, way near the bottom, like way, way, way near the bottom. And so, yeah, that's how I look at it. But anyway, I digress. Sam L. Week almost done. Charts exhausted. Traders cooked, but Dr. Jim's still printing wisdom like it's risk-free. Yeah, it's something, man. Look at this risk-free instrument. Look at this NASDAQ up 317. I mean, they're trying to tell us it's not risk-free. It's not risk-free. But all I know is, you know, today, if you bought a UST bill today, you made 1 basis point. That was your return. Nice job out of you. If you bought the NASDAQ today, you made about 130 basis points. So you do the math, man. You figure it out for yourself. 130. I'm no Julia Spina, but I know which one I would choose. And so anyway, I appreciate you. Scramble everything. Oh, today is the Dr. Jim PowerPoint Hour Show. That's correct. But I think we did it in like 6 minutes. Like we knocked that thing out, man. It was done and dusted before you even knew it started. Right. And that's why I kind of like lately I've just been showing up with these educational pieces. In the beginning, I would kind of like let you guys know they're coming. Like I'd be like, hey, it's going to be Tuesday. It's going to be this. It's going to be that. I kind of like just kind of surprising and delighting you before we actually surprise and delight you. And so it's like now you know a little bit more about the life cycle of a trade. Like now you're more well-versed on like trade entry, trade management, trade exit. And it's like we can all use a little brush up on kind of all those phases of a given trade. But I digress. Let's see. Sam L, if the algo is watching, yes, I learned nothing and I'm still here. There you go. I like that. I like that a lot. Let's see. Theta Trade. But on the other hand, you have different fingers. What's he talking about there? I don't know. Maybe it's still a Dr. Seuss comment. Possibly. Doesn't Dr. Seuss have a bunch of fingers? I think that might be right. Sam L, Doc. Oh, this is good. I can already see where this is going. Doc, you're the only guy who can turn a 5-minute chart into a 45-minute story and nobody wins. Right, legendary. Thank you, my friend. But nobody wins. Nobody comes out better for that. Nobody. Like, yeah, the time passed. Yeah, the time evaporated, but we got nothing to show for it, man. Nothing. You got the 5 minutes on the chart with no real, actionable, tangible technical analysis, and you got a 41-minute story. And so that is absolutely true. Scramble everything. Total 1 slide PowerPoint, 3/4 of an hour. Yes, that's correct. I like the single slide PowerPoint. Right? There's some power. That's kind of a bit of a power move, right? Just a single slide. This is all we need. Like, yeah, it's still going to be 27 minutes, but it's just 1 slide with just a couple of bullet points. And so, he says it is because Dr. Jim needs no cover slide or summary slide. He is 1 of 1 on the slides. I don't know about that, but the slide itself is 1 of 1. That's for sure. The slide itself stands alone. And so, Scramble Everything says exit strategy is easy. Exit at max loss on the do nothing strategy. Yeah, I mean, there's a reason why it's the default setting, right? I mean, it kind of like the do nothing strategy. Like you don't choose the do nothing strategy. The do nothing strategy chooses you. Like if you, so if you guys want some actual wisdom today, which that's not half bad. That might actually stick around. I kind of like that. If you trade long enough, listen, guys. If you trade long enough, you're gonna get whipped around. You're going to get beaten up. You're going to find yourself in a spot where you're like, man, if I had done nothing, I would be in a great spot. Right now, hey, we've got all the adjustments. We've got the mechanics. We got the protocols. It's all there. And I'm not saying to not do those things, but I am saying to consider from time to time, maybe I shouldn't do anything right here. Maybe I should just sit tight. Maybe I'm actually in an okay spot. Maybe I just let the strategy work. Again, this is just a thought experiment, right? We're just window shopping. Nobody's signing on the dotted line. Just think about it, right? Just a little something to run through the old noggin. Maybe I don't do anything. And then when you get burned a number of times because maybe you were a little bit too aggressive with the adjustments, maybe you were a little bit too kind of overzealous with doing some things, the do nothing strategy chooses you. Like 100%. I like that, man. That's going to stick around. I like that a lot, actually. And so let's see where we at. Oh, Sam L. Doc, I love the presentation. 45 minutes on entry management, and the exit was just trust me, bro. Management masterclass. Yes, that was my sole source for the slide. Asterisk, trust me, bro, comma, 2025. Let's see. Oh, Theta Trader, but exit is just the slide that goes straight into the bathtub of filth where you sit. Now you're sitting and stewing, warmed by the glow of a burning stack of cash. See, that is such a nice mixture of all of the illustrations that we've conjured up over several years now on From Theory to Practice. The bathtub of filth, the burning stacks of cash. You know, some people burn logs, some people burn coal. What do we have? We've got cash. We've got cold hard cash, I should say, that you worked very hard for, but now its job is to keep you warm. And that's just the way that it goes. And the Theta Trader says the silver lining is the bathtub has a fiber internet connection. Yeah, that's correct. And that's pretty good. That's pretty good. But I gotta go, man. It's over. Man, that educational piece, that really eats into the time, doesn't it? Ooh, man, that's something. I can't believe it. But I gotta run. I gotta go. I gotta get you guys to Tim. I appreciate you guys, man. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys on Monday.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
New from tastytrade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new tastytrade account. The Money Match event starts now, exclusive to new tastytrade customers.
Hello, everybody. Well, today concludes last full trading day of the year, last full trading week of the year, excuse me. We've got Christmas week next week and then New Year's the week after, and we'll actually be into 2026 by then. I think I'm going to be here every day we're broadcasting. There's some days that Tasty will be dark, Christmas obviously, and the day after, and New Year's Day, and so forth. But I think I'm scheduled to be here irrespective of proximity to holidays. So a few days left for 2025. It's a pretty green day today. We've got the biggest options expiration ever today going on. And so a lot of mayhem going on under the surface, and a generally green day, particularly with the incur, which is up again hundreds of points. The weakest among them is the YM, which is only up about 1/3 of a percent. And for myself, I've just been doing my usual tidy up here, tidy up there. The biggest success today has been Rivian. which I took profits on today. And I got a nice email from one of you who made a lot with Rivian and wanted to know what dog charity to send some of those profits to. So that's sweet. They know the way to my heart. So that's money well spent, I would say. So let's jump in and see what's cooking out there as we close out the week. And we begin with a spider here. And with all the strength going on, we have still stayed below this not terribly important line, but it's the best we've got going right now in terms of resistance, because we had been consolidating here for a couple of weeks and slipped down hard on Tuesday, I guess, and have been banging around there ever since. The low for the week was back on Wednesday, and we've undone that completely, all of Wednesday's losses. So here we sit, like so, and OPEX, I'm sure, has a lot to do with this. What obviously I'd like to see as we begin our partial week next week is to move away lower from that resistance line, because we've really been challenging it just day after day. You can see not a single day has gone by when they haven't made a lunge toward that line, but it's been repelled successfully each time. The cubes, as I say, is the outsized strong man here. It had been exceptionally weak in some days prior here. You can see, I guess this was Friday, Monday, Wednesday, a lot of big down days. So bouncing some here. Some items like CoreWeave, for example, having big bounces today. So a lot of strength in tech, but on the whole, we're in a kind of a gentle downtrend here. And more broadly speaking, lifetime high is intact. The gap is intact. It's the attempt last week to close that failed. And we will see in the handful of days ahead, with no meaningful earnings, no meaningful economic data, where the sort of equilibrium lifts us or dips us. The small cap, so IWM, not particularly strong. And I've actually been acquiring March $250 strike puts on this. The past 4 days have been just a snooze fest. The small caps, look at this, there's nothing, just hanging out here. The resistance line I've got on this is just anchored to this bar, and not exactly scintillating stuff, but a very modest rise in that. But as I said, the one long I was really focused on and did get out of today, although long term I think it's going to be terrific, is Rivian. RIVN. This is the electric truck maker. And let me just show you why. A couple of things. First, let's back way away. For a while here, for 2021, 2022, 2020, it was just terrible. They came public, and they, in the midst of the COVID mega rally, Tesla's multi-100% gains, EV excitement, the Green New Deal, it was just kind of the perfect storm for a well-funded EV company to splash onto the scene, and essentially came out and very shortly thereafter started a really horrific dive in price. And that seems to have bottomed out last year. And this has become a single-digit stock. It went from a triple-digit stock to a single-digit stock. And then over the course of many, many months began the process of trying to hammer out some kind of base. Some stocks didn't succeed, like Lucid, for example. They never made it. And most EV stocks went bankrupt. Rivian, on the other hand, seemed to have made its bottom here. And since then, with this ultimate low, higher low, higher low, higher low, higher low, higher low, higher low, all the way up. So the healing you can see in the context of the fact that even when selling took place, it didn't even get to where it had been the past time. And in addition to that, this series of bases within the base formed, kind of a super base here, a rounded bottom, which finally sort of launched this week. And so in a very short amount of time, we've gone from just last week, we were down around 15 or so. And the reason I decided it was time to scoot out is because of this gap right here, like so. The gap itself was just above 23. We didn't quite get there today, but this stock tends to have a history of spiking and falling. And I didn't want to stick around to see what was next because the profits were really good and it was close enough to that gap that I thought it was fine. But long term, like measured in months instead of days, I think it should do just fine. So that's Rivian. So thank you, RIVN. Over in precious land, the strength continues, especially in certain metals. Gold, GLD, the front month is up about $10. GLD is getting close to a lifetime high. It's not going to happen today, most likely. Could very well happen on Monday or sometime next week. It wants to. You can just kind of tell it's itching to get above that, but it just hasn't quite done the deed yet, but it's looking pretty good. The miners for gold are not hesitating as much. They're up 2.76%, and they've completed their nice little base there. And obviously, if gold finally slips to a new high, the miners should just blast right along. And in turn, obviously, dust, the leveraged bearish instrument against gold miners, is probably going to close at a lifetime low. It's not that big of an achievement. Any leveraged fund tends to degrade almost irrespective of what the underlying's doing. And they have to reverse split these things constantly. But yeah, dust has gone from, you go farther back in time, it's like $20,000 instrument, and now it's, a few dollars. It's just the nature of the beast. But dust, as you can see here, has been sort of scalloping its way lower as miners have been getting stronger and stronger. XME, which is also miners, but not specific to gold, but a superset of that, is having a good day, 3.37%. Coming off this base here, its own lifetime high is a bit more of a challenge than gold's, but it could happen. This is some really impressive strength. Silver, SLV, is having another great day, just to add to a great month and a great year for silver. And so this is up almost 3%. And I think for SLV, I'm not sure if this is, for silver itself, this is probably, I've got so many charts in my head I lose track, but probably another lifetime high across the board. But SLV, after kind of a struggling in the autumn of 2024 to kind of finish off its base and get going, it's had a fairly uninterrupted lift. The most recent selling we've had, the only selling we've seen in months and months, was just for a couple of weeks here in the second half of October. But on the whole, it's just fantastic. And the miners for silver, it's not traded nearly as much as GDX, but there's SIL, which is the silver miners, is having a good day, up almost 4%, and probably a lifetime high close on that, almost certainly, in fact. Brief little consolidation there, but didn't take long for it to finish that work and then leap higher. Our old friend Palladium actually managed to be down a little bit at the open today, but that's gone. We've got a bullish engulfing pattern on PALL right now, and it's just cooking along after it finished the space here. And we talked about this when we were still in the midst of the space. Once that energy was released, it was off to the races. Just a brief pause yesterday with this red bar. It was still an up day. It just closed a little weaker than it opened, that's all. But it's been net positive every single day this week. The scary thing is that you never know when the music's going to stop, because the same thing could have been said right here, and it had a much larger base, went blasting higher, and then out of the blue, bloop, there it goes. I'm not concerned about this longer term. In fact, if anything, we could get some really good selling going, and getting this down to say 140 or so would be a terrific new place to enter. So still looking really good. I just think it's getting a little stretched at this point. But you could have said the same thing about silver at almost any point this year, and it just keeps going. I don't trade platinum, but this is also having a great day. PPLT, platinum and palladium tend to trade together for good or bad, and so PPLT is having a great day and has had, as with palladium, net gain every single day this week. So just looking longer term, sorry to obsess so much over metals, but it's like a really big deal lately. Just the futures, here's GC itself, up 12.40, about 0.25%. And it kind of teased a lifetime high yesterday. Intraday just barely made a lifetime high, but didn't really succeed. But we're getting quite close to it. Gold could really end 2025 with a flourish. It's been just absolutely dynamite for years at this point, hundreds of percent just over the past couple of years. And as the debasement trade continues. And then finally, on the metals, here is the SI silver, and we're up 3.55% on the futures. And it too has been just doing dynamite. Its last real stumble was back around Liberation Day, just a couple of days of selling there. But after that was done, it has more than doubled since that time. So silver, one of the great trades of the entire year. Just, it's not a great day for shorts, but there's a few interesting charts out there just to share. One is Costco, which is managing to be down a little bit today. We've talked about this very large distribution top, so that seems to be breaking down nicely. VST is down a bit more than a percentage point today. We've got a bearish engulfing pattern on that, and it's kind of sloppily breaking down from its own big distribution top there. And here's an ETF that is the consumer discretionary XLP, consumer staples, XLP, down about 0.25%. And it has been in its own kind of private bear market recently with a series of lower lows and lower highs. So this is one of the few ETFs I've actually got a short position on. A new one, which I'd actually never really bothered with until today, is Bloom Energy, small BE. And this is a very pretty head and shoulders top. You can see right there, breaking down on Wednesday, pushing back to the neckline today. And I've gotten into this one as well, but you can see what a cute little pattern that is with a very clean stop loss, a pretty obvious neckline on BE. Let's just wrap it with some interest items here. The 7 to 10 year bond fund ETF is looking like it's starting to break down. If we can get below this rather large range, if we can cut below, let's call it 86, I think that would set the stage for some lower prices on this. But I'm particularly focused on corporate bonds and longer term bonds. So LQD, this is the corporate bonds. This is its own even sloppier top, and it looks like we're starting to break down nicely on that one. But the main thing I'm interested in is TLT, which is the 20 plus year treasury bond ETF. We've got a quite well formed top on this one. I would say that a reasonable neckline on this would be something like so, something like this zone right here, defining the neckline. So we're breaking out of that. I've got June puts on TLT. And as I made mentioned, as rates heat up, it's going to be a detriment to home builders, and that's coming true with even on a day like this. XHB is down 1.41%, kind of feeling the heat from those rates. And just to wrap things up more broadly, there's ZB, the futures themselves, same pattern obviously, and the same prognosis. Okay, that is it. I hope you've had a good week. And I will see you here for Christmas week, Monday. Bye-bye.
When the market moves, traders need to move faster. tastytrade Active Trader tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Ilya, we are back. We're here to wind down the day, wind down the week. This is the last call. I'm your host, Chris Vecchio. He's Ilya Spivak. We're here to take you through the last 30 minutes of this trading session, final 30 minutes of the day and the week. Maybe the last bit of a trading activity that will find excitement this year because this is the last full week of the year. Next week's Christmas. The week after is New Year's. Ilya, people have not moved at all since about 10 a.m. Eastern today. My goodness, this market has been asleep for most of the session following that initial burst of activity with the cash equity open. We can go right to the charts. S&P 500 at 10 a.m. was 68.87.5. It's currently 68.87 right now. Much ado about nothing, up by about 0.8%. The NASDAQ's up by 1.24%, 25,570. Your Dow Jones up about 0.3%, 48.42. And then the Russell's up by about 0.73% right now, 25.47. In the land of crypto, there's a little bit more enthusiasm over the course of today with Bitcoin up nearly 4% and Ethereum up nearly 7.3 and quarters percent there, Ilya. Nice little day coming together for the crypto space. Currencies, dollar meandering a little bit stronger of an Aussie, a flat British pound, a slightly weaker Canadian dollar and euro. But the attention goes, of course, to the Japanese yen, which is plummeting following the BOJ's rate hike last night, which you and I had a lengthy discussion about on Futures Power Hour today. We'll talk about our yen intervention lotto ticket later on in the show. We make our way through the energy sector where oil prices are up, as are natural gas prices, crude oil prices, Brent oil prices, gas futures, pick your poison. They're all trading higher today. Of course, we do have the looming specter of a potential war with Venezuela. Maybe that makes some headlines over the weekend. We keep moving around the horn where gold prices tried breaking out again. Take two doesn't really work out that well. Slouching a bit into the close, only up by 0.2%. Silver, not the case, up by 3.5% still. Meanwhile, our friend copper is up 1%, although fading into the session. And then bonds here, they are weaker on the day. Those have not moved up at all as we take a look at our calendar. Next week, a few auctions, but really all short into the curve stuff, so not too much to write home about. Ilya, top performers today. NVIDIA back near the top of the leaderboard, up 3.6% right now. You have your Oracle up 7.76%, undoing some of the damage seen in recent sessions back to 194. after bottoming right above 177 earlier this week. Palantir, likewise near the top of the leaderboard, 4.5% gain now as we go into this close. So it's your semiconductors, Ilya, that those are the top performers. Those are the ones that are leading this bounce back here on this Friday, up 3%. I've said a lot. Your turn. What do you make of a market that hasn't moved in effectively 6 hours?
I mean, we talked about this on the last time that we spoke about it just a few hours ago on Futures Power Hour, and very little has changed since. It seems like the markets have resolved into a sort of holding pattern. And wherever you look, any kind of benchmarking instrument. Now, obviously, we just looked at a few individual names. Some of them have moved, some of them don't. But if you look at any kind of benchmarking asset, S&P, NASDAQ, Russell, you name it, all of it is kind of at a decision or an inflection point without a clear sort of sign of intent. And maybe the S&P is the best kind of catch-all. We're basically sitting in the relative middle of the recent range. So call it the low from this week around NFP and the high last week in the immediate wake of the Fed. Where are we relative to those levels? We're basically at the 50% mark.
50%
and so
like 68, 80 on the nose.
Yeah. I mean, we're essentially right there. And so the question then is, okay, fine. If that's where we're at, is there any conviction to any of this, or are we just basically resetting ahead of the holiday? And that seems to be sort of the order of the day here. It seems like we're essentially just setting up for the holiday to kind of rejigger expectations. And that's likely something that makes sense. I mean, we don't have a clear upside breakout. I think that's probably the most interesting thing. We have a 4-day sell-off and then a 2-day rebound. And where do we end up? We end up basically at the close of the post-Fed candle. That big sell-off the day after the Fed last Friday, if we look at the March ES contract, the close on that is 68.90. The quote right now, as we head into the close, 68.87, 68.88, something like
right
that.
around there.
So where are we here? Nowhere. We've basically arrived at the place where we ended last week. And it takes me back to the same sort of conversation that we've been having for 2 weeks now, if not longer. Let's say 2 weeks, because we won't rehash all the way back to October. Obviously, we've had an inflection point here, but every major high in this story since October has been something Fed related, starting with the October 29th Fed meeting. This most recent high was last week's Fed meeting. The markets took about 2 days to think about what they thought. And then last Friday, they resolved. And the resolution was, we don't like this. The Fed didn't give us enough. They're not putting enough rate cuts on the board. AI, this, that. Geopolitics, this, that. Whatever. We want our rate cuts because there is a flurry of things out there. And if we have to worry about them, we will. But if you give us the rate cuts, then we don't have to worry about them because then capital is cheap. And if we make a mistake, you can always just borrow and go again. So as long as credit is ample, as long as liquidity conditions are friendly, we can stomach the risks as ever. But if the Fed is not going to be as accommodative as the markets want it to be, that's when people get worried. Because then the risks start to matter. We've been talking about this not so much as, oh no, the Fed won't cut because they must cut immediately because there's an emergency and they're asleep at the wheel. No. It's more like the market is asking the Fed for an immunity booster. And the Fed is not giving it up, essentially. Because if you look at what the forecast is for next year, the markets are at minimum double that and flirting with maybe 3 cuts instead of 2. And the Fed's only committing to 1. And if you listen to Powell's conversation, that commitment is a very loose commitment.
It feels like the big development of the week is taking all that into consideration as that traders heading into this holiday now. And granted, it feels like yesterday may have been the last trading day of the week officially. I say that tongue in cheek because we only have 1 million contracts traded today in ES. There's been basically no volume that's coming. It's really thin already. Frank pointing out earlier that as we just crossed 1 million, that we're barely at 1 million, less than 3.5 million on SPX options, 3.3 million on Tesla, 4.5 million on the Qs, which was 11 million yesterday. Only 8 million SPY is usually closer to 10. Yeah, it's still a little early, but unless there's a huge rush of rolls in the close, it's Friday, so it's probably all done. And a lot of the rolls were done on yesterday's big volume. So we're kind of slouching here with respect to volatility. And I keep going back to that, this being kind of Tasty's North Star, but also hours for understanding what type of regime we're in. VIX is getting pretty darn close to 15. I think it's $15.10 when I last checked, 15.12 right now. It's going to be the second lowest close that we've seen in the VIX going back to middle of September, Ilya. For the VXF contract, the January expiry, and then the G expiry here, both are closing at cycle lows. Maybe it's complacent, but it kind of does set up this interesting environment where now that the market's kind of regained its footing a little bit, you have low volumes, you have low vol. Absent any catalysts, this thing maybe has a chance to melt up. And then, of course, we get into the Santa Claus rally window. So who's to say that it can't? But
certainly could.
Vol not being up here, right? Isn't that kind of an interesting occurrence after everything is said and done with the market that's pricing in a 22% chance of a January cut, lower than where we started the week? That seems...
I don't think it matters whatsoever or says anything whatsoever. Because just look at these candles here prior to the past 2 days. Did the market have any trouble selling off in that window? No. Did vol go anywhere? No. So,
well, wasn't that one of the reasons
even just
in our discussions but even in our discussions, wasn't that one of the reasons where it's like, yeah, the market's down, but vol didn't go. So do you really trust the downside move?
And yet the market has been selling off since the Fed meeting, and vol has been going down before that, during it, and after.
Ilya, before we get into more of a conversation here, I do want to remind everyone that it is our 12 days of trading, and we talk about trader workflows and work processes in today's day 10 email installment. Go to tastytrade.com/12 days to sign up for this email reminder. It's running from December 8th, so it's begun, up through December 23rd. You're going to get information, easy reads, good reminders as we head into 2026. Again, that's tastytrade.com/12 days. It wasn't a typical Tasty trade that I put on today, Ilya, here going into the close with Nick. He seems to have an affinity for the 6850 level in the S&P 500. He seems to think it's a very important level. And to his credit, it feels like we've been attached to the hip for the past few days about it. I guess I'm kind of short of put there because if we do close at 6850, I have to shave my head live on air. So I do need a haircut for Christmas. Hopefully that's not how it's resolved. Nick,
so it's got to close exactly at 68.50.
Oh, I'm gonna lawyer the hell out of that.
Okay, so it's got to close at 68.50 when? By the end of the year?
Today. Oh no, today.
Oh, today. It has to close at 68.50 on the dot today.
Yeah, he's gonna say if it's like 68.50 and a half, I gotta shave my head. I'm gonna lawyer the hell out of that. That is not 68.50.
You got to get your legal team together.
But we talk about different ways to approach this market and the volatility regimes being such an identifying factor. Some of the research that we've done here is when the VIX, for example, is sitting at 15 or below, is it worth even selling vol versus just simply buying and holding the market? And sure enough, the average return, average daily return, also the standard deviation of daily returns for a simple long ES position is greater than what you would find in, say, a short straddle, short strangle, short iron condor, right? And you're getting kind of there where it doesn't make sense to look up, to try to pick up those pennies in front of the steamroller. And it's kind of just being long the market and riding momentum until something occurs that presents a greater trading opportunity. So I see a lot of, and you and I went over this in Futures Power Hour, but maybe it's my confirmation bias eyes deceiving me. I see a lot of potential turns having come together today, with the NASDAQ, with the S&P, with the Russell, all kind of breaking their recent downtrends, trying to find a little bit of, as you mentioned, resetting the charts now and resloping potentially some of these recent moves.
Yeah, I mean, it seems like, and sort of to go back to our volatility conversation and the positioning in the price action, that volatility crunch does not seem to be a directionally insightful one because, again, the markets have made directional moves. And those directional moves were not in the direction that the volatility was going. Markets were going down, not up, since basically the middle of last week. And in fact, if we sort of take a look at the way that markets have generally behaved so far this month, markets are down on the month. They're not down a lot, but they are down. And clearly that volatility crunch hasn't stopped that. In fact, they've been down for 2 consecutive months. This would be the second consecutive month of losses, which would, again, very modest losses. S&P was down about 0.25% ultimately in November and looks to be on course to be down about 0.5% when all said and done in December. But what that vol crush seems to suggest is what we're seeing now in liquidity. People are starting to back up into the year end. It would make sense that in December you'd have a vol crush just because people are saying, you know what moves are we going to have here now? We're running down the clock. And so you look at the price action and it kind of takes you there. The last decisive thing you had was the Fed. This week was an opportunity to do something with that narrative. We got the answer of what to do with that narrative. It was a follow through on Friday. Markets ultimately didn't like what they heard, not in NFP numbers, not in CPI numbers. And we ultimately end up resetting back to where the Fed left us. I would argue, and this, in my mind, jives with the vol crush. Because it's the end of the year and nobody is going to make or break their portfolio on the 19th of December. So it looks like we're just going to get into the end of the year at a kind of new neutral for sentiment. But the stage seems set not so much for a rally as it is set for a continuation, because the last conclusive thing that we heard was the markets don't like what the Fed is giving them.
Ilya, you mentioned people going home for the holidays. They're going home to, see family, see friends. Hey, if any of the listeners are going home to see friends or family, did you know that when a referred customer opens a new account and funds it with a $2,000 initial deposit, and using a friend's referral code, both the refer and the referral will get a $100 bonus. tastytrade.com/referral, tastytrade.com/referral. And you know what? While we're here, Paul, can we throw up Money Match? Because while we're talking about funding or opening new accounts, Tasty Trade will also match 1% of new deposits up to $2,000 and give 30 days of commission-free trading, equities, options, index options, futures options. Who's eligible? New U.S. customers. How do you join? Sign up and use promo code MONEYMATCH or learn more at tastytrade.com/moneymatch. Paul, that's how you do 2 and 1 right there. Pretty good. 37 points away from my strike on the haircut, Ilya. So we're not worried about that so much here as we go into the final 9 minutes of this trading day. There are some standout performers, though, when we take a look at our high options volume watch list here. A few names have, well, they've gotten kind of crazy. CoreWeave, one of them, up 24% in today's show. 19 IBR, not really much of anything there. Looking around at Rivian, pops up as well, gaining 10% in today's session. Just looking around the board, Donald Trump's stock, DJT, they merged with a fusion company. That share price has been surging here in recent sessions, was just over 10.50 a few days ago, now up to about
ostensibly because it's no longer just a media company. Now apparently it's something else again.
Limitless energy to power the AI revolution. Wonderful. And hey,
limitless
Ilya,
energy to power midnight tweets in half caps forevermore.
If one of our long-standing principles, when one of the people with their hands on the economic levers of the economy tells you to do something, it's one of those shut up and do it moments. Donald Trump did that on April 12th this year. Looks like it's a good time to buy stocks. And then, of course, the market rallied 12%. Obama did that March 6, 2009. Trump's also done this a few other times. But so again, if Trump's putting his money in the energy game for fusion, do we think companies in that sector are going to get support moving forward?
Yeah, 3
given
years
our state
of,
capitalism,
permitting conversations, everyone. That's a lot of years.
Well, you know, we're going to get around California CEQA and all the Coastal Commission, Review Commission, all the bad players. Microsoft, Meta, Oracle, NVIDIA, these are one side of the flywheel, of course. They haven't had a fantastic week. They're closing out today stronger. Of course, NVIDIA looks like it's going to try to make a break of its downtrend, although with the next 2 weeks in play, not exactly the time to do it. What's your favorite theme going into next year? Market here kind of meandering into the close. Just a quick check. S&P 68.89, further away from 68.50. So what's your favorite theme going into next year to trade around?
I mean, I think the cost of money continues to be the most important theme and has been the most important theme for the past 2-3 years. And I think we're sort of on a roller coaster here coming out of COVID. We came out of COVID. We saw that it put on steroids a reflationary dynamic that had been building since 2017. And that was a structural, huge dynamic centered on both deglobalization and a changing of the guard for the entire labor market globally. Because baby boomers, the largest generation, are finally aging out of that labor market in sort of tectonic numbers. And COVID put that process on steroids. And so when we came out of COVID, all of a sudden there was an inflation problem. There was a deglobalization problem that was very much on display, especially if you're China. And we continue to see the consequences of that play out. We continue to see this thing accelerate, and AI has only complicated matters, because if you thought that the biggest issue for inflation was we're going to have fewer workers and less conviction on what the global rule book reads like, things are going to be more expensive. They're going to be more expensive to ship. They're going to be more expensive to insure. They're going to be more expensive to make. All of that is inflationary. And then you have AI that says, actually, we're going to have a productivity breakthrough that's going to cost crush everything. And we don't know which thing it is still. It'll be
those
a
kind of
very
trends?
interesting year next year.
But doesn't that leave us in an interesting spot where, sure, the deglobalization and the tariffs push up inflation, but the productivity boom that brings about a deflationary wave, which is really the story of America.
Maybe crushes consumption on some level through job destruction.
That's the story of the last 30 or 40 years, though, that like absent these geopolitical events and policy changes, the economy has been more or less on a deflationary trajectory because of technological progress. And
Sort
next
of.
year, maybe that picks up.
Yes. So this is really the main question is we were sitting on 40 years of disinflation and interest rates going ever lower because we seem to have figured some stuff out. And then we have the backlash against globalization coupled with the demographic change. And all of a sudden it looked like we're going back to the bad old times. The times before the late 70s, early 80s, when it seemed like central banks got independent, got their hands around inflation. At the same time, you had the end of the Cold War, a consensus on globalization, all of that incredible for productivity, for income gains, for global income distribution. It has been an unalloyed success all around. But there is no such thing as a free lunch, as any first page of any economic textbook will teach you. And we collectively did not do a good job of managing the costs of all of these benefits, and now the backlash is here. As is often happens, every era breeds a solution to the problem of the last era, and in the process creates the problem for the next era. So the 80s kind of solved the inflationary crisis of the 70s, give or take, which had been building since the end of the Second World War. And now we have a different crisis that comes as a consequence of having solved those issues in the 80s. Things like income inequality. Things like the demographic implications of having made so much of the world rich and therefore less fertile. So we're in a place here that's a very important inflection point. And AI spices up the festivities in a very interesting way. Because the assumption, I think, generally was that with this shift in the global infrastructure, with this in terms of trade policy, in terms of trade relations, and in terms of geopolitical relations, and this move toward more chaos, less coordination, more war, you then you add demographic change to that, you start ending up with risk and inflation and all these things. But if you leverage AI productively and if it works fast enough, maybe you head all of that off with incredible productivity gains, and maybe you do the allocation better than you did with globalization.
Oh, no, that's not happening.
There's so many ifs there.
Yeah, that's not happening. We're not going to reallocate
exactly.
it better.
So next year is going to be
globalization worked out great.
Feisty.
Governments mismanaged the allocation horribly, and the distribution
horribly.
Redistributive effects horribly. Ilya, we got less than a minute.
What a wonderful thing sent completely down the drain, at least from a PR perspective.
Amazon, Mag 7 names here, little firm into the close. Amazon up by 0.25%, Apple up 0.5%. Your NVIDIA is closing out the day with nearly a 4% gain on the books. We want to talk about Mag 10. We'll talk about a Broadcom up nearly 3.2%, a Palantir closing out the day with a 4.14% gain, an AMD up 6.12%. That's rounding out to a NASDAQ that posts the largest gain of the session, 1.26% higher, S&P higher by 0.8%. Staying firm into the close, and Nick's 6850 strike is not hit. This hair stays on the head, Ilya. That's the good news.
Do we count the post-market reconciliation period?
No, the market's closed. As far as I'm concerned, market's closed.
Have you ever shaved your head before?
No, I've done the full shoulder length hair thing, grown it all the way out.
I grew it all the way out, and then I shaved it all off just to see if my head is round in case I ever need it. In case there's anything misshapen under there or anything. So one time I had to do it.
That's one way to end last call. Good news, you can hear more about Ilya's head shape and various phrenologies on Sunday's first call. Ilya and I will be back, I believe, with Nick Sunday, yes.
Yes.
5:55 Eastern, 4:55 Central Time. We'll be kicking off what would be a limited trading week, of course, because it is Christmas. So holidays are around the corner. If you're going on vacation, hope you have a good vacation. Hope you have an enjoyable year. Thanks for joining us this year on Tasty Live. For those that are sticking around, that we'll see you Sunday. Hope you have a nice weekend. Good luck trading.
Stay safe, everybody.